Hi, I'm Michael Serrano, Managing Director at RedChip Companies. Thank you for being with us today. I want to first give you a brief history of RedChip. We were founded in 1992 as a small-cap research firm, putting coverage on companies like Daktronics, Winnebago, Starbucks, and even Apple in the early 1990s. Over the years, we evolved into a full-service investor relations and media firm. We've represented companies like U.S. Steel, Perfumania, Celsius, Apollo Medical, and many other companies that ultimately became blue-chip companies. We have a very long and rich history. Today, we offer the most advanced and robust platform for small-cap companies, reaching both institutional and retail investors on a global scale. Our TV show, called Small Stocks, Big Money, titled after Dave Gentry's book, airs on the Bloomberg Network every Saturday at 7 p.m. Eastern and also on CNBC every Sunday at 11 a.m. Eastern. We have a webinar platform in which we'll put hundreds, sometimes thousands of investors on a Zoom with our clients to present their story. We do roadshows in up to 8 U.S. cities, and we have a very prolific digital media, social media platform with over 125,000 followers. And we have a national media platform in which we write, produce, and air TV ads on financial stations nationwide. You can learn more about RedChip and our platform at redchip.com. Next, we'll take a high-level overview of the market and the industry landscape behind today's conference.
Hello, everyone. I'm Barrett Boone, Vice President of Global Markets at RedChip Companies. The global drone market was valued at approximately $84 billion in 2025. It is projected to nearly double by the early 2030s. Commercial drone investment alone hit a record $3.86 billion last year, with 77% of that capital flowing into dual-use platforms, systems built for both commercial and defense applications. The eVTOL market is forecast to grow at a compound annual growth rate exceeding 50% through the end of the decade. And Morgan Stanley projects the total addressable market for urban air mobility at least $1.5 trillion by 2040 as its base case. Now, those are big numbers, but what makes this moment different from 2 or 3 years ago is not the projections. It's actually the execution. The certifications are advancing, the defense contracts are real, the commercial revenue is scaling, and the companies you are going to hear from today are operating at every layer of that ecosystem. So let me take you through it. Drones are no longer an emerging technology. They're a sophisticated, established, revenue-generating industrial category, and the growth curve is steepening. It's not flattening. Now, two forces are driving this simultaneously. The first is defense. The lessons of Ukraine fundamentally rewrote the modern military playbook. Small, autonomous, expendable drone systems are now a strategic priority for NATO and the U.S. Department of Defense, or now the U.S. Department of War. And critically, there is a bipartisan push to reshore American drone manufacturing, well, back home, which brings me to Unusual Machines. Unusual Machines is a vertically integrated, American-made drone company. They recently raised $150 million in equity financing, won a U.S. Army contract to supply 3,500 NDAA-compliant drone motors, and are acquiring an American battery manufacturer to bring even more of the supply chain onshore, back home. When the government says it wants to domestically produce these drone components, Unusual Machines is there. It's building exactly that. Now, the second force is commercial autonomy. The ability for drones to operate independently in environments where GPS does not exist. That is the domain of Exyn Technologies. Exyn builds autonomous aerial robots that fly, map, and return from underground mines, configured structures, and industrial facilities, entirely without GPS, Wi-Fi, or human intervention. Their Nexus platform produces survey-grade 3D point clouds in real time. Their CEO, Brandon Torres DeClet, he says that physical AI, not chatbots, not generative models, but robots that navigate the physical world autonomously, that is the distinction that matters, and you will hear more about it directly from their team today. And then there is Dynamic Aerospace Systems, which is developing drone and aerospace platforms targeting both commercial and defense applications. Yet another company that is building at the intersection of autonomous systems and national security demand. Now, let's shift gears. The eVTOL industry has gone through a brutal shakeout. There are at least 6 manufacturers that have ceased operations or entered insolvency since 2023, including names like Lilium and Volocopter. What remains is a smaller, stronger group of companies with real technology, real certification progress, and real partners. Vertical Aerospace is one of the leaders in that group. The UK-based company is developing a 4-passenger zero-emission eVTOL aircraft with backing from American Airlines and partnerships with Rolls-Royce and Honeywell. They are one of the handful of companies globally with an active eVTOL certification program. Now, let's talk about New Horizon Aircraft, which is taking a different approach. Their Cavorite X7 is the world's first hybrid eVTOL. It takes off vertically, transitions for conventional fixed-wing flight, and has an onboard generator for self-charging. That hybrid architecture pretty much reduces the range limitation that constrains pure-play electric designs, making it applicable to regional transport, medical evacuation, and military logistics. And Doroni Aerospace is going after a market that no one else is: personal eVTOL. Their H1X is a 2-seat electric aircraft designed to fit in a standard garage, take off from a driveway, and be flown with a single joystick. They're pursuing certification under the FAA's Mosaic rule as a light sport aircraft. Now that sounds like science fiction, but the founder, Doron, piloted the prototype himself in 2023. You will hear directly from him today. Every platform needs an ecosystem. Drones need optics, aircraft need fuel. The vertical economy needs satellite infrastructure and private aviation networks to bridge the gap between where we are today and where this industry is going. That infrastructure layer is just as investable as the platforms themselves. Now, Syntec Optics builds precision optical components and advanced photonic systems for defense and aerospace applications. When a drone or a missile needs to see, target, or guide, the optics enabling that capability are exactly what Syntec manufactures. These are the components inside the systems you read about in defense headlines. Helio Corporation operates in the satellite and space infrastructure segment, a parallel build-out that supports everything from communications redundancy to Earth observation and positioning data for autonomous systems. And Fly Exclusive is one of the 5 largest private jet operators in North America, with a fleet of more than 90 aircraft. They represent the existing private aviation economy, the market that eVTOL and next-generation aircraft will eventually expand and, in some cases, disrupt. As you evaluate these companies, I would encourage you to think about these 3 questions. First, is the company solving a real problem with differentiated technology? Second, does it have a credible path to revenue, whether that be through defense contracts, commercial operations, or certification milestones? And third, where does it sit in the vertical economy value chain? And what happens to its business as that value chain scales? The last time the FAA created an entirely new aircraft certification category was for rotorcraft in the 1940s. They have now done it again with powered lift standards for eVTOL. When regulators build a new framework from scratch, it is because the industry is evolving. The vertical economy is not a concept. It is being certified, funded, and built right now. And the companies building it are presenting here today. On behalf of the entire team at RedChip, I want to thank all of the companies presenting and all of you for joining us. The RedChip Vertical Economy Investor Conference, the race to dominate the skies, will begin shortly. Thank you.
A new era of small cap research has arrived with RedChip's RedChat, the fastest, most accurate AI assistant for small caps. The days of spending hours sifting through press releases, 10Ks, 10Qs, 8Ks, 13Fs, 13Gs, and other filings is over. Now, get answers in seconds on 4,000 small cap stocks in one portal. Simple, fast, accurate, detailed answers. Meet small caps with RedChat.
Thanks, Barrett and Michael. Our next speaker today is Greg Pendy. He is Director of Equity Research at Clear Street. Greg, welcome. Go right ahead.
Well, thanks for having me. For us at Clear Street, we cover disruptive technology, and we see space as one of the most compelling disruptive areas over the next 3 to 5 years. And that's what really has drawn our attention to that sector. When we think of space from the top down, we want investors to really think not so much what's going on out there, but what's going on out there and how it's going to change life here on Earth. So when we look at the space sector and the real key changes, first, we're seeing the launch costs in this industry come way down. And that's due to the fact that SpaceX, as well as many others, are using and exploring reusable rockets. That's been a game changer for the industry. So the cost to get to space, we believe, is coming down and can position to come down further with new companies like Rocket Labs, hopefully their Neutron rocket in the fourth quarter of this year. We're hoping that New Glenn Blue Origin gets back; it's grounded now, and then also continuation of SpaceX with the Falcon 9, and exploring a further reusability down the road. So just in general, the cost to get to space is coming down. That's been game changing for this industry. But what's happening with individual companies? And we think the most exciting play in the space industry to look into is low Earth orbit. So these are the satellites that really are about 400 miles above the Earth, and they go about 17.5 thousand miles per hour, if you could believe that, as they fall down towards the Earth and the Earth rotates. So they do rotate around the Earth. And what we're seeing there is three pillars that can really change life here on Earth. So we're seeing companies in Earth observation. These are basically satellites 400 miles above the Earth that have a camera inside. Then we're also seeing it with satellites doing communications, as well as companies using RF technology. So just to look at that and look at how life is changing here on Earth due to what's going on in space. So you have companies that are getting into low Earth orbit with camera technology like a Planet Labs or a Black Sky. And what's so unique about those companies and so disruptive that's really changing right now is, one, they can get to space cheaper and follow Moore's law because their launch costs are coming down. So they can replace their satellites more frequently every 2 years with better camera resolution technology. Two, companies like Planet Labs are mapping the entire Earth. That's about 15 terabytes of data a day. It used to be too much data, too useless. Now it can be paired with AI. It's a huge game-changing trend for instant actionable insights. So what are some things that we're seeing out of a company like Planet Labs? Well, for one, by mapping the entire Earth, they are actually able to track areas like rainforest deforestation. You have the defense and intelligence industry able to look into mapping anything that's going on Earth. One example is if you go way back to the Chinese spy balloon, no one was even looking. It was low Earth orbit technology from companies like Planet Labs that were able to identify it in Alaska and then trace it back all the way 6 months to find where it originally launched in China. So the entire Earth now is being sort of monitored with low Earth orbit technology. Now we move on to the next area I mentioned, which is communications. And the changes that we're about to see in communications are really mind-boggling due to low Earth orbit satellites pretty much bridging the connectivity gap. So for the past 20 years, we've been all married to our cell phones. We've had them in our pocket 24/7. But the technology and the access is still dependent on cell towers here on Earth. And in many places obviously the ocean, but also many remote places, you're going to find dead zones everywhere throughout the country. It's not economical for those cell companies to go into those areas and build up towers. However, the big change here is for global, always on connectivity, you can actually bridge that gap with cell towers, with low Earth orbit satellites. So that suddenly gives 24/7 all area connectivity to a market right now. The cell phone market is roughly 6 billion users. So it's a huge TAM, and it's a huge disruption to the fact that for 20 years we've just depended on being within reach of a cell tower. So all in, it's important to realize that low Earth orbit technology in space is a huge game-changing trend. It's something that's pairing other trends like artificial intelligence as well as cellular technology, and it's going to really change life here on Earth. Then, as we move further out, we can talk about names within the lunar economy. So, one name we follow is Intuitive Machines. But if you've noticed recently, the government's actually very serious, as is Elon Musk, who mentioned it in a tweet about a few months ago, about building a permanent presence on the moon. So we're not talking about sci-fi anymore. We're talking about a real initiative to have humans begin living on the moon for extended periods of time. In order to do that, we're going to need several things. We're going to need communication systems. So again, they're looking into names like Intuitive Machines are looking to actually build out later this year. They'll be launching their first communication satellite to orbit the moon because we'll need GPS technology in order to move around the moon. We'll also be looking for companies that can build mobility devices on the moon, as well as potential look for water pockets in order to build a sustainable ecosystem. But the targets are real right now. The Trump administration recently put out an initiative for a space economy that was in December. And the key areas there were, as we mentioned, they're looking to use space for communications to hopefully bridge that opportunity that's all we've always suffered from. So there's opportunities there with names like AST, Space Mobile. We do cover Global Star, which has received, just to show the momentum in this business, an offer from Amazon for $90 per share. We also cover Iridium, which has received a offer from Rocket Labs just a few weeks ago. And just to keep in mind, those are original companies that used to 20 years ago have those big giant satellite phones that really didn't take off. But people have realized, as well as these major players like Amazon, Rocket Labs, SpaceX, which is buying the spectrum from EchoStar, they've realized just how important the communication side is going to be over the next couple of years. And then as I mentioned, as well, as we look further out, the lunar economy is becoming a very big deal. And it's something that investors should really kind of consider now, in our opinion, even though it may seem 2 to 3 or seem more sci-fi. It's really the efforts are going. I think the catalysts that we'll be thinking about will be a lot more lunar lander missions that you'll be hearing about over the next 2 years. I think there's going to be some very aggressive missions to go into certain areas on the moon that haven't really been done before. And then more importantly, that permanent presence and starting to build a base so that the United States remains the leader, which is, you think about it, we were the first ones to land on the moon in the 1960s, but now the initiative has gone commercial. It's not being driven by NASA. It's being driven by entrepreneurs and companies that really want to build out a permanent presence and keep America as a leading company in space exploration. So it's going to be really exciting what happens over the next couple of years. Our lives here will be impacted from it, whether it's in communications or Earth observation. And then more importantly, I think you're going to find that we're going to see some very exciting achievements that really outdo and go further than what I think most people are ready for or realize it is capable with the cislunar economy. So those are the key things that we're focused on and we're excited about. And we realize that there's going to be a lot of commercial companies, unlike just the dependents, that will be working with NASA, but they'll be working under what they call fixed price contracts. So there's a huge opportunity for a commercial market here that really we haven't seen. We were used to NASA kind of being the only way and it being government funded. So it's exciting.
Greg, thank you very much for that excellent presentation. Next up, we've got Scott Buck, who is the Managing Director and Senior Research Analyst at Titan Partners. Scott, are
Great.
you there?
Yes, I'm here. Good morning, everyone. I'm going to share my screen quickly here. Hopefully you guys can all see that. So good morning, everyone. Again, my name is Scott Buck. I'm the Senior Technology Research Analyst at Titan Partners Securities in New York. I want to start, well, first I'll give you a shot at the disclaimer here. But I want to start with a question that might sound a bit strange. What is the largest undeveloped asset in the United States? It's not land, it's not spectrum, it's the air above our heads, specifically the airspace between the ground and call it 5,000 feet. For a century, that airspace has been economically dormant, too low for airlines, too regulated for anything else. It's essentially been dead capital hanging over every city, every farm, and every highway in America. I believe that's ending right now. And the reason this RedChip virtual conference makes sense is because the companies best positioned to monetize that airspace are not the Boeings or the Lockheeds, they're small caps. Many of them in the market cap range this audience hunts in every day, covered by maybe one or two analysts, some even none at all. So I'm going to walk you through three catalysts that are converging this year: a regulatory unlock, a defense supercycle meets a supply chain vacuum, and a certification endgame. And then I'll close with a framework we use to separate the real businesses from the press release factories. Because in the theme this exciting, that discipline is where the money is actually made. So theme one, let's start with the single most important document in this entire sector. It's not an earnings report, it's a rule. FAA Part 108. Here's the problem it solves. Today, if you want to fly a commercial drone beyond the visual line of sight of the pilot, which is really the entire point of a drone, you need a case-by-case waiver from the FAA. One mission, one location, one approval. It's like needing an act of Congress every time a truck wants to leave the depot. That constraint, more than battery life, more than payload, and more than anything technical, is what's kept the commercial drone industry small. Part 108 replaces that waiver regime with a standardized national framework for beyond visual line of sight operations. The proposed rule came out in August of last year and drew roughly 900,000 comments, one of the most commented rules in FAA history. The White House put a shot clock on it by executive order, and the comment record was reopened briefly this past January on right-of-way questions. And the realistic expectation now is a final rule in the back half of this year, with phased implementation coming in after that. Why should equity investors care? Because Part 108 changes the unit economics of the industry. Today's model is one pilot, one aircraft, one line of sight. The Part 108 model is one operations center supervising fleets, drone delivery at scale, hundreds of miles of pipeline and power line inspected without a truck roll, drone-in-a-box systems sitting on cell towers and substations waiting to launch themselves. The historical analogy I'd offer here is airline deregulation in 1978 or the spectrum auctions of the 90s. In each case, the technology existed for years. Regulation has been the binding constraint, and when it was lifted, entire public market ecosystems formed within a decade. And here's the small cap angle. You don't have to pick the winning drone maker. Part 108 effectively mandates an equipment stack, detect and avoid sensors, resilient command and control links, traffic management software. Every one of those categories is a picks and shovels business, and most of the public companies in them are under $1 billion in market cap with almost no sell side coverage. So let's jump to the second theme here is defense and the supply shock hiding inside of it. So Ukraine rewrote the military doctrine in real time. A few $1,000 drone destroying a multi-million-dollar armored vehicle is the most asymmetric cost exchange in modern warfare. And I believe every Western defense ministry is paying attention. The Pentagon has responded with a procurement philosophy built around cheap, numerous, and expendable, bought fast and from many suppliers. That's a structural break from 50 years of buying these exquisite platforms from five prime contractors. So it is by design a small company procurement model. But here's the part of the story I think the audience may underappreciate. While defense demand was accelerating, Washington was simultaneously removing the dominant supplier from the board. DJI, the Chinese manufacturer that at its peak controlled the overwhelming majority of the commercial drone market, is now effectively shut out of the US market on national security grounds. So think about what that means. In most industries, a demand supercycle attracts a flood of low-cost foreign competition that crushes margins. Here, policy has done the opposite. It created surging demand and a protected domestic market at the same time. NDAA-compliant, American-made drone manufacturers now have a moat in both channels at once. Defense procurement requires domestic supply chains, and the commercial market just lost its price setter. The names that benefit are almost all small caps. The airframe makers, but also the component layer underneath them. Flight controllers, radios, optics, batteries, where not made in China suddenly became a pricing advantage rather than a cost problem. And don't overlook the mirror image of this trade, counter-drone. Every threat we've discussed is also someone else's threat, and counter-UAS detection and defeat is becoming its own reoccurring budget line at bases, borders, stadiums, and even airports. So the third theme, electric air taxis. I know this sector spent the SPAC era setting investor capital on fire, and so some skepticism may be deserved. However, something changed this spring that moves the eVTOL from a science project to kind of certification endgame. In late March, Joby became the first company to clear stage 4 of the FAA's 5-stage type certification process, the deepest any electric aircraft has ever gotten with US regulators. In April, it flew an electric air taxi from JFK to Manhattan Heliport in about 7 minutes. That's the first point-to-point eVTOL flight in New York City history, occurring under a White House pilot program created specifically to accelerate this industry. Meanwhile, Archer is already collecting commercial payments in Abu Dhabi. The Gulf is flying, paying passengers before we are, but the US regulatory machine is now visibly moving forward. Now, my take for a small cap audience, Joby and Archer might be the headline, but they're multi-billion-dollar companies. They're not where I think this audience's edge is. The small cap opportunity is both in what certification unlocks and what it still lacks. And so what I think it lacks is striking. As of this spring, not a single American city had issued a construction permit for a commercial vertiport. So think about that. We're months from certified aircraft and we have nowhere to land them. So infrastructure, including vertiports, high power charging, ground operations, all may prove to be a harder constraint than certification. And I think that's a greenfield opportunity. Now, what certification unlocks is the supply chain. Batteries and powertrains, fly-by-wire avionics, composite structures, thermal management. When an airframe gets certified, its suppliers get certified with it, and several of those suppliers are public microcaps trading at industrial multiples with growing aerospace backlogs. So running underneath all three of these themes is one word, autonomy. Drone fleets, air taxis, satellite constellations. None of the unit economics work at scale with a human per vehicle. One operator supervising many aircraft is what turns this kind of novelty into real margin. And the software and sensor companies enabling that are the connective tissue to this whole thesis. So as I close here, every great theme attracts great storytellers. So I want to close with a bit of a warning. We believe the sector will mint real franchises over the next decade, but it will also produce a graveyard. So we apply kind of 4 tests to every name in the space that we look at, and I'd urge you to do something similar. So first is revenue quality, purchase orders and backlog, not MOUs. A press release is not a booking. Second, the balance sheet, months of runway, burn rate, and how management funds a gap. In this sector, dilution can be a silent killer. And your thesis can be right but the equity can still lose. And then 3, customer proof. Name customers, repeat orders, government contract vehicles you can verify in public procurement data. If you can't trace the revenue, it may not exist. And 4, regulatory positioning. Is the company positioned ahead of Part 108 and certification milestones? Or is it waiting for rules to maybe save a business model that isn't working today? So the airspace above our heads, sat economically empty for about 100 years. The rules, the money, the technology are all finally converging here in 2026 to change that. And for once, the companies at the center of it are small enough that this audience can matter to them. So I suggest we do the work, and I believe the next decade of this theme, absolutely belongs to small cap investors. Thank you, everybody.
Thank you very much, Scott. We are now moving to our company presentations. And today's first company is Vertical Aerospace. And presenting today will be CEO Stuart Simpson. Stuart, are you there?
I am here, yes. Thank you very much indeed for the invite.
Very happy to have you. Are you going to be presenting are you going to be sharing your screen today?
We are going to be sharing our screen. That should just be coming on now.
Excellent. Looks great. Stuart, let me get a few preliminaries out of the way, and then you can go right ahead. As we said, Stuart's going to begin presenting in just a moment. We're going to open up the event to your questions afterward. We'll keep your lines muted throughout the presentation, and if you wish to submit a question, first click the Q&A button at the bottom of your Zoom window. A text box will appear, and then you can type and submit. Before we begin, please let me get the safe harbor statement out of the way. This segment may contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. All statements pertaining to future financial and/or operating results, along with other statements about the future expectations, beliefs, goals, plans, or prospects expressed by management, constitute forward-looking statements. Any statements that are not historical fact should also be considered forward-looking statements. Of course, forward-looking statements contain risks and uncertainties. Stuart, go right ahead.
That's excellent. Thank you very much indeed for the introduction and the opportunity to talk to all of your clients. So good morning, everyone. My name is Stuart Simpson. I'm the CEO of Vertical Aerospace. On the screen, you can see a picture of our beautiful Velo aircraft. For those of you who don't know us, we are UK-based but US-listed eVTOL company. Some people call them flying taxis. We are different from the competitors because we are grounded in aerospace. What I mean by that is we started as an aerospace company. This wasn't a company that set out to build a flying car. We set out to build an aircraft certified to the highest safety standards in the world, the same as an Airbus. So this puts us uniquely positioned. My top team have certified over 30 different aircraft and powertrains. We believe safety is at the heart of growing this industry. You have to be able to demonstrate that to be allowed to fly over the great cities of the world. We are grounded in a belief that certification is what matters. You have to be ahead of the game, understanding the route to certification, with the ability then to monetize after you have certified. And you've got to be able to scale. And one of those things is key in terms of scalability is working with the best companies in the industry. And that's what we do. Now, we are an OEM. And what I mean by that is we're not building our own supply chain upstream, developing our own flight control systems, etc. There are flight control systems out there we can partner with and use. And downstream, we're not operating this product. This means we have a very fast return to cash generation and cash profitability. So we engineer, design, build, sell, and service the aircraft. So you have one revenue stream selling the airframe, then you get another revenue stream from selling the battery. Every airframe that we sell for mid-single digit millions will generate a battery sale per year at a 40% margin for 20 to 25 years, creating a fantastic, highly profitable, we're targeting 40% margin on those battery sales, low double-digit millions of revenue from the battery sale for every single airframe. That is a very, very strong business case. In terms of the use cases for the aircraft, it starts with airport shuttles, flying people to and from, whether it's JFK to Manhattan or London Heathrow into London. But we expand from that base into logistics, cargo, and very importantly, our airframe is the largest in the sector. Our airframe can take a hybrid. We already have a hybrid on the bench for over 2.5 years. We'll be flying a hybrid in the next 6 months. That creates an opportunity to take the range of the aircraft from what is already one of the best in the industry through to 1,000 miles with a payload of around 1,200 kilos. So totally unique in the sector. So that's a little bit of an introduction to vertical. And if I can give you 3 takeaways, and then I'll expand on each of them. The first one is we are number 1 or 2 in technical progress in the world, having done full-scale piloted transition. The next is we have the clearest and most certain route to certification. And remember, no certification, no business, because you cannot sell the aircraft globally in meaningful numbers to create a real business. And finally, we have a sector-defining aircraft with the best customer quality on our list of customers, absolutely defining the sector. Yet, we have a market cap that is lagging our competitors. So I genuinely believe, and we expect to see a re-rating over the coming years. Now, just expanding on each of those, starting with technical progress. The defining movement of an eVTOL is taking off vertically, like a helicopter, with the rotors positioned as they are shown here on the screen. Those rotors that are at the front of the wing that are orientated horizontally tilt forward. We then fly like an aircraft on the wing, highly efficient, and then we bring an aircraft to a stop in the sky and land vertically. It is quite remarkable. There are only 2 companies in the world with a tilt rotor aircraft to have done this. And the tilt rotor is important because that gives you a level of safety and performance you can't get with a lift and push aircraft. Just not achievable. So we are one of only 2 companies in the world. And actually, we are the only one in the world that has done this hand in hand with a regulator. So every time we have flown our prototype aircraft, we have to work with the Civil Aviation Authority in the UK, the equivalent of the FAA. We have to show them the data that we're safe. They have to say, we're happy for you to fly that aircraft. No one else has built that level of scrutiny or rigor into their prototyping program. And what this means is we have a regulator with a fundamental understanding of our product that means they will be able to certify this faster than anyone else in the industry. And backing that up is maybe a video. Gillian, have we got a video we can show? Just so you can see the aircraft in action.
From the first sketch on paper to every flight we take, our vision remains to transform the way the world moves. Replacing a 90-minute drive with a 10-minute electric flight. Clean, quiet, safe, and scalable. And only a few years away. Built on partnership, driven by precision, grounded in reality. Every milestone we've turned into momentum because this is more than engineering progress. It is discipline, proven step by step, giving the world a new way to travel. And as the world watches, we fly. We fly together as builders, as partners, as pioneers. This is no distant dream. It's today's reality.
So hopefully you saw that little demonstration of the aircraft. We are extremely proud to announce today that we will be flying at the world's largest air show, which starts on Monday in the UK, the Farnborough International Air Show. We have flown our aircraft to Farnborough over the last 2 days, and we will be in the air show there doing a full transition flight in public for everyone to see. So a huge moment for us as a company, but also importantly for the industry to showcase this in public at an air show. Now, I talked a bit about technical progress. We are number 1 or number 2 in the world. The next thing I wanted to touch on was certification pathway. No certification, no business. Now, We are the only company in the sector that are certifying under the Civil Aviation Authority and EASA in the UK, in Europe, sorry. Those two regulators are far-sighted. What I mean by that is, in 2019, they codified what was required to certify an eVTOL aircraft for flying in and around Europe. They actually wrote a set of rules that said, this is what you have to achieve. And they were very thoughtful about this. They took a view which was the only products at the minute that are allowed to fly over the great cities of the world are actually the Boeing and Airbus and Embraer products that are certified to a 1 in a billion chance of failure. So when you get on a large passenger jet and you fly in it, it is the safest form of transport. And that is something that EASA said we want to replicate in this type of product, because they're going to be flying over the cities. So they have to be absolutely as safe as possible. Now, that was codified in 2019. The gentleman that wrote that set of rules and regulations, called Trevor Woods, he now works for me. He's part of my executive team and director of certification. The gentleman that signed it off, so the chief executive or general director of EASA then, was a gentleman called Patrick Key. Patrick is one of our board directors. So we have an unrivaled route into an understanding of what it takes to certify this. Not only that, we've been working towards these regulations now for 7 years. So our regulator, hand in hand with us, has been working with us to do the demonstration flight you just saw. You'll see it again next week at Farnborough. We are ahead of the curve in terms of our understanding. And this will be as safe as Airbus or a Boeing. No other company gets close to that. And just a final important point to note, there is a moat around Europe. Now, what I mean by that is the regulator has been clear that if you want to fly an aircraft, one of these aircraft, over London, Paris, Berlin, Munich, Madrid, Torino, Rome, you have to be certified to this standard. If you're not certified to this European standard, a 1 in a billion chance of failure, you can definitely do some flying in Europe, but you can't do the primary use case of moving people in and around the great cities. So we are quite unique in that. So we have a clear route certification to the highest standard in the world that opens up sales globally, because with this being a higher standard than the FAA or any other regulator, it means we can passport in and sell globally immediately from certification. Now, next thing I wanted to touch on was the sector-defining aircraft, the Velo. We launched the Velo in December last year. I don't know if we can get a picture of it on screen. I think we're just trying to share that. We have launched this aircraft, and it wasn't us that said it was sector-defining. This was the feedback we were getting from all the people that have seen it. Now, this aircraft, from a plan view, looks exactly the same as our prototype aircraft, because the complexity is the fluid dynamics from the tilt rotor at the front, over the wing, over the pylons, and the rotors at the back. Very complex, very difficult to model. In fact, so difficult to model, we didn't bother. We went straight to full-scale prototype that then informs the model. What we do is that all carries across into our Velo. We shrink wrap the airframe underneath, make it look beautiful, and launch the product you can see on screen now. Now, if you are a customer and looking to buy an eVTOL, let's say you're an airline, we have a partnership with American Airlines. We've been working with them for 6 years. They helped shape this product to make it what it is. They were one of our customers saying, this has to be at the safest standard in the world. You can't take your passengers and downgrade their safety on the last leg of the journey. So we are engineering it to the highest safety standard. But they also said very clearly, you have to have a divider between the passenger and the pilot. You can't have passengers reaching round to try and steer the aircraft. We are the only aircraft in the sector that has got a separate passenger compartment from the pilot compartment. Totally unique. And it's because of the size of the airframe. We created enough space for that. The next thing you look for as an airline CEO is that wonderful customer experience. So we launched this with 4 business class seats, something that any of the business class passengers will be very happy sitting in for a 15-20 minute journey. Importantly, you can also put in 6 economy or standard helicopter seats. Now, what that means is for one airframe, you can choose to have 4 business class type environment, or a 6 standard class environment similar to a helicopter, all within one airframe. No one else can do that because their airframes are not of the same size as this. That means that they can choose, okay, do we want to charge a little bit more for it, for a business class environment, or keep the standard helicopter seats and get 6 passengers in? It has the same cost to run, same cost to charge, same landing fees, but you get 6 people's revenue, which means the profitability is a step change. No one else can do that. And then finally, you can see on screen, there is a door at the back of the aircraft. All of that luggage that you see there, 6 full-size check-in cases, 6 standard pulley cases, goes in the back of the aircraft. Again, no one else takes luggage. Now, we did this because we worked with our customers. And just touching on this, you'll see a lot of stuff about customers and how many people have. You have to look at the quality of those and the reality of them turning into real customers. Now, our customer order book is the highest quality in the industry. We have American Airlines. They've contracted to buy 350 of these to put into the cities around the world where they fly into, and can then provide a seamless airport to city centre journey for their passengers. That is transformational for a business class passenger. So I fly to New York probably twice a month. We've solved the bit over the Atlantic, but the bottleneck getting from the City of London out to Heathrow and then getting from JFK into Manhattan, we just haven't solved. This solves it. Safe, silent, and clean. This doesn't just displace helicopters. This actually creates a whole new market, because as I'm sure you know, most of the cities in the world have pushed helicopters out because of the safety record and the noise. This aircraft cannot be heard behind the double glazing in a city or above the traffic in a city. So it is totally unique in that aspect. So that is what defines this, that quality of the customer order book. We have American Airlines, we have Japan Airlines, we have Bristow, the world's largest vertical and takeoff operator in the world, largest helicopter operator in the world, signed up to buy 100 of these because they know it doesn't just displace their current fleet, but it actually grows into significant new markets, and they will be perfectly placed to partner with us to do that. So just starting to wrap up. The takeaways were, we are number 1 or 2 in the world for technical progress. We are the only one in the world certifying to the highest standard, the standard that will mean we have a globally saleable aircraft, and we have a unique insight into that. We've been working on it for 6 or 7 years, which is why we can say with certainty we will hit this level of certification, and we will do so in 2029. And not only that, we have got the sector-defining aircraft, the best safety standard in the industry, the largest capacity, and the ability to take luggage. No one else can do this. And then finally, as part of our highly efficient OEM business model, we've achieved all of this for a fraction of what our competitors have achieved. We've spent around about $450 million cash post the listing. Our competitors have spent close to $2 billion. So we've spent 75% less, but we've achieved more. And then the very final thing to say is we are also launching a hybrid version of this aircraft. I mentioned this at the start. It takes the range from 100 miles to 1,000 miles and the payload from 550 kilos to about 1,200 kilos. Totally transformational, which opens up dual use opportunities with the military around the world, which, as you know, given the geopolitics that we're seeing, creates fantastic additional profit and growth opportunities for us at Vertical. So thank you very much for listening to the presentation. I hope that gives you a very quick summary of why we think we're unique. And I'm very happy now to turn to Q&A.
Thank you, Stuart. As you said, let's take questions from the audience. If you have a question, press the Q&A button at the bottom of your Zoom window. A text box will appear, and then you can type in and submit your question for Stuart. Stuart, we've already received several questions here. Vertical has already achieved several important milestones, and as you mentioned, Farnborough International Air Show is just around the corner. What can investors expect from the company at the show, and why is it such an important event for you?
So thank you. The Farnborough Air Show is a totally unique opportunity. We have all of the world's industry there, all of the world's military there, the governments from around the world, the regulators from around the world, and they will see our aircraft doing the pivotal maneuver, the transformational maneuver for this type of product. We will be doing a display flight every day where we take off vertically like a helicopter, fly like an aircraft around, and come back, and we bring an aircraft to a stop in the sky and then land it vertically. Truly, truly extraordinary feat of engineering, but something we've become quite blasé with because we've done it so many times now. But it will be wonderful to showcase that in front of the industry, in front of the world, to prove that this isn't a wish and a hope down the line. This industry is poised to come to life, to be real in the next few years. That is what it means for us. And it isn't just about showcasing us, it's making sure the world understands the whole industry is ready to transform how people move around the world.
The completion of multiple piloted transition flights feels like a major inflection point for the industry. From an engineering perspective, what did that achievement validate that investors may not fully appreciate?
Yeah, good question. I think you have to see the context for this. So if you go back maybe 4 years, there were around, depending on how you counted them, but somewhere between 400 to 500 companies around the world trying to achieve this. And by this, I mean transition from a helicopter to an aircraft back to a helicopter. 99% of those companies have disappeared because it is extraordinarily technologically challenging. There's 4, 5, 6 companies around the world that are doing this and still progressing. Of all of those companies, only 2 in the world have achieved this with a tilt rotor aircraft. And that tilt rotor brings a level of safety and security you just don't get if you don't have that configuration. So for us to be able to do that at a fraction of the cost for the one other company that's done it is quite extraordinary. They've spent around $2 billion to achieve that. We have only spent around 450 million. And that is because we're based in the UK, where our engineers are located. We've got 450 round number of engineers, and we're all focused on bringing this product to the market. We don't do anything else. Every single day, first dollar, the last dollar, first thought and last thought is about bringing this product to life. And that means that there are no other distractions. And it means the level of focus and commitment we have is something quite extraordinary. And that's why we've managed to achieve it at a fraction of the expense of others, and when barely any other companies in the world have achieved this. So it really is the proof point, not just that Vertical is going to work, but we know our design works. We know we will be certifying this within a couple of years. It proves that this whole industry is ready to take to life.
Thank you, Stuart. Next question. You've assembled an impressive list of partners within the aerospace ecosystem. As you approach certification, what value do these partnerships bring beyond simply supplying components?
Yeah, great question. The background to this is really important to understand. We set out as an aerospace company with a deep understanding of certification. And as I've said several times, no certification, no business. So we sat back at the start and said, look, if you're going to certify a new and novel aircraft, the regulator has to understand it. And that is extraordinarily challenging for them to do because there are no electric powered aircraft that have been certified. There's no tilt rotor aircraft electric powered been certified. So they are going to need a lot of confidence, not just in the overall design of the aircraft, but all of the components within it. So we stepped back and said, well, the best way to do that is to work with the best companies in the industry globally, in the current aerospace industry. So an example is Honeywell. We partnered with Honeywell 6 years ago. That's when we started working with them. We use their flight control system. It's been in the market on certified aircraft for over 30 years. Over 30 years. It's on the world's most expensive aircraft, the F-35, in the military application. That is what powers our flight control system. So we know it's certification ready. It's been out there for 30 years. What we do is just build on another little layer that explains this is the Velo aircraft, the tilt rotor aircraft. Now, we don't just have it on with Honeywell on the flight control, we have it with Honeywell on avionics as well. We have it with Honeywell for all the inceptors. So everything the pilot sees, feels, and touches is certification ready by Honeywell. And that's $1 billion deal with them. We then looked at the airframe. We have our airframe being built by one of the major suppliers to Airbus. They understand aircraft certification inside out. They've been doing it for generations. So again, we've leveraged what is best in the industry to bring this product through to certification. The one bit that we do ourselves is the battery. So we buy in the cells, we package them, write the control software, and certify that ourselves. But wherever we could, we leverage the best in the industry to support us because we know that de-risk certification speeds time to market. So hopefully that gives a bit of color commentary about how we look at our partnerships.
Thank you, Stuart. The hybrid electric version of Velo has become an increasingly important part of your story. What originally led you to pursue that opportunity, and how much larger could the addressable market become because of it?
That's a great question. I joined Vertical about 3 years ago, and I was actually approached to join them 2 years before that, and I did 2 years worth of research and diligence on them before I decided to join. During that, it was really obvious we got the best airframe in the industry, the largest airframe in the industry. And it was clear you could fit a hybrid powertrain, basically a turbo generator, in the tail of the aircraft. And just to be clear, the turbo generator creates power that goes into the battery, and the battery still powers all the rotors on the aircraft. Very important to note that. That means that we certify the electric aircraft, we literally drop a small gas turbine in the tail, and within 12 months, we'll have a hybrid product that takes the range from 100 miles to 1,000 miles, and it doubles the payload. In fact, it more than doubles the payload. There's a sweet spot where you trade off payload and range. So you get around 420 miles of range for around 1 ton of payload. Now, the reason I did it, it was obvious the airframe could do it. And by providing that capability, you open up new commercial markets. So you can then look at intercity flying. But most importantly, you open up the dual use military capability. And if you look at where the military spends a lot of money, a lot of it's basic logistics, moving people and things around. With very expensive helicopters, like, in the $40–50 million per product, of which they can only fly them less than half the year because of the maintenance. Our product will undercut it on price dramatically, but its dispatchability, how much you can use it, is nearly 99% because there are very, very few moving parts because it's an electric product. So from a military perspective, you get a cheaper product, which frees up money to be spent on other things, and you get a dispatchability improvement, which improves the reliability and ability to move people and things around. And finally, we drop in autonomy, which again transforms the capability of the aircraft.
Stuart, thank you very much. That just eats up our 30 minutes, so perfect. Thank you very much. That's Stuart Simpson, and the company is Vertical Aerospace. For more information on Vertical Aerospace, reach us at 1-800-RedChip or write us at evtl@redchip.com. Thank you, Stuart.
Thank you very much. Great to talk. Bye-bye.
All right, our next company in today's RedChip Vertical Economy Virtual Investor Conference is Exyn Technologies, ticker EXYN on the NASDAQ. Presenting today will be Brandon Torres Declet and Ben Williams. Brandon and Ben, are you there?
Yep.
Good morning.
Excellent, excellent. Okay, I should have said that Brandon Torres Declet is the CEO and Ben Williams is the COO. So, gentlemen, are you going to be presenting your company presentation today?
Yes.
Okay, could you display that now, please? Okay, and as you're doing that, let me just tell everyone what we say before every one of our presentations today. We're going to open this event to your questions. We'd love to hear from you. Click the Q&A button at the bottom of your Zoom window. A text box will appear. You can then write in and submit your question. We're also going to get out of the way the safe harbor statement. This segment may contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. All statements pertaining to future financial and/or operating results, along with other statements about the future expectations, beliefs, goals, plans, or prospects expressed by management, constitute forward-looking statements. Any statements that are not historical facts should also be considered forward-looking statements, and of course, forward-looking statements involve risks and uncertainties. Brandon and Ben, are you ready?
Yes, we are.
Go right ahead then.
Well, good morning, everyone, and thank you for joining us for the presentation on XN. And thank you to RedChip for hosting. My name is Brandon Torres Declet. I'm the CEO of XN Technologies. I've been with the company approximately 2.5 years. We completed our IPO on NASDAQ mid-May. So we're happy to join you and walk you through the business. I began my drone robotics career back in 2001, working at the Pentagon, the early days of the General Atomics and Predator program. I founded my first drone company, Measure, in 2013 and grew that to the largest drone service provider in North America. I ended up selling that business to Ag Eagle Aerial Systems. The ticker on that is UAVS, also known as Eagle Next. I became the CEO there. Did several acquisitions to build a full stack drone robotics solution with both hardware, software, and sensors. I'm also the co-founder of Unusual Machines. The ticker on that is UMAC. Took that public on NYSE. And what's really exciting about XN and being at the helm now for about 2.5 years is we are the world leader in autonomous navigation and autonomous data collection. It's a proven technology that is operating in every continent across the globe. And our customers are doing about 1,500 operations per month. Joining me this morning is Ben Williams, our COO. He's going to walk us through the presentation, and then we're happy to answer any questions anyone might have. Thank you very much, and I turn it over to you, Ben.
Thanks, Brandon. Pleasure to be here. As mentioned, my name is Ben. I'm the Chief Operating Officer over here at Exyn. Broadly, my charter is productization, execution, go-to-market. Previous to this, I've been a multi-time founder, most recently a company called Relio that we raised venture for and sold to AT&T. Prior to that, I helped build a deep tech commercialization group at Lockheed Martin, and also a former naval officer, served a few tours in the Middle East. So a little bit about the company here. So obvious legal stuff up there up front, but you can think of us as sitting at the intersection of high accuracy rapid mapping and autonomous navigation, and specifically what we would call self-contained autonomy, which is to say GPS denied, comms denied, no prior map or model, no external compute or fiducial is required for operations. So autonomy at the edge, self-contained systems. A big piece of how we got our start is digitizing physical environments. So you can see in the examples on the left-hand side here, lots of physical industries still have people out on foot or on vehicles, handheld capture devices, or eyeballing it, trying to figure out what's going on in physical environments. These are dull, dirty, dangerous, etc. Obvious opportunities for autonomous systems to take on some of that load. So we got our specific start within the underground mining world, and this is a great example for how the systems work and the type of value that they can provide for operators. So in this particular case, this is an underground mine that had been out of operations for a number of years. The owners wanted to reopen it, commence operations again, but they did not know the state of the mine. It was not certified safe, so they could not get in there on foot. So what they did, the operator on the upper right-hand side here, launched a system from above ground but below tree canopy in order to go and explore this mine. They only needed to define a high-level mission objective. They did not need to give any type of waypoints or path planning or anything like that. The system self-defined, self-flies entirely. And you can actually see the flight path it took. As it learned about its environment, it continued to determine where the next best place was to fly to gather more information. So after the course of about a 10-minute flight, the system returned with a survey grade model of this environment. So if you're doing the math there, probably 30 minutes to set up, 30 minutes to tear down, 10-minute flight. In less than half a day, you've captured information that would have taken you days or weeks to capture, trying to go in by foot using a tripod scanners and any other mechanisms that you can try. So huge savings in time and money and safety for that matter as well. So when we're talking about autonomous systems, pretty much anyone you will hear from will talk about autonomy being part of their stack or part of their solution. So we want to level set here and explain a little bit about what we mean when we say autonomous. And there's two main distinctions I'll make here. One is between automation versus autonomy, and the second is within the context of autonomy. What does it mean to be at our level, which is level 4B? So automation you can think of as human defined, human bounded, human pre-programmed, and machine executed. So this is highly repeatable but unchanging processes. Think manufacturing lines and that sort of thing. It's where you can control the environmental factors and you can predefine all the off-ramps and requirements. But out in the real world, much of this type of thing can't work because it's too changing, it's too dynamic. Because if there's a change required, a human hand has to intervene, redefine the process, restart the process, rework it. An autonomous system is resilient to those types of changes. So you define the high-level mission objective, and the system self-defines how it solves that problem in the light of changing environmental conditions. So within the context of autonomy, you can have a lot of different levels of autonomy. This is a structure that was inspired by the SAE standards for self-driving cars. In this context, Exyn operates at level 4B. And what that means is the operator is not flying the system. You are not defining the low-level mission planning and requirements. You're simply defining the top-level objective. So the system self-defines sub-objectives, waypoints, flight paths, flight speeds, etc. And 4B specifically talks about the concept of understanding in the environment and taking action based on that. So a great example here is when you are flying in a constrained environment, you often kick up clouds of dust from the props. This means that you have a dust cloud that is being seen by the sensor stream. And a raw sensor stream will treat a cloud of dust often as a solid object. And so it will not try and fly through it. It'll treat it as non-navigable. But a lot of times the mission needs to go through the cloud of dust. So we have classification and filtration tools that sit on top of the autonomous navigation that classify it as dust and classify it as navigable, allows it to fly through the dust while still detecting solid objects in that cloud. As you might imagine, this means that you are a much more survivable system. It is much more likely to complete its mission, return to home safely, and to still navigate safely throughout the mission. So, in terms of how we think about our go-to-market, all of our capabilities really sit on the software side. It's part of what we call Exyn AI, which is our software stack, top to bottom. And as a result, we have to think about how it interacts with the physical environment. We don't build drones or ground robots, and so what we've settled on is using something called the Exyn Nexus, which is a modular payload that provides mapping and autonomy onto third-party drones and ground robots. So you can see some examples here. These are all commercially available systems that we've integrated on and can sell alongside either aftermarket add-ons, or sometimes we package the systems in a single sale to the end user. So in this case, you can see the drones all have the Nexus underslung on each of the drone platforms, or on the Boston Dynamics Spot, it sits on top, all of which can be guided autonomously using Exyn AI. I talked about mining being sort of our first category that we got involved in. The second largest category for us and our second market entry was in the geospatial category. These are some examples of sort of sub-markets in that world that are growing opportunities for us. We're still in the early days of this market, but really great growth signals and future state for us in geospatial. When we think about platform growth, our early days were very verticalized and targeted, single use case, single system. Over time, as the systems became more mature, as the technologies matured, we made the capabilities more modular and more flexible. The outgrowth of this process was the Nexus, which I talked about before, the modular payload. That enabled a lot of flexible integrations across ground and air vehicles, and even getting into maritime vehicles. And the further outgrowth there is being able to work with OEMs to build product on top of our core Exyn AI capabilities. The two mechanisms by which we do this are either through the Nexus, where we allow access through an API for real-time interactions with the system, or in a pure software ecosystem, a software development kit for Exyn AI, where we don't touch the hardware at all, and the end users, or the OEM in this case, actually uses the software kit and integrates into their physical systems. And the fourth category here is government defense. As you might imagine, being GPS denied and comms denied flexible means that we don't have to develop specialized technology to operate in contested environments or difficult environments for government use cases. This means that we are already out of the box ready for a lot of these capabilities. Think ISR, tactical mapping, real-time digital twins, and all kinds of logistics management and transit are available right out of the box. We have a lot of experience working with these four categories, and part of the reason why we've had such success is by virtue of our experience. We've been operating these systems out in the harshest environments for over 6 years. Our external users are doing well over 1,000 autonomous flights every single month, and believe me, they find some of the oddest ways for us to push the boundaries of the capabilities. It teaches us about edge cases, allows us to push the boundaries of the technology continuously, and keeps us at the forefront of the operating conditions. Because we've hit product market fit on our first couple of categories, this is less of a core technology development play and more of a growth play for us. We are at the stage where we are rapidly expanding in multiple regions, multiple markets, and part of the rationale for us doing IPO now was to get the growth capital for us to really go large and across a lot of different markets. You can see here a bunch of great examples of customer sets across mining, construction, and geospatial. The main takeaway here, if you're looking at all of these names, a lot of big names, is the key is that they are not whimsical buyers. These are people that take very seriously the requirements to serve in their use cases. We're part of the critical path information gathering for them, and so it took time to prove out these use cases. Now that we're in there, we are trusted by some of these great companies as part of their core workflows, and they come to us first with new product asks, rebuying, upselling, and expanding throughout their operations. A big part of our growth category, our growth strategy here, is through channel expansion and partnership expansion. The OEM market is a great example here, where we're working with a lot of different types of OEMs to expand the capability set, and they build on top of our core modules. And on the channel side, we're expanding worldwide, especially in the geospatial and mining categories, but also through our other ecosystems as well. Brandon, you want to take this one?
Sure. So this is a snapshot of our historical financials. We filed our first 10Q with the SEC this month. We grew our revenue year over year from 2024 to 2025, 5.6, 5.8. However, we had a very large backlog of about $1 million in 2025 that we've now worked through for 2026. We expect our gross margins obviously to increase as the company continues to transition towards a recurring revenue model. We've also obviously been able to shrink our net losses as we continue to grow our revenue and also find efficiencies and build out a strong balance sheet. Next slide. The highlights here for Q1, about 1.2 million in revenue, gross margin of approximately 42%. That continues to grow for us. The capital position for the company is strong. We had gross proceeds from our IPO of approximately 19.4 million. We paid off our debt. We're currently debt-free, and we think we're in a very good position with our balance sheet as we make investments into XN Defense. We believe the opportunity there for autonomous navigation and autonomous data collection for robotics and defense applications is large, and we think that that opportunity will continue to grow in the out years. So as we transition towards our autonomy tech stack and providing that to OEMs in the defense space, we expect revenue to increase. We expect our gross margins also to improve.
So from a broader perspective, a couple of key points to leave with here. We have a technology moat in the form both of our core level 4B autonomy and in terms of the, think of it as the plumbing, the infrastructure around that handles the edge cases, that makes these systems resilient to the difficult environments in which they operate. Both of those combine to be a multi-year lead on folks that are coming out of a laboratory or new technology development, because the physical world has a way of interfering with your best laid plans, and our experience gives us a critical edge there. Our systems are mission critical for our end users. It took time to help them get across the understanding that they can trust these systems to work. Now we're past that point, and it's a much easier process to get them expanding usage and using them in all kinds of different areas. We're proven at scale. We're, as I mentioned, our end users do well over 1,000 autonomous missions every single month. We're deployed in 30 plus countries and almost all the areas of the world. We're a dual product business in the sense that we have significant business led with Nexus first, that then expands on the software side, and then the hardware agnostic software licensing model with the SDK. It's a huge opportunity. Obviously, each of the autonomy, digital twin, LiDAR, and robotics categories by themselves are interesting. The sum total, the combined opportunity is huge, and we sit at the intersection there. And of course, our team is top notch. You've met myself and Brandon here. The rest of the team up and down is a superstar group, some of the best minds in the world working on autonomous systems. So we'll pause there for questions.
Thank you very much, gentlemen. To type in a question, click the Q&A button first at the bottom of your Zoom window. A text box will appear. You can then write in and submit your question. Brandon and Ben, we've already received many questions. Let's start off with this one. XN AI has now completed thousands of autonomous missions in real-world environments. How important is that operational experience in building a technology moat that would be difficult for competitors to replicate?
Yeah, I mean that's a critical thing. I touched on that a little bit earlier, but because a lot of this is about handling edge cases and dealing with the things that are not easy to identify in a laboratory environment, it's a critical element of being a practical product to get out in the world and be able to manage those kind of worlds. Specifically, we talk about the level 4B autonomy and the ability to classify elements of the environment. These are things that we ran into as we were trying to deploy in the early days, and they became blockers to being really, really useful because you could only trust the system to be autonomous in certain contexts. And for a system to be really useful as an autonomous system, you need to be able to trust that it will stay autonomous and not require constant oversight and human operator. So those elements, being able to understand how and when you would intervene in the early days and how to make those part of the autonomy stack and the handling of difficult environments. That's the whole game from a user perspective, is making it trustworthy and usable in all of these environments.
You often talk about reducing survey times from weeks to hours while improving worker safety. When customers first deploy Exyn, what's the benefit that tends to resonate the most? Better productivity, better data, or improved safety?
So I think it probably depends on the perspective of the individual you're talking to. Folks that are operating at the edge out in the field often resonate first with safety and then with speed. Especially folks that are working in the more dangerous environments immediately recognize the benefit from being able to stand in a safer environment and send an autonomous system into the area that is most dangerous. That's a clear advantage, and it's oftentimes the thing that resonates first with the end user. From a broader and enterprise perspective, they will often resonate with increased productivity, accuracy of data, being able to gather the difficult to access information quickly and efficiently, and be able to transition that to a global frame of reference, being able to make better decisions rapidly. That is often the thing that resonates from an enterprise perspective first as well. So it depends on the perspective of who you're talking to.
Does your autonomy software, being platform agnostic, significantly expand your addressable market compared to companies tied to a single hardware platform?
Well, clearly, we would argue yes. I think the key thing here is that there's a foundational element to our autonomous navigation that is applicable across a really wide array of industries. We made architectural decisions specifically to generalize the autonomy, such that you only have to make small modifications in specific environments and for specific use cases. We think that gives us a huge edge in making this a really broadly generalizable autonomy baseline. And I think that's critical because then you are able to take that same capability and put it into just about anywhere.
It seems that many of the capabilities developed for commercial mining naturally translate into defense use cases. How much technology overlap exists between these two markets?
I mean, we've found that it's a very highly reusable set of technologies. We've been working with government groups for years. We participated in the DARPA Sub-T Challenge years ago. We've done work with eVTOL, Army, Marine Corps, Air Force, including the UK MOD. So there's a lot of examples here where our core technologies apply directly to use cases that are valuable for them. And so a lot of the time we've spent building out the core capabilities has meant that we can service these use cases with government and commercial customers just as easily, and that's fueled our ability to enter into these markets really quickly and effectively.
One of the most valuable assets you've built may actually be the operational data generated from thousands of real-world autonomous missions. How important is that data advantage when it comes to improving the platform over time?
So I think it's really critical. I mentioned this element of operating in the real world is the end product, right? You can't just develop a core technology and assume it's going to work out in the physical landscape. So the data that we get, the experience that we get from operating in these edge conditions, that helps us to stay at the bleeding edge of this technology, developing the ability to respond to all of the oddest use cases and areas in which other systems would shut down or not be able to navigate. And that often makes a difference between making a sale or not, making it useful or not, is the degree to which they can trust that we will operate in new and difficult environments. So yeah, I think it's a critical advantage for us. I think it gives us a multi-year lead on anyone else that would be starting today.
Gentlemen, as software becomes a larger part of the revenue mix, how should investors think about the long-term impact on scalability and margins?
Over time, margins should be improving across the board. We're working even across our Nexus-oriented systems to improve margin. But software, obviously, if you're building it correctly, has a higher margin rate as well, higher reuse rate. As I mentioned, we have a very high degree of reuse for our core technology across all the markets. That means we have to invest less to adopt newer markets and new capabilities, which improves margin, of course, on an individual sale basis as well as a company-wide basis. So I would expect that to improve across all the product lines, but especially on the software-oriented ones.
Yeah, and I would add, we view our software product or autonomy tech stack as the future of our growing recurring revenue business.
Thanks, gentlemen. The company appears to be evolving from selling complete systems toward a platform strategy with software development kits or SDKs, application programming interfaces or APIs, and OEM integrations. How should investors view this evolution of the business?
I think similarly, this is part of making a more mature business, right? We're not placing just a single bet. We're demonstrating the flexibility of this technology across a whole bunch of different categories. And these are all self-reinforcing to each other as well. As we mature our core product, it makes the SDK and API offerings more compelling. Similarly, as we get more experience deploying to different types of systems through the SDK and the API, it reinforces the development of the core technologies that also go into our own products. So all of these are working together. It's actually pretty strategically aligned to broaden the reach of the business, but continue to allow us to focus on building these core technologies and pushing them at the bleeding edge of new technology development.
One of the things that stands out is your ability to operate in GPS denied and communications denied environments. Why is solving that problem so difficult, and why does it create such a meaningful competitive advantage?
So I think if you look across a lot of what would be competitive offerings, they all start with the assumption of GPS and communications, and then try and handle when it goes away. We started from the opposite direction of assume there's no GPS and no communications, and if there is some, then we can add it to the capability set. I think that's really fundamental because in our view, an autonomous system is only as useful as you can trust for it to be autonomous. And again, in most of the real world, you may have access to GPS or comms for some of the flight or the mission, but it's not something you can count on all the time. And especially if you're operating in complex environments like dense urban or near infrastructure, below tree canopy, indoor or underground, et cetera, these are environments where you may have access periodically to GPS or comms, but you can't count on it. So a system that is inherently resilient to the loss of those systems is far more likely to be successful in its mission and to maintain safe navigation throughout the course of its navigation.
The partnership with Trimble and the broader channel strategy seem particularly important. Can you talk a bit about the economics of these initiatives?
Sure. So it's basically a channel and distribution strategy for those types of partnerships. We work with Trimble quite a bit. We are complementary to their portfolio, and we have direct integrations into some of their software tool sets like Trimble Business Center and Trimble Connect. So there's a great collaboration there. We also work with a lot of mutual channel partners where we're part of larger sales, where you might sell a channel might sell a package of a lot of different systems. We're often a linchpin portion of that overall sale. And as part of our broader channel strategy, we provide sales material, and then the channel and distributor often does level one or tier one support for us worldwide, which frees us up to focus on technology development and building out the resources for those channels to sell for us, and means that we don't have to hire individual sellers that are all over the world.
And we have time for one more question. Looking at the government opportunity, are you primarily pursuing complete autonomous systems, software licensing, or a combination of both?
I think this is opportunistic. There are scenarios where it makes sense for us to provide the whole system. There are other scenarios where it makes sense to work with partners, with primes, with existing contractors. We're doing both right now in varying forms. So it's really more focused on what the end user needs and whether we're best as a total provider or as a subsystem provider or vendor. We do both, and we select based on what the customer needs.
Perfect. We are now coming up to 11 a.m. Thank you very much, Brandon and Ben, Exyn Technologies. For more information on Exyn Technologies, reach us at 1-800-REDCHIP or write us at exyn@redchip.com. Thank you very much, gentlemen.
Thank you.
Coming up next on today's RedChip Vertical Economy Investor Conference is Helio Corporation, OTC ticker HLEO. Presenting today will be Chairman and CEO Ed Cabrera and CTO Greg Delroy. Gentlemen, are you there?
Hey, Craig. How you doing today?
Hello, Ed. Great to hear you. We don't see you quite yet, but we'll get there.
We're holding out for the CTO to join here momentarily. He should be here.
Excellent. No problem at all. If you're going to be presenting your presentation today, Ed, go ahead and put it on the screen now if you want to. Meanwhile, let me go ahead and get some preliminaries out of the way. As is always the case, we invite your questions. Click the Q&A button at the bottom of your Zoom window. A text box will appear, and then you can write and submit your question. And let's do the safe harbor statement. This segment may contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. All statements pertaining to future financial and/or operating results, along with other statements about the future expectations, beliefs, goals, plans, or prospects expressed by management, constitute forward-looking statements. Any statements that are not historical facts should also be considered forward-looking statements. Of course, forward-looking statements involve risks and uncertainties. Ed and Greg, are you both there now?
Audio check. This is Greg. Hi, everyone.
Hi, Greg. Hi. If you're ready, then you can launch right into your presentation, gentlemen.
Okay, thank you very much. Okay, everyone. My name is Greg Delroy. I'm a Chief Technical Officer and co-founder of Helio Corporation. With me also is Edward W. Cabrera, our Head of Investor Relations. And I'll give an overview of our company and some of the exciting expansion plans we have in the future for unique space-based applications. And the theme of today is going wireless. And if you look back at technology over the past few decades, going wireless has been a theme among many different technologies, communications being one of them. The phone going wireless, that used to be a thing that was actually connected by a cord to a wall and had a conductor all the way to the telephone company. And of course, the first wireless phone in 1973 happening. And we all know where we are today with smartphones. So an incredible revolution. Same thing with the internet, Wi-Fi, now Starlink, satellites, and cable and TV as well. Many things have gone wireless. And our theme today is talking about power and energy going wireless. This has a lot of the same advantages. And we believe, given the technology and the growing space infrastructure and the growing space economy, now is the right time for wireless power. And so the solution that we're talking about is space-based solar power. So many people are familiar with ground-based solar fields. These are large arrays of solar panels on the ground. They take in sunlight, they turn it into DC electricity, and they put it on the power grid, and we get a nice, clean, renewable supplement to the grid. It's only a supplement, however, because it doesn't satisfy what's called baseload power. It's highly variable, depends on weather, doesn't operate at night. So at best, ground-based solar is going to be a supplement and not the base load, which is typically still provided by natural gas, nuclear, coal, and other dirtier forms of energy. Now, flip the script and take the solar arrays up into space. Now you've got sunlight 24/7. It's never nighttime in space. And you have a lot more efficiency as well. And you put all those factors together, and a space-borne solar array is about 5 times the capability of a ground-based one. And because it's always on, it satisfies what's called the base load power requirement, providing 24/7 energy, but this time from a clean, renewable source. And while other startup companies are busy trying to make stars on Earth with fusion, we are using nature's greatest fusion reactor, the sun. We're just bringing the energy collection a little bit closer to it. The challenge is, how do you transport the energy down to the surface? And this is where microwave focusing and beaming comes in. This uses the microwave band to transport the energy down to the surface. And it does so over a range of frequencies in which there's very little atmospheric interaction. So you actually don't lose very much at all going from point 2 to point 4 here. At point 4 is what's called a rectenna field. That's a fancy name for an antenna. And that takes the microwave energy, converts it to DC electricity, and that's converted to AC, which goes on the grid to serve commercial and residential customers, as well as unique solutions for specialty customers. So why now? Some of you who may be familiar with space-based solar power understand that this is an idea that's been around for decades, and it has. NASA studied this. The first ideas for this were put down in the back of an envelope in the 1960s, and then NASA took it up and other space agencies as well. And in fact, the technology has always been there in one form or another. One of the statements I make talking to people and investors is that had we chosen to, instead of going to the moon in the 1960s, we could have built a space-based solar plant as another demonstration of space capability. But no one in the room here would ever want to pay that electric bill. It would have been thousands of dollars per kilowatt hour. It simply wasn't economical at that time. So what's happened since? Well, we've certainly had advances in technology, certainly in array technology and miniaturization, lightweight materials, deployable technologies as well. But what's really driving this is the new class of highly cost-effective launch vehicles coming online. And one of the most visible examples of that is the SpaceX Starship, promising something in the couple of $100 per kilogram range. You also have the existing providers with Falcon, new ones coming up with New Glenn, Rocket Lab, and others. Currently, it costs thousands of dollars per kilogram to put things in space. But if we get down to the hundreds of dollars per kilogram, then lofting the infrastructure you need for something like space-based solar power becomes economically feasible. And the demand is there, not only data centers, but just the increasing electrification of everything, transportation, other sectors where electricity is taking up a larger share of the power distribution market. And this is a huge market. The huge expansion from 2035 to 2050, we're talking about going from a 30 terawatt hour global consumption to over 85. Global demand is going to increase as developing economies become increasingly electrified. And we want to do this in a way that is clean and renewable. The Earth's environment can't stand, I think, the amount of carbon we're going to be spewing into the air should we meet that demand with traditional fossil fuels. A bit about our company. First of all, we are an existing space technology company with a successful track record of putting things into space for various customers, including NASA, the Jet Propulsion Laboratory, NASA Goddard. We've worked big programs like James Webb and small programs as well. We're a big SBIR recipient. We have several phase 2 SBIRs for commercialization. We worked with foreign space agencies, including the French Space Agency, and commercial customers such as Honeybee Robotics, which is a subsidiary of Blue Origin, and Firefly Aerospace. We work with nonprofits, Southwest Research Institute, universities, and foundations like Breakthrough Listen on exciting new lunar applications, and stealth startup companies such as EarthGuard. We provide space-qualified hardware, which is now in operation in space. We also do complete mission architectures and technology development as well. Just another summary of what we've done. Europa Clipper, high reliability Class A mission. We handled the large-scale radar antenna deployables on that mission. James Webb Space Telescope, complex, large deployable systems and systems engineering, integration and test activities for that mission. We also go on the lower cost side. CubeSat constellations, deployable sensors and payload support for several lunar lander missions. We've got 2 systems on the moon now. We've got 2 more in the chute, plus recently starting an Artemis contract as well. So we're having an increasing lunar footprint. We have an ongoing space business, which has a lot of the foundational elements that you need to now start developing a longer term, higher return system like space-based solar power. Stock information is a bit out of date. We're on the OTC, and that's what we're trying to surmount, is to get off the OTC and onto the NASDAQ. We put out a press release about confidentially filing our S1. That process is ongoing very successfully. We all understand the problem. The cost of electricity is going up and the demand is going up. And there's all kinds of issues with expanding the existing energy infrastructure. Space-based solar power offers a renewable, clean solution to much of this to supplement and then perhaps become a major component of a clean, renewable energy supply as we increase electricity demand and increase the electrification of everything. And the opportunity is huge. So the global electric energy market is in the trillions. It's going to expand by at least a factor of 2 by 2035 and beyond. The solutions that we're working have to be economical. And that comes down to computing the levelized cost of energy, the LCOE, which is the cost of the system over its lifetime compared to the power it produces. And in our system, we've shown pretty conclusively that less than 10 cents a kilowatt hour with a good point design of 7 cents a kilowatt hour, assuming a system lifetime of 20 years, is absolutely feasible. And so this is competitive with current day electric utility costs. To give you an idea, we're talking about producing hundreds of gigawatts from a space-based solar power constellation. That's a significant fraction of the US demand. And it's profitable in the same way that a power system producing that same gigawatts would be on Earth. We use the same financial model to look at the cost and the return on investment. The development plan would use early adopters as we begin to test the technology, DoD installations, forward deployments, rapid power delivery to evolving needs of the defense industry, disaster response, any remote facility that requires energy, and then gradually expanding the footprint to remote towns and cities that find it more economical to get space-based solar power rather than lay down hundreds of miles of grid distribution, as well as data centers and other specialty customers that want behind-the-meter solutions. This is really important. It's sort of the Tesla model. You start out with the luxury market, and then we work our way down to the ultimate end use at scale, which for us is utility scale power, providing 100 megawatts or greater from an individual rectenna field to commercial, residential, and other customers. So investment highlights here, reasons to get involved. We've got a track record. Unlike a lot of other companies trying to do new space applications, we have a successful track record of things deploying and working in space on missions ranging from going to the moon to the outer planets to around the sun. And we have successful hardware and services on many active space missions. The goal is to combine these capabilities in mission systems architecture and hardware expertise into deployable space-based solar power systems. And if you look at the market, this is the 4 small dots here are typical space market applications, science and technology. That's NASA primarily for science missions, Earth observation, in-orbit services, space domain awareness. Those are all fairly healthy markets in the billions. But if we can crack power generation in space, that's $1 trillion market. It's a huge addressable market. So we are a small company. We're agile. We're innovation focused. We have existing revenue. Our leadership team is very experienced, and we're poised for growth, leveraging, again, our existing track record, moving ahead rapidly to exciting applications with big market potential like space-based solar. Just more on the leadership team. Ed Cabrera is our CEO. He's got decades of experience working the capital markets as an investment banker. He's leading our fundraising efforts and leading our entrance into the major exchanges. Mark Knopf is our CFO. He's been a CFO of public companies in the past and is a very well-respected CPA with decades of experience in business operations. And I'm Greg Delory. I'm the CTO. I was a space scientist, co-investigator, and project scientist on numerous missions. Also spent time at NASA in both a science and management capacity, and had the privilege of taking part in missions all over the solar system. I bring that expertise here to Heliospace. I got a PhD in physics from Berkeley. And then Paul Turin is another co-founder. Decades of experience on assembly test of mechanical systems on 120 different instruments on 30 spaceflight missions. And so we bring a vast heritage of space experience to all the programs that we have. We also have a Chief Science Officer, Stuart Bale. Again, decades of experience as a physics and solar physicist as well. Key expertise for some of our future endeavors, including space-based solar. This is our facility in Berkeley, 20,000 square feet. Important to emphasize that we design, then send out to have fabricated, take the parts back in, and do our own assembly and our own testing in a clean room environment, space environment chamber, and we deliver right from our facility. So we are hands-on. We have our own fingers on the hardware, putting it together and ensuring that it'll work as designed. And we deliver direct to the customer. This is a key part of our operations, obviously, where the tire meets the road, and the proof is in the pudding. So the space-based solar power solution we have has a number of important elements that make this feasible at this time. So you need a large collection area to gather the type of energy that we're after in space. And past approaches have used a single giant structure that's kilometers wide, a mile wide. And that's a difficult thing to do in space, building a giant, what we call monolithic solution. So we think that a sustainable and achievable space-based solar power architecture is scalable and modular. So it's modular so that you can make one small thing many times and then put a bunch of them up there that act in concert to produce the power that we want. So that is a scalable modular system. And ours is built, based on what we call the SolarSat. This is a small flat satellite that has a deployable membrane which combines solar energy collection and RF transmission. This SolarSat is about 15 feet wide, but it deploys into an area that is a large fraction of a football field. And that's really the problem in space-based solar. You need to fly something small on a launch vehicle and deploy it in something big. We then have a fleet of these that fly in a constellation and act in concert to each individually collect solar energy and then cooperate in beam focusing down to a rectenna field. The system is also resilient. So you can lose a few satellites, but you maintain the fractional capability. So if you had 100 satellites and you lost 2, you'd still have 98% of your capability. You can send up replacements over time. So it's resilient and scalable. It's also economical because once you figure out how to build one of these spacecraft, which we're well on our way to doing, you can stamp out copies in quantity with the economies of scale inherent in that process, and that makes the system economically achievable as well. Early revenue and development plan to give people a preview of how this will work. Our goal is to get to the demo flight as soon as possible in a couple of years. That just demonstrates in LEO that we can deploy to a large area. The real key test is very shortly after that demo flight is a demo flight of 4 spacecraft that we demonstrate can operate in concert together in microwave energy focusing. And at that point, we're ready to go. From there, it's a matter of time and materials to scale that to a 500 satellite system, which would give us 100 megawatts delivered to the terrestrial grid. And we plan to do that by 2035. And with the full-scale utilities, grabbing the niche customers on the way, so we have a smooth revenue increase. We're not revenue zero, waiting for one big hit in the future. While this is happening, we are continuing to operate as an aerospace company, building a foundation of capability and technology development on applications and jobs that are adjacent to this technology. We're signing customers. A new city in Florida It's going to be developed in the middle of the Panhandle area. And they want to have a new type of power source. We have an MOA with them for providing the energy as they develop their new city. And another important market is global. We've got an agreement in the works with the government of Peru to provide energy to some of their mining and remote towns in remote locations. Customer interest has been strong. That's going to continue to develop alongside the technology. And different classes of service. So I'm running out of time a little bit, but this will be available at some point where you can see the different levels of service we can offer and what the different price points are. So this is really a testament to the scalable system. And again, this is a huge opportunity. If we're successful in deploying 100 gigawatt constellations, which will take some time to develop, but it has a huge payoff, the revenue is substantial. It's measured in the almost 100 billion mark. Leading up to that, we have our first 100 megawatt systems and then our first gigawatt system. By 2030, we're at 100 megawatts and then scaling from there as fast as possible to get to $1 billion revenue at some point. Okay, so we're addressing an explosive industry, huge demand. We're early in the game. We're one of the first movers, but with the additional feather in our cap of an established space pipeline. And we've got a proven leadership team behind it. And we're revenue generation ready, generating revenue now, and that's going to increase in the future. Thank you very much, everyone, and happy to entertain your questions.
Thank you, Greg. Reminder to our participants, we would love to see your questions. Click the Q&A button at the bottom of your Zoom window. A text box will appear. You can then write in and submit your question. We already have many questions for you. One thing that stands out is that you're generating revenue today while simultaneously developing a much larger long-term opportunity. How should investors think about the relationship between those two businesses?
Yeah, the relationship does a couple of things. One, it indicates our experience, as I emphasized in the presentation. And two, as I mentioned, the types of technologies that we've been developing and deploying in space are what led to our entrance into space-based solar. We had a lot of the components and a lot of the relevant systems designed or in place that now apply to this exciting new problem. So we not only design and develop space hardware, but we're also experts at integrating the new technologies together and making them work in space. So one word to consider this is synergy. We're certainly going to be expanding our space products. That's an operation that can, keep going. And I describe it as a foundation that grows beneath the company. But then we have a good part of the company working on the space-based solar as the big hit coming up in the future. And this foundational aerospace capability is a very important facet of the company, because other companies that don't have that manufacturing capability, they have to partner, or they have to scale and learn themselves, or they have to take a risk with some other company building large parts of their system. And so we're not going to have those risks. We're not going to have those issues. We are tailor-made to scale organically and internally and smartly to develop an application just like this.
It's important to note we also have 0 on-orbit failures and over 125 flight instruments built. So it's going back to what Greg says, which is our flight-proven heritage.
Thank you, gentlemen. Space-based solar power has been discussed for decades, yet many people still view it as futuristic. What's changed over the last few years that makes this technology increasingly practical today?
Yeah, and of course I had a slide on this that said why now, but let me go into a little bit more detail there on a personal note. A decade ago, I would be one of those people that had said, yes, this is an interesting thing to contemplate in the far future. And I had the opportunity to revisit in depth the state of this particular possibility as an industry in space. And I was stunned and pleasantly surprised at what we found. A number of things are converging. Probably the most important aspect is launch. If SpaceX, Blue Origin, and other launch companies really are on track to lower launch costs to the hundreds of dollars per kilogram, then it's very easy to show how space-based solar becomes feasible. And then you add to that lighter weight materials, higher tech multifunction materials, and a lot of the extremely compact, large deployable technology we've been developing, particularly at Heliospace. You put all those things together and it starts to work. The pressure on launch costs is enormous. That is going to happen. It is going to lower in cost. It has to for many, many reasons. It's going to enable the whole space economy, including space-based solar.
The space launch costs account for about 50% of the cost. So a 90% reduction is what we're looking at to half of the capex on the system. And not just that, the world is starving for power. The shortfall is measured in trillions of dollars, and the tools we have aren't satisfying our needs, right? Terrestrial solar and wind are intermittent, no power at night. Our technology solves that, right? It's the next advance to solar power, and it's the solution that I think can be really effective for everything from AI data centers, industrial growth, to marginalized communities that need access to power.
Thank you, gentlemen. AI infrastructure and data centers have become major drivers of electricity demand. How does that changing energy landscape potentially create new opportunities for Helio over the long term?
Yeah, AI data centers have been in the news quite a bit. And, you have to separate the wheat from the chaff, so to speak. Absolutely, they are driving energy consumption in local communities and having a real impact there. And so they are one of the key users. They also have the interesting proposition of being one of the few ground-based infrastructures where there actually may be a case to do it in space. And so we'll see how that divides up, the power demand by AI data centers. Our point, to be clear, is to provide utility scale solutions for Earth. And so one of the clear opportunities there for AI data centers that want to reside on the planet, we can provide what's called a behind the meter solution. Right now, data centers are providing their own power in many instances because it's more economical or because local communities demand it by law or by policy. So they're bringing in turbines, talking about doing nuclear, bringing in their own energy sources by whatever means necessary. And we can be one of those energy sources with the added advantage of, instead of having to build a nuclear reactor or burn diesel or jet fuel in a turbine, you set up a passive rectenna field in an area that can be dual use. It could be a garbage dump, it could be a agricultural field, it could be all kinds of things. And setting up a rectenna field as a receiver is not a big expense. Meanwhile, we have the power infrastructure in space then to simply direct the beam onto that rectenna field. So no distribution lines or anything else coming in. That to me seems to be a very attractive potential for many AI data centers.
Your commercialization strategy has started with government, defense, and other niche customers before ultimately expanding toward utility scale deployment. Why did you choose that path?
We chose that path for a number of reasons. One, you learn a lot from early adopters and early customers. I think it's very important to engage customers as soon as possible. You learn from the market, you learn from them. And also, the sooner you can generate revenue from paying customers, the better technology validation you have, both for the engineering and for investors. The early adopters are willing to pay more. So you can develop the system more with customer revenue. And, we don't pretend to know everything ahead of time. And so we take all those lessons learned as we've scaled that system incrementally through the early adopters. So that by the time we get to utility scale, we're very well seasoned in terms of how to deploy this.
One of the key differentiators that you highlight is the ability to generate baseload renewable power rather than intermittent power. Why is that distinction so important from the perspective of utilities and large industrial customers?
So right now, the renewable energy sources we have are growing in proportion. I believe recently solar, for example, is now accounting for almost 20% of domestic consumption. If not, it's getting close pretty quickly. The issue is that you have weather and you have this thing called nighttime. And so while the increasing share of energy is being produced by renewables like solar, and same thing for wind, when the wind doesn't blow, you don't get energy. It'll never supplant what we call the baseload power provided by, I'll use examples, natural gas and coal. I mean, those can be on all the time. It's dependable, and it's essential to have a certain critical percentage of the energy supply at baseload capacity. I can't foresee a day when ground-based solar is robust enough to provide that baseload capacity. You would have to have huge amount of land use, all kinds of battery and backup redundant systems. You do those economics, and it suddenly becomes equally or better from an economic perspective to change the way that you're collecting the energy, and that's what space-based solar does. So if we want a clean, renewable, use energy source using the greatest fusion reactor ever, our sun, to function and supplant, not just supplement, but supplant the existing power infrastructure, it has to be baseload. And that's a key design driver for space-based solar. And it can easily fulfill that in many orbits and in many situations. So baseload capacity is our goal, because we don't just want to be a supplement. We want to be the baseload, the foundation of power for many communities on Earth.
Thank you very much, Greg. That is Helio Corporation, and you can reach us for more information on Helio at 1-800-RedChip, and you can email us at hleo@redchip.com. Thank you again, gentlemen.
Thank you, everyone.
Thank you very much. Coming up next, we've got Unusual Machines, ticker UMAC on the New York Stock Exchange American. Presenting today will be Andrew Camden, the COO. Andrew, are you there?
I am. Can you hear me all right?
Loud and clear. Please put your
Fantastic.
presentation up if you're going to be using it today. And
Will do.
as you're doing that, let me just get some preliminaries out of the way. As is always the case, we welcome your questions. Please click the Q&A button at the bottom of your Zoom window. A text box will appear, and then you can write and submit your question. Let me do the safe harbor statement. This segment may contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. All statements pertaining to future financial and/or operating results, along with other statements about the future expectations, beliefs, goals, plans, or prospects expressed by management, constitute forward-looking statements. Any statements that are not historical facts should also be considered forward-looking statements. And of course, forward-looking statements involve risks and uncertainties. Andrew, please go right ahead.
Awesome. Thank you for having us. You said I'm Andrew Camden, President and COO of Unusual Machines. Our ticker is UMAC on the New York American. There we go. Just reviewed our forward-looking statements. So, Unusual Machines, we are a drone component manufacturer based in Orlando, Florida, focused on domestic production. So, historically, drones and drone components have been made in the highest volumes in China. And there's an emerging demand for drones and drone components to be made domestically. And so we essentially were created to serve that demand. And it's been driving very accelerated growth for us just due to multiple pieces of U.S. legislation and rising demand-based defense. And so we've been quite busy setting up production facilities in Orlando to build drone parts here. These are some of the drone parts that we make. So critical electronics. So those would be flight controllers, electronic speed controllers, some of the basic analog video systems. But we also do drone motors. And so those are, obviously the part that spins and propels the drone. And so between having the ESCs, the speed controllers, the motors, and batteries, which is a component that we're adding via an acquisition of Upgrade Energy, we're putting together this powertrain strategy where we can help drone manufacturers by offering somewhat of a full end-to-end powertrain solution for their various platforms. The platforms that we tend to focus on would be what would be classified as small UAS. The FAA would define that as any drone under 55 pounds, but typically, we specialize in really that like 1 to 5 pound lightweight small drone. Typically, there'd be multi-rotors and swing a prop from between 3 to 10 inches in size. Anything larger than that is really where you get into different supply chains. So this is where we found as our sweet spot for kind of an underserved market that we could help fill. The term you may have heard if you're following the drone space is attritable. That means it's a low-cost drone and acceptable to lose, either because there's a payload that's meant to be delivered one way, or because you could be flying it into a reconnaissance mission where if it bumps into a wall or gets stuck in a tree, it's not a high cost to lose, right? So the idea with these drones is not to make them high-end aircraft, but something that's produced at volume and is more of a tool rather than a full-blown aircraft. This is how the smattering of parts that I ran through fit into a drone. So as you can see, we actually offer every part that would be required to put together a drone. And so, that positions us so that customers can work with us either just to use one component or virtually build their entire platform. Now, what we don't do is we don't compete in drone technologies or building drone platforms. So where our customers differentiate themselves would be on the different technologies that they'd integrate, the different ways that they approach autonomy, the different configurations that they build to specialize for different mission sets or use cases. So, while you could take all of our parts and put together a drone, what you'd be left with is like a manually controlled FPV drone, which has its place in the attritable space. But what we find is customers prefer to shop pieces of it and then bring their technology in. So I mentioned this powertrain strategy. So you could envision customer coming to us for the motors, the battery, and the speed controller, and we're able to provide the data sheets that show when you buy these 3 components in this combination, here's the flight time, here's the payload. We've solved that problem, and then they'll bring their own flight controller in and be able to provide a level of autonomy that's specific to their platform. And then if they come back and say, well, we need a little bit more flight time, say, well, great. We'll just swap out the motor, just swap out the battery, or here's a whole different set of recipes that we figured out from a powertrain perspective. Essentially, what I'm saying is we'll try to solve the dumb flying aspect of it. We'll make the platform fly, and then our customers find the use case for it and make it smart. Right now, there is overwhelming demand, and it's largely driven by defense. We come out of more of the hobbyist segment, so our brands Rotor Riot and Fat Shark are really pillars in kind of what pioneered a lot of this technology, which was the FPV hobby. And now today we're seeing that FPV technology being adopted to drive the defense use cases, which really the Ukraine conflict proved can be game-changing for warfare. And so today we see defense as what's driving most of the volume for the drone segment. But looking forward as a parts provider, we want to position ourselves for the next waves of demand, which I think, delivery is something that's been talked about for a long time. And as the FAA provides definition for Part 108 and enables one-to-many control and beyond line of sight, I think that's when we will see delivery really become, something that's executed in practice. And we would like to be positioned to be part of that wave of delivery demand. And then from there, consumer is a true consumer, not a hobbyist consumer demand cycle is where we think the true largest demand will come from. If you look at DJI is a very large China-based drone company that is now being pushed out of the US due to a variety of legislative actions that we'll look at in a minute, and that's leaving behind somewhat of a market vacuum for a consumer drone segment. So this will be something that we'll see over the next 2-3 years, and we look for the American drone company that will fill that gap and become the drone on the shelves at Best Buy. And as Unusual Machines, we look for how do we play a part in that? How do we have parts on that drone, right? But again, today, there is just surging demand based on the defense uses and the number of different drone programs that are being run in America. This is a bit of a snapshot. I look forward to adding our Q2 numbers on here. I wouldn't fuss about grabbing rulers and trying to trace and look for exact guidance. Rather, this is meant to illustrate our strategy and acknowledgement that the investment that we have to make comes before the realization of revenue. And we have a pretty good track record of committing to material, committing to real estate, committing to building the factories, and forecasting the demand that's going to be there, and being able to succeed in growing our revenue because we're prepared to be material complete and prepared to have the production capacity. I mentioned the regulations that are really shaping the drone space right now. So the NDAA, the National Defense Authorization Act, this has been renewed year after year and has continually placed restrictions on where drones and now drone components can be sourced from. So this act would establish what's a covered foreign country and prohibit the use of drones or drone parts from certain foreign countries in any drone that would be flown for a government purpose. And now more recently and more severely, the FCC this past December has created a new piece of regulation that expands the list of what's covered as a drone component to be broader than what had been previously established by the NDAA, and also makes a requirement that these components be sourced in America, and not just from the covered foreign countries per the NDA, but any foreign country. And so this is what is having the biggest effect on DJI. So any drone that already carries an FCC license is clear to be sold in the US, but securing a new FCC license is going to require that drone is built, not only with US-made transmission components, but also US-made motors, US-made batteries, US-made cameras. So this created for us, a sense of validation that our strategy has a place, beyond just defense use, which was provided for the NDAA. But I mentioned these demand cycles that we see coming beyond defense use, and the FCC action is the first bit of legislation that I think really validates that US-made drones and US-made drone parts are going to be more than just for defense, but they're going to have a significant place in enterprise and consumer segments in the coming years. We look at the demand for defense right now as a way that this whole industry, the whole American drone industry, is scaling its industrial capability and capacity. So there's a demand today for drones for a variety of defense programs, and that is driving companies like ours to build the capacity so that we can provide for the defense programs today, and we believe the other demand signals in the future. So if you want to get an idea of how to try to scale what this looks like, we would point you to the Drone Dominance Program, which is a very transparent and public-facing drone initiative. If you go to drone-dominance.io, the entire program is outlined. You can look at the requirements, you can look at who's competing, you can look at how the competitors are doing, you can see what quantity of drones will be ordered and what price they will pay. So we're in the middle of kind of the first two gauntlets where 30,000 drones have been ordered from 11 vendors. So we have so there are drones being produced right now from a variety of vendors for this program, and now they're in the process of doing another selection to order 60,000 drones before the end of this year. And next year there will be, in 2027, two more gauntlets, and across which over 250,000 drones will be ordered. So if you take one of our components like motors, that's signaling a demand for 1 million motors a year that have to be made in the US for one government program. So typically you can look, we would look at the Drone Dominance Program as a very significant slice of, but not the total demand volume for US defense programs. But it's a good place to get a temperature of the water. So we ran through all these drone programs and regulations that have kind of enabled our model. And I think what we're able to leverage is really our timing in all of this, is that before this was maybe as easy to see as it was now. And we started this about 2.5 years ago. So we IPO'd in February of 2023. RedChip was part of putting our media together for that, which was so it was a fun time, but it was a less certain time when we were going out there and saying, well, we think that US-made drone components are going to be pretty significant. And now you flash to today, and oh yeah, it's pretty certain. So we've got a good 2 years of momentum behind us, and as this story has become more clear, we've had a lot of success in the public markets, turning that support into funding. So we have significant working capital that we're able to deploy, over 300 million that we can work with, and a strategy for how we're going to leverage that, materials and facilities and production equipment. And moreover, our team is built of people that have a lot of experience in this industry. I come from Rotor Riot, been involved with FPV drones since 2016. Launched US-made FPV drones via Rotor Riot in 2019. Alan, our CEO, was previously ran Fat Shark, which is now one of our brands, building headsets since 2007. We acquired Rotor Labs, which was making motors in Australia since 2022. So we know the products very well. And these products being parts, this is a bit of a landscape of where different part manufacturers kind of fit into we see it as a grid of region and segment. So we are the U.S. manufacturer of parts that's focusing on what we call the value segment. So all our products are meant to be price competitive with what our drone manufacturing customers had been, previously acquiring from China-based manufacturing sources, right? So if you look at some of the other companies that are in the premium segment, right, they would be much more expensive, but much more feature rich. So again, just highlighting that we're solving, as I like to joke, the dumb flying part of it, right? We're making the powertrain, and we'd look to some of the part manufacturers in the premium segment to provide more of that high tech autonomy. So when you think of us, think of the high value, high volume drone parts. We've been steadily growing our revenue quarter over quarter. We look at, as a hardware manufacturing company, the best you could hope to do is to double over quarter over quarter, which is just insane. Breakneck, like something's going to break at that rate, right? So really internally, we set a goal of a 50% growth quarter over quarter is what we would love to see as an internal rallying cry. You will see our margins continue to be a bit lumpy. We're building this business to support a 40% growth margin at maturity. And if you look at Q1, Q2, Q3 of 2025, you can see that we were flirting with that 40%. And if you look at those revenue bars, it was somewhat steady at that point. It was before, it was right in Q3 is when we started to invest heavily in setting up our manufacturing facilities. And then you see how that has affected our ability to grow the revenues in the subsequent quarters. But you're also seeing some bumpiness in margin, because anytime you do new process implementation, new product implementation, there's going to be scrap, there's going to be lessons learned. So we today are very focused on growing the revenue, and less concerned about the margin at this point. If we have to, I want to say, sacrifice margin in the short term to make sure that we seize all of the potential growth today, that's how we think about it. Our cap table is very clean. It's all common. The only thing outside of the common is our equity pool for employees, and we do like to keep everyone incentivized in the success of the company. Here's a look at our leadership team, in reference to some of the experience points I had mentioned. And then again, just to recap, we talked about us as a drone parts manufacturer focused on the high volume, high value drone parts, looking at a powertrain strategy of motors, speed controllers, and batteries, pending the closing of Upgrade Energy, with a lot of demand driven today by the defense cycle and NDAA compliant drone parts and supply chains. So with that, love to open it up for questions.
Thank you, Andrew. Participants, if you wish to submit a question, first click the Q&A button at the bottom of your Zoom window, then type in your question into the text box and submit it right there. We already have several questions for you. Rather than competing directly with drone manufacturers, you've positioned the company as a supplier of the critical components that power those platforms. Why do you believe that is the most attractive place to be in the value chain?
Well, I think it's the most attractive for us, because it's where our expertise is, and it's where we saw, a real gap in what was being served to the industry. There's a lot of competition to to be the best drone manufacturer, to have the best technology, the best autonomy, the best camera system. And we were looking at the industry, and I'm like, guys, someone's going to need the parts for all of this. So, we think we're paying attention to how the drone industry as a whole is going to mature. And one way it could go is something like the automotive industry, where there are tiered suppliers. And if the drone industry does mature into that sort of structure, we look at ourselves as the premier tier one supplier to the drone OEMs.
Thanks, Andrew. As government programs increasingly prioritize US-made components, are you seeing demand accelerate because customers are planning ahead rather than simply responding to existing orders?
Yeah, it's a mix, and what we try to do is work with our customers um, to help alleviate some of the uncertainty that there might be in around the requirements. Because I think there's no question that there's a demand for US made drone components. That's fixed certainty at this point. What is still being where the uncertainty comes from is what are the exact requirements? What for a given program? What's the flight time? Um, what's the payload? Right. So the exact sizes that they're looking for may not yet be defined. So we look for ways to work with our customers where um, we can agree on volumes before we know exactly what the sizes will be, and we leverage our capitalization to prepare for a variety of outcomes. So we'll commit the material purchases for a variety of sizes because supply chains are brutal. I mean, it's 6, 9, 12 months out. So if we waited until there was certainty, it would be too late. So we have this responsibility to be material complete today so that our customers can react to requirements as they're defined and go to market.
You've been expanding manufacturing capacity, automation, and headcount all at the same time. At what point do you expect those investments to begin translating into even greater production scale?
Mhm. Well, I think we've already begun to see it. If you look at our little bar graph earlier, it's getting pretty steep there. Um, I'd say the next significant point in time I'd look to would be the end of this year is when we expect to have our high volume, highly automated motor production line turn on, and that will take our motor volumes from today we're producing about 20,000 motors per month, and with our high volume line, we're projecting to produce over 100,000 motors per month. Which again, if you look at the one government program that's kind of easy to follow, the Drone Dominance Program. Next year, they're going to procure 250,000 drones. 200, if it's quadcopter, 250 times 4, that's 1 million motors. So at our current production rate, we would just begin to be able to seize the total SAM of that program. So looking to see that high volume automation come online by the end of the year, and the government programs continue to run on time going into next year.
One of your strategies has been to invest aggressively in inventory before demand fully materializes. Can you explain how that approach gives you an advantage in today's market?
We're the guys that are in stock. At least that's the idea. We know that there's uncertainty in the programs and the performance requirements that the drone manufacturers have to deal with. So if we can solve that problem for them, right, and say, look, whether it ends up being this size or this size, we're prepared to fulfill your order. I believe that gives us a pretty good advantage over, so another entity that might not be able to preload the supply chains so that they can be nimble tomorrow.
And we've got about 45 seconds left for this final question, Andrew. Your balance
Rapid fire.
sheet, it's exceptionally strong, significant cash, no debt. How does that financial flexibility position the company as the domestic drone supply chain continues to develop?
I think it's all about being able to work the supply chains which typically have very long lead times, and being able to deploy that capital to create flexibility. As we had, talked about in some of the previous questions, right? We know that there will be demand for, say, look at different sizes of motors. There's going to be demand for all those different sizes. So we can be a little more risk forward, commit to the materials for all those different sizes, and knowing that, okay, well, whatever hits for today's program, that's great. We're material complete. And these other material investments we made, we know they'll have a place in the near future.
Thank you very much, Andrew. That's Andrew Camden of Unusual Machines, UMAC on the New York Stock Exchange American. For more information on Unusual Machines, call us at 1-800-REDCHIP or write us at umac@redchip.com. Thank you very much, Andrew. Next, we've got Kent Wilson. He is the CEO of Dynamic Aerospace Systems, OTC ticker BRQL. Kent, are you there?
I am here. Thank you for
Excellent.
the invite.
You're very welcome. We look forward to hearing your presentation. Your company presentation, if you're going to be presenting it today, please share your screen now while I get some preliminaries out of the way.
Yep.
As always, we welcome your questions, participants. Click the Q&A button at the bottom of your Zoom window. A text box will appear. You can then type in and submit your question. Safe harbor statement. This segment may contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. All statements pertaining to future financial and/or operating results, along with other statements about the future expectations, beliefs, goals, plans, or prospects expressed by management, constitute forward-looking statements. Any statements that are not historical fact should also be considered forward-looking statements. Of course, forward-looking statements involve risks and uncertainties. Kent, please go right ahead.
All right. Thank you very much. I appreciate it. First of all, I want to say thanks to Dave and the team at RedChip for having us on, and also the other presenters. You guys have done a great job. I'm Kent Wilson, CEO of Dynamic Aerospace Systems. I'm fortunate enough to lead a dedicated team of employees and executives that really have a mission to do profound things. And it's incumbent on CEOs to look out at the future, 5, 10, sometimes 15 years down the road, and really try to determine what their industry holds and what value it can bring to humanity, or goods it provides, or services it provides. And we hold that to be true here. When I'm looking at the future, I regularly think of Steve Jobs and what he said back in the 80s. He was reading an article on human locomotion, bipedal movement in Scientific American, and they were talking about how inefficient humans were compared to other mammals. But the invention of the bicycle took the human from being very inefficient to the most efficient mammal on the planet. And Steve equated that same premise to computers and what he saw for the future. And if you look at today, he was right. Computers have enhanced our lives in unique and profound ways. And so when we look at the future, we see autonomous systems in that same light. I believe we're at the precipice of profound changes in what autonomous vehicles and systems will do for humanity. And the goal is not to replace humans, but it's to enhance what we do. And so with that premise, I mean, we have, extreme passion on solving that need. And so what we're doing today is solving those problems that are not problems, but solutions to the needs that are 3, 5, 10, 15, even 30 years down the road. So that's a little bit of an intro to what we are. We're a US-made drone manufacturer that is looking at autonomous systems as really the next major frontier for humanity. So I'll give you some investment highlights and a little bit of background. Our company structure, we are public, but we trade on the OTCQB, ticker symbol BRQL. Historically, we've owned the assets of these aerospace assets, we call them, for 15 months now. They've had some pretty large investor backing prior to our ownership. Bessemer Venture Partners invested into these assets, Eclipse Venture, TechNexus, and Alpine 4 Holdings. Collectively, we, over the last 8 years, $38 million has been invested into our IP, which is, quite substantial and will lead into some of the mission readiness that we believe that we have to accomplish our mission and our objectives. We currently have 10 patents filed. One of them has been issued. The other 9 are provisional, but we believe that they're very defensive in nature and will help us accomplish our goals. Our key technology portfolio is really based around how battery systems work within drones, how autonomous flight works together with other systems such as robots, drones, vehicles, and the ability to be modular in what we do so that we're not pigeonholed, such as competitors like DJI, that they have a very unique ecosystem. It's hard for them to adapt into sensors and cameras and other things that might be developed by other innovators. We're not that way. We're agnostic. And then finally, for investors that are looking at us, we plan on listing on a major exchange in early Q4. And so we have a lot of exciting things going on here at Dynamic Aerospace Systems, and and as I tell people, we're just getting started. So here are some of the problems that we're addressing that I view, and I believe the industry views, as our current state and getting to the next step. First of all, up until a few years ago, many of the drones out there were manufactured in the United States. In fact, you just saw UMAC come on, who they're a supplier of ours, great company. Alan and team do a great job over there. But they're solving that problem. They're developing US-made components, and that's been needed for a long time to repatriate and build our US supply of drones. And I believe that our educational backgrounds in the United States and our scientific and engineering are the best in the world. So why not build the best drones here? And so we're solving that problem here of banned drones, basically DJI and other foreign competitors. The other problem is inefficient last mile delivery infrastructure. The drones that simply can't meet the rigorous demand for an agile continuous flight operations that, whether you're delivering a package or you're delivering a service or you're providing a service, they're really just not ready for that yet. And so that's a major issue. Limited endurance and payload flexibility. Right now, the drone subset, I would say, of UAVs that are out there, they're very compartmentalized. I don't think that they solve a global problem of what's going on in flexibility. Fragmented drone ecosystems. One of the biggest complaints we get is, I have this need and I use this drone, but I have another need and that drone can't do it and they won't work together. I got to go to another manufacturer. Well, that's a big problem. And so then finally, regulatory issues. Let's just call a spade a spade. The United States has been very slow to act in this, and rightly so. This is, a major endeavor. You're talking about unmanned vehicles that are flying in the sky. There are risks to that. But that is one of the major issues that we face as a drone manufacturer, and our customers face as being able to use it, is legislation simply just hasn't caught up yet, at least in a way that is meaningful to derive profit through operations. And so those are the problems that we've identified as an issue that we need to solve for. So we look at things quite holistically as we view the market and the global landscape. We talked about longer endurance. Our drones are specifically designed for that. Maybe give you an example. So if you're Amazon or Walmart, and you have a customer that is elected to have their package delivered by drone, the customer really doesn't care that it's windy outside or that it might be raining or that it's snowing. They want their their package delivered. If you are a operator and providing a service and you're helping, let's say, a power company observe or detect something on their power lines, they don't really care that it's windy outside or snowing. They want to solve the issue that they've had. And so a major problem, as I've identified before, is a lot of drone manufacturers can't work in, I would say, very adverse conditions. Our drones are really solving that. And as we get into our drone subsets later, we'll talk a little bit about that. So we think that's a very valuable solution that is overlooked by the industry and that we're solving too. One of the other major areas is, and we filed a few patents on this, is how do drones communicate together and work well together? It's beyond AI. It's how do you connect them together? So we've filed some patents around a meshed-based delivery network, and that network can also coincide for services. It doesn't have to necessarily be for delivery, but it really is how do we effectuate flight efficiently for packages and other services that drones or autonomous vehicles do. Multi-mission capability. We have three, as I said, subsets of drones. All of them use a similar architecture for flight operations, which allow them to work together. So if we have a customer that wants, say, a US-1 to do flight observation for security, but then they need to have a drone once it detects something that can go into a contested space, we have that type of drone and they're communicating together, versus having to go out and buy a different manufacturer, a different ecosystem to learn on. We're all congealed together to solve many different problems using 3 different drone types. And we believe those drone types are the prefaces of what is needed in a global solution. So regulatory aligned systems. This is important. When we looked out at the future, and I looked at it 5-10 years down the road, we want to be in flight practicing at the level that government agencies expect us to do that. And in the US, it was difficult to do. You have to get Part 107 or even Part 108. You have to file for BIVLOS operations. And it's at the very least, it's convoluted, so it's difficult. So we took the initiative to move into a region, at least for this purpose, of testing and evaluating over into Dubai, where they have a regulatory body that is very prone and wanting and desiring to do these type of flight operations. Now, we'll add the war that's going on has slowed that down, but we still see it as a viable place to be for this initiative. But the bottom line is we're not waiting on the United States to develop to the point where we can be in and effectuating the use of our drones in a consumer-based ecosystem. We're over in Dubai. We've gone through several levels of testing with the Dubai Civil Aviation Authority and Noon Fulfillment, which is the Amazon of the Middle East, and we're doing that today. So that's important to know. We're not waiting on the future regulatory to come to us. We're going to where we can do it. And then scalable infrastructure partners. A lot of companies will talk about, what they want to do. We're in practice doing it. We partner with UMAC as a supplier. We recognize their importance in the market. PRG, Potomac River Group, government contractor that is, helping us scale at the government level. Smart drop hubs. They are a thought leader and developer of the airspace ecosystem and landing area over in Greece and throughout Europe. Noon Fulfillment, what I just talked about, the Amazon of the Middle East. They do about 500,000 deliveries a day in Dubai alone. And we have an MOU partnership with them. And one that's not on the list that I think is worthy to talk about, these two gentlemen have created something remarkable, is the group over at Flightbox, which is a chain of custody type of delivery apparatus that allows you to attach to any type of drone. And we're partnering with them on that as well. As you get into packages that may need a chain of custody type of delivery certification, we're working with them on that as well. So great job that those guys are doing. So that's our integrated ecosystem. So let's go a little bit into the drones that we offer. The US-1 is a multi-rotor UAV. We hold a patent called the battery as the airframe. And that's an important patent because if you look at the challenges that this drone solves in the marketplace, It's quite, there's many fold, but it's a versatile. So we'll talk about the overview. It's a versatile platform designed for military, first responders, surveillance, and logistics. This drone with a 5-pound payload can stay in the air for about an hour and 10, hour and 20, maybe an hour and 30 minutes, depending on wind conditions, and not have to come back to charge. Competitors say they can do about 30 minutes with this type of payload. Stationary, not flying, just stationary like a helicopter. And that's important. We're doubling and sometimes tripling the airtime with the same size and footprint drone. And we're able to do that because if you look at this third picture, the blue, you can see the batteries inside. Well, we use the battery rigidity as well, but also the amount of energy density. It's the same premise that Elon Musk had when he entered into Tesla. I'm not sure if you're familiar with that story. He came on board as one of the early investors and his engineer, and they were at the time, as Tesla was like shoving laptop batteries in the trunk of a Lotus Esprit, and it could drive 30, 40 miles. And it was a novel idea, but it really didn't solve any problems. And so their engineering team, along with Elon, came up with the idea of let's build, instead of putting batteries in a current car, let's build a car around a battery that can drive 200 miles. And that genesis of thought process really transformed the automotive industry. It created an incredible level of energy density in a vehicle that allowed it to accomplish a real-time, meaningful task, such as driving for a great distance. And so the same premise with this drone. The batteries make up the airframe, and it gives us incredible energy density. One of the other benefits to it, creates an incredibly stable drone, very easy to operate. Because its weight is distributed, it's very capable of flying in extreme weather conditions. In fact, the United States Air Force currently has these, in their guarding nuclear missile silos. And I will just tell you that they've been able to fly in 60-mile-an-hour winds with, where other drones that may be, accomplishing that same surveillance goal can't do that. And so it's a remarkable product. We believe it is valuable in our future vision and what we want to do. And we have a very defensive position within it as well. And then it really, if you look at this drone, it's initially designed, it's capable of replacing a helicopter. And when you think about like police and law enforcement departments that are having to use a helicopter to provide on-site, emergency situations, that's an expensive, budget line item. 3, 4, 5, maybe $6 million for a helicopter, plus pilots at several $100,000 a year, plus flight hours, and you can replace that with a drone that is a lot easier to operate and a lot more cost effective. And so that's the value added piece of this puzzle with that drone. So that's the US-1. This is the G1. This is our VTOL aircraft. It is about 13-foot wingspan. It's capable of carrying about 20 kg of payload and flying for 11 hours. It can fly into areas that doesn't have a runway. On the flip side of it, it can fly at great distances. It's a hybrid. It's powered by batteries for lift, and then powered by an engine gas motor for flight operations. We've demonstrated this in several medical scenarios in Africa. We've completed what's called the VTC testing over in Dubai with this aircraft. And we see it as a valuable piece of the puzzle for either ISR platforms or even logistics deliveries into areas that cover great distance, but also may not be readily available to airports. Also, the military aspects of this for surveillance are also quite high. And this is our smallest drone. This is the Mitigator. Frankly, I see it as one of the largest volume sellers for us. This is the hex configuration. It's the 6 props that go along with this. We also have a quad for a different type of flight operations that give a little bit less agility, but more flight time. This drone, whether it's a quad or hex, has some unique characteristics. The Mitigator, if you look around at this drone carefully, you study it, It's encased in carbon fiber, and we do some unique things to make the carbon fiber even more protective, if you will. And it's designed to fly indoors. One of the greatest problems that we've received from law enforcement and other agencies is they have drones. They're not really designed to fly indoors. There's challenges with flying indoors that you don't really present themselves outdoors. If they currently bump into a wall, the props fall off, the things rendered inoperable, and that's not designed to really work indoors well. With the way this is designed, it can bump into walls. We've actually crash tested this flying into a wall going 30 miles an hour, which is pretty interesting video to watch. It would hit the wall, fall to the ground, turtle back up and fly away. So very survivable. And then if you look at the center console, on each side of the center console, you'll see these little latches. Those are for less than lethal ordnance, flashbang, smoke, pepper spray. And so one of the biggest challenges that after talking with law enforcement is when they're moving into, say, a contested house, a meth house or whatever, that they have to get involved in. If they throw a flashbang or some kind of ordnance into the property, there's the small but chance that it could, affect somebody that is innocent. And so this is a drone that can enter a property, fly up, identify the perpetrator, and if needed, deploy the less than lethal ordnance. So you have extreme rugged capabilities, a unique deterrence for its operators to deter perpetrators. And the feedback that we're getting from law enforcement, we just concluded a 45-day demo with the Arizona Department of Public Safety in Arizona, huge law enforcement agency. Feedback is one of the best drones they've ever flown. The capabilities indoors are remarkable, and it's everything that we knew they would say. But this drone is, really a law enforcement gem. Outside of that, when we look at future projects like drone dominance, this is a drone that we believe could solve some of the future drone dominance things. So as UMAC is spooling up for production with their motors, but this is a drone that could be pivoted pretty quickly to lethal ordnance, and we're very proud of that. So, all right, moving on from our drones. If you look at the last 15 months and what we've accomplished, the team, I'm just so proud of them. Everybody over in our facility in Ann Arbor and our management team and our board of directors has just been heads down, enhancing our systems in ways that, really propel us into the future well. Over the last 15 months, we've enhanced our G1 and US, what we call from our C3 configuration, which is more, low-level prototype, or high-level prototype, low-level maybe production, to really designing these drones to be mass-produced. That's our C4 production-based. We've upgraded the avionics, GPS, landing gear, wiring harnesses. We redesigned the circuit boards. Hats off to Greg Paterno, my vice president of engineering. Phenomenal job at that. So we really feel that these drones, well, we acquired these assets 15 months ago. We've done things to them that have just greatly enhanced their capabilities and really brought them into the next 10 years of operations. We've enhanced the autonomy, such as the mitigator. We've added optical flow and visual navigation for GPS denied environments. One of the issues that I would say law enforcement has, if they're going into a commercial structure where there's concrete, you may not be able to get signal. We've done some things operationally to allow them to operate the vehicle, something our competitors can't really do. Connectivity and control. We've implemented our mesh networking, some of the things we've talked about before, to be able to control our drones and operate well together. Added a secure VPN. We've integrated with SROC controller and many other handheld integrations that really enhance our agnostic sensor or other platforms that want to work with our drones. Our system reliability. This was a huge thing that many drone manufacturers have. We've hardened our electronics. We've optimized the CAN bus, and we've added enhanced capabilities across all of our drones' electronic systems. And this really helped us lead into what I'll talk about in the coming slides, our military versions of these drones. Mission integration. We've launched a central excuse me, I have to move this, centralized mission control and multi-stream video support. And then we've enhanced, really importantly, enhanced our BMS systems to allow faster charging, enhanced battery life, all those things that we needed to work on as a company to really give the customer the best solution for what they need. And then new capabilities. So we talked about all these enhancements we've done. In that same time, we've also added some new capabilities. So we developed on the Mitigator platform a counter UAS drone, basically to the ability to go out and using kinetic energy, take another drone out of the sky. And with that, a drone docking system for automated deployment. This is very important for our military and defense contract potential customers. All right. So when we look at the dynamic aerospace competitive advantage, it's fourfold, right? You have an integrated UAV classes. We're integrating all three of our UAVs to work collectively together. We see that as a huge customer complaint that other drone manufacturers don't do, and we're solving that with our unique drone systems that work well together. We're sensor agnostic, and our systems are modular. So if you want to build upon what you currently have, as sensors are expensive, we can incorporate that into our drone subsets. We are manufactured in the United States, and our product is supplied in the United States. A growing industry, I mean, there's a lot of companies that are gravitating to that. Just note that we've been doing it for quite a long time now. And then we have integrated capabilities. So we're not just looking at defense, which I see as a great market right now, but it will somewhat get saturated over the next 5-10 years. We're looking at also the commercial aspects of it. How do we get into logistics? Logistics is a $1 trillion industry. And so all of our drones are dual purpose, whether it's carrying, a sensor for detection in a defense apparatus or a bomb or some kind of explosive or a package for a consumer. All of our drones are designed to really carry stuff efficiently. So that's our advantage. When we look at the UAV market size by 2030, and our numbers add up to about 45, 46 billion, but the global market is expected to reach about 90 billion in market opportunity. We look at it from really 5 different industries. We're looking at law enforcement. That's about 3 billion. For that, it's all 3 of our drones that are capable of serving that industry. Military and defense, again, it's all 3 of our drones. It's about 22 billion by 2030. Logistics, about 10 billion. And that's really primarily around the US1 and G1. Healthcare and medical, low-hanging fruit industry that's ripe for autonomous delivery, about $1 billion by 2030. And then industrial inspection, that's really more commercial. That is really designed, how do businesses use sensors and those type things to, better accomplish their services that they provide to the industrial and commercial industries. And we believe that's about a $10 billion market opportunity, and really we'll use the US1 and G1 as well. So combined, we see our market by 2030 to be about 46 billion. And, we pretty excited about where we're headed with that. Okay. So a lot of people want to talk about what they want to do. I just want to really enforce that we're talking and doing it. And validation, credibility is built around validation and partnerships. So we've engaged the Dubai Civil Aviation Authority. We're in the process of accomplishing EASA certification, which is the European standard it's the European equivalent of the FAA, and what they want to do here. But in the UAE, in the Gulf states, they use EASA certification. So our drones are going through that process. We've completed VTC testing 1 and 2 in Dubai. That's very important. And sorry, just want to make sure am I bumping up against time here?
We still have 1.5 minutes.
Okay.
If you want to take a question.
Yeah, why don't we do a couple questions?
Okay.
So we'll just pause there. I'll just kind of go back to this
Okay.
sheet.
Well, we appreciate everyone who has written in, and we've got many questions for you. Let's get to at least one here. One of your recurring themes is mission flexibility. How important is it that your aircraft can be rapidly configured for applications ranging from logistics and public safety to infrastructure inspection and humanitarian response?
Well, I mean, that's a question a lot of our customers give us. Like, how can we adapt your system to do what we want to do? So again, it gets back into our mission agnostic, plug and play type of drones that we build. So we build the drones, you provide the service, and the reality is you have a drone that is customizable and configurable, whether it be, a military apparatus or a commercial apparatus, a sensor or whatever. We have the ability to accomplish that. I hope that answered that question.
Your patent portfolio extends beyond aircraft into delivery systems and logistics infrastructure. How should investors think about the value of that intellectual property over the long term? Just 10 seconds to answer that. Sorry about that.
Yeah, no problem. It's valuable across many different fronts as we look to be defensible in, the way we manufacture drones, but also how our drones talk. Those patents are going to protect it.
Brilliant, Kent. Thank you very much. Sorry we had to wind it up this way, but we appreciate your excellent presentation. Again,
We appreciate it.
you got
Thank
it.
you.
Thank you, Kent. Dynamic Aerospace Systems. For more information, reach us at 1-800-REDCHIP or write us at brql@redchip.com. We've got another presentation here at the 12:30 Eastern mark. It's Fly Exclusive, ticker FLYX, on the New York Stock Exchange American. Presenting today will be Matthew Lesmeister, COO. Matthew, are you there?
I'm here. Can you all hear me?
Hear you loud and clear. Let's put your presentation up on the screen while I get some preliminaries out of the way. As is always the case, we welcome your questions. Click the Q&A button at the bottom of your Zoom window. A text box will appear. You can then write and submit your question from that box. The Safe Harbor Statement. This segment may contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. All statements pertaining to future financial and/or operating results, along with other statements about the future expectations, beliefs, goals, plans, or prospects expressed by management, constitute forward-looking statements. Any statements that are not historical facts should also be considered forward-looking statements. Of course, forward-looking statements involve risks and uncertainties. Matthew, please go right ahead.
All right. You guys can see my presentation in front of you?
Yes.
All right. Perfect. I'll skip my forward-looking information disclaimer since you all did that. So I'm Matthew Lesmeister. I'm the Chief Operating Officer here at Fly Exclusive. And I'm going to assume some of you don't know anything about private aviation, so I might talk a little bit about the fundamentals of the industry to help you get a sense of what we do and how we operate and differentiate ourselves in this market space. What we are is a world-class private aviation company based here in Eastern North Carolina. What you can see actually behind me is our new headquarters based in Raleigh, North Carolina in North Hills. And we have a presence in Kinston, North Carolina, where our MRO is, where we service our fleet of over 80 aircraft across three major categories. We have light jets, which comprise of Citation CJ3s. We have mid-jets, which comprise of Citation XLs, and we are rapidly expanding in the super mid space with the Bombardier Challenger 300 and 350 airplane. We have a broad range of products that we differentiate ourselves with in the market, and 50% of our annual revenue is contracted on an annual basis. I will get in the presentation, get to a product mix slide that will share a little bit about how our customer mix stacks and our annual revenues stack up, but 50% of that is contracted on an annual basis. We've been recognized as the fastest growing operator since 2019. And as of 2025, we're the fifth largest operator in the US, which I'll show you a slide on how we stack up against our major competition. The biggest differentiator for us is we are vertically integrated. We own the end-to-end process of our fleet. We have 24/7 maintenance. We have a paint capability, an interior shop, an avionics shop, and we maintain the highest of quality and safety standards for our fleet as well as for other operators and external customers, which we'll get into. I can't talk about this business without giving kudos to Jim Seagrave, who is our founder He is the chairman and CEO of this business, and this is his life's work and passion. He is an experienced aviation entrepreneur and operator. He's a seasoned pilot himself. He has over 11,000 flight hours. What makes Jim special and an industry pioneer is he's a customer as well as an operator. So he understands the needs of our customer base better than anyone because he is a customer. He understands the needs of our crews and the importance of having a safe operation because he flies so much and is a seasoned pilot and one of the best pilots in the world. He built a aviation company called Seagrave Aviation and ended up selling that to Delta Airlines and became the president of Delta Private Jets from 2010 to 2013. When he exited that business, the idea for him was he just could not keep himself away from this industry. He's so passionate about it, and he knows he has so much to offer in a differentiated experience that caters to the customer need. So he founded Fly Exclusive in 2015. And since 2015, we've seen tremendous growth as a company. Went public at the end of 2023. And he's supported by a bench strength of myself. I'm the chief operating officer of Fly Exclusive. I was the CFO when I joined back in 2024. I handed the reins over to Brad Garner, who's our chief financial officer, and we are supported by Mike Guina, who's the chief commercial officer. He's been with Jim Seagrave for over 20 years across the Delta Private Jets business as well as here at Fly Exclusive. I wanted to share with you some highlights. We haven't disclosed Q2 results yet, so I'm just going to quickly talk about some of the highlights from Q1 to kind of show you where we are in our growth cycle as a business. We have significantly improved our model as a business. We've grown in flight hours with a smaller fleet as we've worked on our fleet refresh, which I'm going to talk about in later slides. We've sustained growth across all of our channels, particularly in the MRO, as well as growing our fractional programs. We saw 14% growth year over year in our MRO business, and there's lots more growth to come in that space. And we've improved our dispatch availability. For those who don't know what that means, that is the uptime of the airplane where it's available to fly revenue by 760 basis points year over year just in Q1. Our adjusted EBITDA has seen dramatic improvement in the last 2 years, but particularly year over year. Contribution to that EBITDA, we had $96 million in consolidated revenue, which was a 9% growth year over year. What's really remarkable about the growth is that on that 9% revenue growth, we grew 69% in gross profit. We've achieved positive EBITDA, and there is sequential quarter over quarter growth in adjusted EBITDA, which I'll show on a later slide to really show the transformation of this business over the last couple of years. I wanted to touch quickly on the addressable market in our space. A lot of people look at this as a leading indicator for our business. We pay attention to it, but for us, we're a differentiator. For us, if the market is growing at low single digits to mid single digits, we're growing at a greater rate than that because we're differentiating and we're capturing market share. So while this is important to us that we know the addressable market is growing, we know that only 10% of households that are in the high net worth category are actually using private aviation. We're seeing a growing rate of those high net worth individuals understanding the utility of this space and the gift of time that it gives back to people. We really are a time machine. We're giving people time back in their day and making them way more efficient in their work life and their home life. So for us, great growth in the industry, but even better growth for us. And that's reflected here on this slide. I spoke to us being recognized as the top 5 operator in the United States as of 2025. If you actually exclude turboprops, we're number 3 in just the jet space in terms of hours flown in 2025. And as you can see, the gap between us and the top 2 is still significant. So there's plenty of market share to capture. There's plenty of ways for us to differentiate ourselves. And here's how we've done it so far, right? We started in 2015. We were ranked 1,926 in the industry. As of today, we're ranked number 5. We've done this by standing up our MRO and taking control of our vertical integration strategy. We have the highest of quality standards. We have full refurbishment capabilities. So an airplane we might buy used will look brand new next to a new airplane on a ramp better than when it came out of the factory. It's our fleet, our pilots. We have full operational control. We're in charge of our own destiny. We have a culture of urgency, minutes matter, and a team of humble professionals that try harder. We're from Eastern North Carolina. We're not from a big major city. We have that Southern hospitality, and we create a differentiated environment for our customers, and we show them that we care more, and we deliver end-to-end results for them. Some highlights coming into this year: we recently won a Starlink dealership capability for our MRO. So we were able to install Starlinks on a variety of fleets as a dealer and a preferred dealer in the U.S., which has been really great and a new revenue stream for our MRO business. Quick look at our scope and scale. So we're headquartered here in Eastern North Carolina. We have over 670 employees. Our floating fleet, and what that means is we have strategically positioned our fleet where the customer demand is. We're not a return to home base operation unless we're bringing a plane in for significant maintenance. It is out on the road, meeting the customer, keeping up with fluctuations in demand throughout the North America footprint, and positioning our pilots and our aircraft in the right position to have an optimized schedule. We've also deployed our mobile service units, which help fix airplanes when they have minor write-ups throughout the week. So if something breaks today, it's up and running to service our customers by tomorrow, which I'll get into in a little bit. I spoke a little bit about our product mix, and I want to kind of share how does that mix work, right? So we have a few offerings that are contractually committed. One of those is called our Jet Club. It's a subscription-based model, has preferred contractual rates, and it's a 2-year term contract. So if someone has 20 to 50 hours of annual flight needs, this is a program that's really suited for them. They get the peace of mind of a guaranteed rate. They're not subject to fluctuations and big peak demands and shifts in the dynamics of the industry. They know what they're going to pay for based on the number of hours that they're going to fly. They get a 2-year rate lock and no blackout dates. It also creates a consistency of experience. Since it is our planes, it is our pilots, you're going to have that same brand. Our planes are all painted in the same scheme. They have the same interior, the same blue interior. So it's almost as if they're buying into an entire fleet, and it creates that brand and consistency for them. If they're flying more than 50 hours, somewhere from 50 to 200 hours, you might want to buy a fraction. You get some tax benefits, depreciation, you get preferred rates, and you get guaranteed availability based on our fleet and no blackout dates. And you can buy a share in a Challenger 350, for example, but you can upgrade and downgrade based on the fleet availability for that day. So just like the Jet Club, it's like you're buying into an entire fleet and you get a consistent experience every time. For gaps in that schedule, so we get 50% contractually committed, so that's predictable demand throughout. You fill those gaps in the schedule with wholesale businesses with preferred partnerships with different brokers. So this creates some flexibility for customers that aren't flying over 20 hours in a year, that are just chartering a jet for specific experiences, or just dipping a toe into the industry or on Fly Exclusive. There are brokers that will fill that space for us, charter the airplane, and keep us at we're consistently flying a high schedule and a high dispatch rate for our airplanes and filling the pipeline no matter what. Earlier, I spoke to our fleet. We have a fleet of light, mids, and super mids across our business. The light is a Citation CJ3. You can see that pictured below. The mid-size is Citation XL. And where we're growing the most and continuing to expand our fleet is on the Challenger 300 and 350, which is a very reliable airplane, high in demand, and very satisfactory to our customers. Now, how has this transpired over time, right? When we were in 2020, we were only 9% contractually committed. The rest was through wholesale business. Here in exiting 2025, we're nearly 50% of our demand contractually committed, and our long-term goal is to be about 70% contractually committed. What this does for us, it's higher quality and more predictable revenue. We can better service the customers because we know what their flying habits are. We can gather continuous feedback from that customer base and cater our product to best service that need, and then continue expanding from there. So the goal is to get to the 70%. We're well on the trajectory to get there, and this has been great for our business, for our efficiency, and for our overall profitability as a business. What sets us apart? I said earlier, we are a vertically integrated operator. What that means is we own our MRO. It's based in Kinston, North Carolina. We have a 104,000 square foot facility. It's a Part 145 repair station. We employ over 180 technicians just there in Kinston. We've got 6 dedicated hangars. That includes an electrostatic paint facility. We have avionics capability. We have the ability to install Wi-Fi. Like I said earlier, we got an authorized dealership through Starlink, which has been a great revenue generator for us. But we also have the capability to install Garmin G5000s with a parts manufacturing approval where we actually do the wiring harness in-house. We can install any of the latest generation satellite Wi-Fi solutions, including Galileo. And we pretty much are a nose-to-tail solution for you. It's a great way to completely refurbish your operation. So we do it for our fleet. When we buy new airplanes or used airplanes, we send them through this process. We'll paint them. We'll refurbish the interiors. We'll put in a new avionics package, and that thing looks brand new on a ramp next to any airplane that just came straight out of the factory. We also do this for external customers, and this is a growing revenue stream for us. Represents a lot of incremental external revenue growth for us. And there's some opportunities to grow geographically through M&A and other opportunities to continue expanding in this space. Let's start with boring stuff a little bit. Some financial results that help you paint a picture of where we are in our growth cycle, right? So as I said earlier, we grew 9% year on year in revenue and then 69% in gross profit in the same period. This is a material improvement in our gross margin and shows the efforts that have been placed thanks to the fleet refresh that I'm going to talk to in a couple of slides, where we identified 37 underperforming airplanes that were less reliable, and we sold those out and started adding the very highly reliable Challenger 350s to our fleet. It's had an immediate impact on margin and has been really accretive to the business overall. On an adjusted EBITDA basis, this is just the year over year. Next slide, I'm going to show you a sequential quarter over quarter growth that has happened since 2024, showing our intense focus on delivering value for our shareholders. Last year, Q1, we were at an adjusted EBITDA loss of $6 million. We have improved to an adjusted positive EBITDA, and we are improving our operating leverage. We're getting more revenue per head count and getting efficiency gains across the operation, and we're flying more hours per airplane and getting more revenue per airplane than ever before. This is what that looks like. In Q1 of 2024, just when I started at Fly Exclusive, we were losing $19.5 million in Q1 on an adjusted EBITDA basis. In Q1 of 2025, we reduced that to 6, and now we're generating positive EBITDA, which reflects about a $2 million per quarter improvement in the EBITDA. And if you want, you can kind of see how that trajectory would map out over the next several quarters. And we've consistently delivered against that metric. Which brings me here. Where do we go? How do we continue to expand, right? So we see 3 to 4 points of EBITDA margin expansion coming from continued growth initiatives. Continuing to grow our fractional and Jet Cub programs and get that 70% committed demand on an annual basis. We're going to continue to expand our fleets. We currently have 10 Challenger 350s in our fleet. We should grow to near 20 by the end of this year, and we'll continue growing that business. It is a high demand program for our airplane for our customers, and it is an extremely reliable aircraft with tremendous uptime and dispatch availability. We also plan to grow the MRO and the external revenue and our addressable market there. We see 3 to 6 points of improved efficiency. This means fleet utilization, flying more hours per airplane, continuing to leverage that vertical integration model, and leveraging advancements in technology. A lot of work has been done using AI and automation to help create fleet efficiencies, schedule efficiencies, automations in our process, improvements in customer service. The list goes on. And this has been a tremendous addition to the team with our new Contrails FMS system, which is creating efficiencies throughout our operation. We also see opportunities in cost reduction above which we've already committed to and delivered. The SG&A leverage is there. We can continue to fly more revenue per existing SG&A headcount, create automation in our process, and not grow our headcount at the same rate that we're growing top line. We see improvements in supply chain and leveraging economies of scale. We have a consistent fleet mix, and we're able to buy in volume and create opportunities on pricing power and cost reduction overall on materials. We also see 3 to 4 points of expanded acquisition opportunities, growing to new customer bases, expanding into new markets, and creating some integration synergies in the business. This should get us to low double digits adjusted EBITDA margin over time. I spoke quickly about the fleet refresh that helped get us here. So we identified, entering 2025, we had 37 underperforming airplanes, Citation 10s, Sovereigns, that were underperforming our expectation. We have since sold off a majority of those airplanes, and with the proceeds from those have been invested into the Challenger 350 airplane, which has a lot more reliability and dispatch availability compared to the average of those airplanes. And it has effectively reduced our operating loss on those non-performing airplanes substantially and put us in a position for a strength in gross margin and EBITDA. This has delivered an improvement in dispatch availability and uptime of our airplanes. We've seen a 760 basis point improvement in dispatch availability in Q1. That's actually consistent in Q2, and we have created upwards of 15% improvement in utilization across the fleet. Part of that is driven by our MSU strategy. MSU stands for Mobile Service Units. We have deployed vans throughout North America with techs that work overnight. While the customer sleeps, while the airplane's sitting on the ramp, they're turning wrenches, making it ready for the next day, and ensuring that there are no broken airplanes sitting down on the road. We have them creating urgent turnarounds of our airplanes and improving the uptime of the airplanes. What this represents financially, every 1 point of improvement in dispatch availability contributes $2.5 million annually to contribution. How else are we doing operationally? So we have effectively reduced our fleet year over year by 6 airplanes. But on that reduction in airplanes, we've actually flown 7% higher flight hours. Our core fleet utility, meaning hours per plane, has improved 15%. And this continues to improve in Q2, where we are getting way more revenue hours per airplane than we ever did before. And bottom line, we're continuing to improve our operating leverage by generating more revenue per SG&A headcount. Just in Q1, we delivered 9% improvement in revenue per SG&A, and we continue to see opportunities there as we get more efficient. We create automation, we leverage technology, and we create a better performing fleet overall. So with that, I'm not even sure how long I went. I'm going to open the door for questions. Happy to answer any questions y'all have.
Thank you very much. We welcome your questions. Click the Q&A button at the bottom of your Zoom window. A text box will appear. You can then write your question and submit it from that box. And we've been getting a lot of questions here. Can you explain what's driving your increased flight hours on fewer aircraft and whether there's still meaningful upside from better fleet utilization?
Sure. It's a few things working together. Number one is this fleet refresh I've been talking about. Adding the Challenger 350s is bringing material better reliability and uptime to our fleet and creating a higher average dispatch availability across our fleet. and there's less of a drag overall from the resources used on the 37 underperforming airplanes, trying to get those back up and running. So getting those out of the fleet and adding the Challenger 350s is one of the major levers. But also, it's leveraging our vertical integration. So the MRO being in-house is one major facet that helps us control our own destiny. You're not waiting on vendors. You're not waiting for them to deliver against our own urgency. We're in charge of our own fate. And so we have a great team of technicians who work our airplanes with a minutes matter mindset and get airplanes back up and running as fast as they possibly can. And then recently we've deployed our mobile service unit strategy. We currently have 13 out on the spread across North America, and we plan to expand that to up to 30 different mobile service units with their mission, right? Is if an airplane breaks right now, they are on there with wrenches, turning wrenches, getting that airplane up and running before tomorrow morning so it can fly the schedule tomorrow. There's really no ceiling yet on the utility per airplane. There's lots of upside here. We have lots more room to fly more hours per airplane on our existing fleet, and then to continue the fleet expansion with the Challenger 350s and do more flight hours and revenue hours for our customers.
Dispatch availability has improved significantly over the past year. How much opportunity remains there, and how should investors think about the financial impact of incremental improvements going forward?
Sure. So I think the simplest way on the economics is that slide I shared with you all, that every 1 point of dispatch and availability improvement is about $2.5 million of contribution annually. So we've seen that mid to high single digit improvement in the first half of this year, and I see that continuing to expand as we get more aggressive with our mobile service units, as our fleet continues to get refreshed and we bring on the newer airplanes. So the way I think investors should think about it is it's not a one-time gain from a fleet refresh. It's a continuing operating lever for us where we can continue to create upside for our customers on the availability side. So this will continue to expand and improve over time.
The business is steadily shifting toward more recurring revenue through Jet Club and fractional. How does that change the overall quality of the business compared to where the company was just a few years ago?
Yeah, so the contracted demand and the consistency in that contracted demand allows us to better serve our customer base and invest in the infrastructure to support their flight activity. Where are they flying? How are they flying? What are the peak seasons for them? And then we consistently survey our customers and we get feedback on how we can improve our operation. We are always listening and we are always learning. So to be able to have that consistency in customer base, we get an edge and we get to learn about what is it that we need to do to differentiate ourselves and continue to satisfy our customers. And so just this year, we launched our new Jet Club 2026 program, and it was a direct output of the feedback that we get from those contracted customers, what they're asking for, and it puts us ahead of the competition. And so, and frankly, from a financials perspective, it's more durable, it's more predictable, it allows us to give better guidance because you know when the demand's going to come, you know who it's coming from, and you're able to be more predictable and for investors on where that peak season's going to be and where the revenue is going to come from.
Private aviation demand has remained resilient despite a more uncertain macro environment, Matthew. What are you seeing today in customer behavior that gives you confidence in the outlook?
Yeah, so the way we see it, I think the measurement that the industry will grow in the mid to high single digits through 2030 and beyond. That's a real metric. We're seeing a lot more interest from the high net worth individual in the market, and more people starting to learn that it's not just a luxury. Private aviation is not just a luxury. It really creates efficiency in business leaders' time, in folks that want to have better balance between work and family, and they're able to save that time in their day based on the product that we deliver. But we never look at the industry as the predictor for our growth. We see us growing at a rate much higher than the industry because of our differentiated strategy. We are paying attention to what the customer actually wants. We are delivering differentiated solutions, and we are continuing to capture market share, which has allowed us to grow from the 1,926th position up to the 5th top position in the industry in terms of hours flown, and continuing to grow from there. So for us, that's not the only metric we look at. We see ourselves continuing to grow our customer base regardless of the macroeconomic indicators that lead the industry.
Matthew, thank you very much for your great presentation. That's Matthew Lesmeister. Fly Exclusive is his company. For more information on the company, reach us at 1-800-RedChip or email us at flyx@redchip.com. Matthew, thank you again.
Thank you so much for having me. It was my pleasure.
Okay. It is now 1 p.m. U.S. Eastern. This is the RedChip Vertical Economy Investor Conference. Our next company presenting today will be presenting all the way until 4 p.m. We're going to have companies presenting until 4 p.m., by the way. Our next one here at 1 p.m. is Optex Systems Holdings, ticker OPXS on the NASDAQ. Presenting today is the Director and CEO, Chad George. Chad, are you there?
Yes, I am here. Can you hear me?
Yes, I do. Yes, I do. And you could put your presentation up on the screen while I get some preliminaries out of the way. As is always the case, we look forward to your questions. To submit a question, click the Q&A button at the bottom of your Zoom window. A text box will appear. You can then write and submit your question. Before we begin, please allow me to read the Safe Harbor Statement. This segment may contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. All statements pertaining to future financial and/or operating results, along with other statements about the future expectations, beliefs, goals, plans, or prospects expressed by management, constitute forward-looking statements. Any statements that are not historical fact should also be considered forward-looking statements. And of course, forward-looking statements involve risks and uncertainties. Chad, go right ahead.
All right. Well, thank you. It's a pleasure to be here today to introduce Optex Systems and kind of share with the investment community who we are, what we've been doing over the last 30, 40 years, and where we're going from there. So we'll talk a little bit about why Optex is a solid company and a good one for investors to take a look at. We'll get into the problems we solve and talk about our mission, talk about our customers and products, talk about the upcoming opportunities and why we're excited about the future for Optex, talk a little bit about our strategy and advantages, and then close out and summarize this presentation. So why Optex? Why are we a strong company for investors to take a look at? So currently, our advanced optical coatings division has been around since the 1960s, and Optex Systems has been providing vision systems for armored vehicles since 1987. So we're a sole source provider for several of the major Army platforms for armored vehicles. We have mission critical demand that, as with our optical coatings that protect these armored vehicles and soldiers in the field. Those threats are constantly evolving and changing in the field, so that the customer, the government's coming to us and asking us to solve those problems and modify these coatings such that we can address these threats in the field. We've been, like I said, we've been around since the 60s, and we've been on programs such as the Abrams, Bradley, Stryker, and even the Howitzers, providing targeting systems for all these military programs. We're in a market that there's a massive increase in spending. You'll see that later in the slide that where those focus areas are, and the 43% increase going into 2027 with defense spending. And with this, we've got a proprietary coatings and proprietary processes for putting together these vision systems for these armored vehicles that have proven to be quality systems and products over the years, and with our quality ratings and lack of returns, you'll see that throughout the presentation. Again, like I said earlier, these coatings and these specifications have been around for years. We have a blue chip customer base, and this recurring revenue and that recurring programs, as these vehicles get used in the field, as they go through training exercises, there's a constant need to replace these vision systems, to maintain these vision systems. So it's a good revenue stream that provides a good return for us to invest back in the company into development for additional type systems and technology moving forward. So the systems that we make and the problems that we solve, our systems protect the warfighter. They also protect the equipment that the warfighters use. So with the laser threat elimination, again, all of our optical coatings that go on the sighting systems that go on the armored vehicles, they go on the goggles that the soldiers use in the field, they go on the rifle scopes that the soldiers use in the field, such that an enemy laser hits a rifle scope and gets intensified, it can destroy and actually burn the soldier's eye or destroy the optic sensors that are in those systems. So we protect the warfighter and the systems that they use. So as I mentioned, the structure of Optex, we're two franchises. So Optex Armored Systems, have been providing vision blocks and periscope and sighting and targeting systems for the U.S. military since 1987. Advanced Optics Center was started back in the 60s as their own company. They were acquired by Northrop Grumman, Litton, United Scientific, and they were purchased by Optex in 2014 from L3Harris. And this provides a nice vertically integrated company, because all these sighting systems, one of the most complicated parts of these sighting systems that are made for the military is getting all the coatings and all the energy to go through the lenses correctly, such that you're getting the right wavelength of light to the system, so that the soldier or the system can complete the mission that they're on. So again, we talked about our blue chip customer base. We essentially all the major primes in the United States we serve or support. General Dynamics, BAE Systems, Raytheon, Leonardo DRS, several of the major primes, and some of them were sole source on some of those platforms for the type of sighting systems that we provide for those vehicles. So our company, our products, we'll get into now. We've split them into four major categories. We have our vehicle periscopes and sighting assemblies. We have thin film coatings and laser protection coatings that we put on all these lenses and use in these different sighting systems. We have upcoming sighting and aiming systems that are on new platforms. And then we have the traditional optical assemblies, binoculars, goggles, and some miscellaneous type coatings that we're doing for other applications in the military. So the first one we'll go through is the vehicle periscopes and assemblies. These are everything from driver periscopes, weapon station periscopes, commander periscopes, gunner and gunner primary sights. You can see on the Abrams vehicle, there are several different assemblies that we provide for the Abrams and vision blocks that we provide for that. The Stryker and the Bradley, we provide the same different periscope assemblies and vision blocks for that platform. And then the new vehicle that's competing and going to be awarded in 2027, the XM30 program. We also are performing work on that for different sighting systems and new types of sighting systems for those new vehicles. The thin film coatings, like I said earlier, this technology is a technology that really is the guts of most of the sighting and targeting systems used in the military. Every lens in these systems has to block out certain wavelengths and let certain wavelengths of light through, such that the system can meet the high military standards and complete the mission that they're on. So we do everything from AR coatings to laser protection coatings to diamond-like coatings to protect the lenses and the systems from damage and environmental wear and tear. You can see the different substrates that we are able to coat, everything from germanium, silicone, zinc sulfide, gallium arsenide, and glass and other amorphous materials that transmit infrared radiations. Again, this is the guts and the critical quality component of most of these sighting systems for the military, because they're critical in the warfighter protection and protection of these sensitive electronic systems. The next one that we'll talk about is the vehicle weapon sighting systems and aiming systems. So there are several products that we continue to support even today that have been around for years. And the first one is the muzzle reference sensor that goes on the barrel of the Abrams tank. This is used to, as the tank fires and the barrel heats up, it sags, and so the gunner has to use this muzzle reference sensor at the end of this barrel to continue to keep the gun on target as the mission is carried out. The DDAN and M36 sight goes on the light armored vehicles for the Canadian military. We continue to support this to the day, and you can see it's a much more complex assembly. It has electronics and different day and night vision components in it that allows that system to carry out the mission for the light armored vehicle for the Canadian military. We make backup sights, which are components that go onto armored vehicles such that if the vehicle loses electricity, they're able to carry out the mission. So we have these visions sighting systems that go in there and can go into effect if the vehicle is to lose power or lose electricity to sight the electronic systems. And then there's the aiming circles that we continue to support today for the howitzer programs. Some of the other types of assemblies that we produce, everything from daylight filter assemblies, laser rods, optical prisms to put into different types of systems to direct energy through the system to make the product work. We make monoculars, binoculars, precision optical assemblies, and we also do signature coatings on type aircraft to reduce the IR signature of those aircraft. So, for example, there we're showing the Black Hawk. We coat those vanes and that with a special proprietary coating that reduces the IR signature of the aircraft. So the market opportunities, and this is something that we're really excited about. We've decided to focus solely on the defense market and really focus our development efforts there. The 43% increase going into 27 in the defense spending is something that excites us, and you can see those top categories down below where a lot of that funding is going. Everything from drone dominance, munitions procurement, munitions development, counter UAS development, and then the Golden Dome initiative for missile defense. And then there's the land power modernization program. We talked about some of the new vehicles and new opportunities in that arena. So the good thing about our business is we produce all the different types of coatings for the visible and IR spectrums, and we produce all the different optical assemblies that go on most of these platforms. And with this type of spending and this increase in spending in the defense arena, the supply chain's under a lot of pressure to maintain this expansion. So we're doing a lot of development and a lot of investment in capabilities and people to help the defense industry carry out this type of expansion. So currently our market share, we have about 75% of the periscope and vision blocks. Like I said earlier, we're sole sourced with some key prime contractors on certain vehicles for those types of products. And then there's others that also compete and support the logistics services of supporting those vehicles in the field. In the laser coatings, we're about 50% of that market share, and that's what we're investing in different types of coating technologies, getting back into the IR coatings with that expansion in the munitions market. There's a lot of need for additional IR coatings on those types of systems, and we've invested in that technology to help drive that expansion. So our strategy here is obviously our market retention. We continue to have continuous improvement to protect our legacy products that are on these legacy programs. All the vision blocks and periscopes, we continue to have a impeccable quality rating there. We've had virtually no returns on any of those systems over the last several years, and we continue to drive the cost out of those products. We also continue to be a sole source to the military for the laser protection filters and coatings that go on those systems. So we're continuing to drive cost out of those and continue to protect those markets. Product development, we're working on the new armored vehicle sighting systems and developing infrared lens coating so we can again get back into the infrared market and help expand and support that expansion with that spending from the U.S. government in those areas. We've also purchased a diamond lens coating equipment to help protect those IR systems and provide the strength to those lenses that so they can survive the environment that they operate in. Some of the market development that we're currently working on is the aerospace and drone areas. As you saw in the government spending, those are areas that there's a significant growth coming in the next several years. So things like drone IR coatings, missile seeker optical assemblies, and space qualified coatings for very large lenses to support the Golden Dome initiative. And then some of the markets that we're diversifying in and creating new technologies and new solutions are markets like counter UAS sighting systems, onshore reticle fabrication, high energy laser periscope assemblies, and then we're also have alternate lens materials for IR assemblies due to the shortage of germanium. We've developed some alternate solutions for those type of systems, for IR systems, to replace germanium. So our competitive advantage again is we have an established position with these blue chip customers and these primes in this market. We have a very good reputation to deliver quality product that performs the mission that's intended to perform. We're in an expanding market right now with a 43% increase going into 27. We have a very healthy balance sheet, over $5 million of cash that we continue to invest back into the company with driving additional capability and investment in these areas that are expanding. We've invested a lot of money this year going into R&D. We've hired a bunch of technical directors to help us work on several of these programs where that defense spending is increasing. We have good customer relationships, and our innovation and optimization is continuing to drive very healthy margins for our business. So financial overview, you can see the growth. Ever since COVID, we've had a very, very healthy growth in our business. We continue to grow double digits year over year. And the company is really turning very healthy margins up in almost a 30% gross margin. We expect that trend to continue. You know, we're projecting this year to finish between 43 and 45 million in our annual revenue, with EBITDA between 7.5 and 8.5 million. And EBITDA margin ranges that are above 15%, almost a 20% range, and gross margins in the 30% range. So very healthy business. We've been driving margins and improvement over the last several years. We expect that to continue with the defense market expanding like it is, and the innovation and the investments that we've made. We expect to be able to help the defense industry continue to grow and expand those munitions and weapon systems that are so critical to our warfighters. So to summarize, we're established customer base. We have a dominant market position. We have a very healthy balance sheet. Our business optimization and our new investments and team that we've brought in is really optimizing and improving margins. And with that new leadership team, we're driving that expansion and those innovations and starting to work on products and markets that traditionally Optex hasn't worked in. So we're very excited about the future, and we hope you guys will take a look at Optex and be excited about it as well. So with
Chad,
that,
thank you very much for that. And we'll move now to questions. We've already received a few here. Let's get started by reminding everybody that if you wish to ask a question, please use the Q&A button at the bottom of your Zoom window. Type your question into the text box. One of the things that immediately stands out is your position as a sole source supplier on several of the Army's core armored vehicle programs. How significant is that from both a competitive and long-term business standpoint?
So that's very significant for us. Like I mentioned earlier, the coatings, some of that technology and those formulas, we're a sole source to the U.S. government on that drawing. So when the government comes out with a new sighting system and they put the requirement on for a certain coating to protect the soldier, to protect the vehicle that system's going on, those vendors, whomever is providing that system, has to have those proprietary coatings. So they generally come to us. They always come to us to do those coatings for those systems. So that's very important for us because it's driving revenue. It's helping us put money back into the business to drive that innovation and drive those new technologies and capabilities that's helping to expand the defense spending.
Many of the Army's flagship platforms, such as the Abrams, Bradley, Stryker, and Paladin, have service lives measured in decades. How should investors think about the long-term revenue opportunity that comes from supporting those existing fleets?
I think that's one of the strengths of our business, as you can see from the history of the growth of our company and how it's been performing over the last several years. We mentioned the new vehicles that are coming out. The XM30 program is something that we're very excited about. That's a new armored vehicle that the military is funding to ultimately replace the Bradley. The Bradley's been around for almost 30 years. So that's very significant for us. If we can continue to perform and provide the systems that are needed for that XM30 vehicle that's replacing the Bradley, we see that as a revenue stream that's going to carry on for decades as well. In addition to that, we mentioned the IR coatings that we are performing for aircraft. We expect that business to expand and continue to be on other aviation platforms, reducing the IR signature of those programs as well. So obviously being in the defense market and providing solutions for the military, you have the opportunity to be on programs that are around for decades. So yes, that's very significant to our business.
What makes your proprietary laser protection coating technology so difficult for competitors to replicate?
So the issue there is, like I said, those coatings have been around since the late 60s and early 70s. And those threats in the field are constantly evolving. So as we've developed that proprietary formula to block out a certain threat and allow our systems to continue to let other wavelengths of energy in to operate the system and ultimately complete the mission, those, you're talking about layers of material on certain different material sets and different lenses that can be hundreds of layers of material to create the blocking necessary to perform that mission. And as those threats evolve, the government comes back to us and shares that information with us, and we're able to tweak our coatings to meet those new demands. So to start from scratch with those decades of technology that we've created for the coatings would be very expensive and time consuming. So that's what helps us protect our position on those coatings and enables us to act quickly to solve the problems that the government's coming to us to solve.
How important are long-standing customer relationships as new programs move from development into production?
So our performance and our relationships are very important there. As we support these development programs, obviously those relationships that we have allows them to come back to us and ask us for our help to support the production as they ramp up into these areas with defense spending, greatly increasing there. So those relationships are key for us. And as you can see from our customer set, we've got several customers that are very large players in the defense industry, some of the largest primes in the United States, continue to come back to us and ask us to help them solve their problems on these new platforms and these new technologies that are being developed. So those relationships are critical for us to continue to be sole source to those major primes.
It seems as if Optex has built two complementary franchises, vehicle optics and laser protection coatings. How do those businesses strengthen one another and create additional opportunities with existing customers?
So, as I mentioned earlier, so the hardest part of these sighting systems and targeting systems is you're talking about systems that have up to 10 to 15 lens sets to bend energy throughout a particular mechanical assembly to reach the detector or to reach the human's eye so that they can accomplish their mission. These coatings are some of the most complex coatings and critical parts of allowing energy through that system. So the coatings really allow the sighting systems to work and optimize the lens sets in those sighting systems to provide the crisp vision and energy through that system that's needed to complete the mission. That's a critical part of our systems. And as I said, you can see from us putting those on aviation for reduced IR signature and other types of applications for reduced drone IR signatures. There's a lot of expansion and development that can continue to work in that area.
Where do you believe Optex is best positioned to benefit from defense budgets continuing to increase?
So as I mentioned earlier, we've hired several technical directors into our organization. We're working on solving counter UAS problems. We're working on high energy laser systems to help develop those high energy weapon systems for the military. And then we also mentioned the next gen armored vehicles. That the XM30 replacing the Bradley is a big opportunity for our business. We've got several sighting solutions that support that program. So between the counter UAS, the new weapon systems between high energy laser, and then the missile and munition expansion, those are the biggest areas where I see opportunity for Optex.
Looking ahead over the next 12 to 24 months, Chad, what milestones do you believe will best demonstrate that Optex is successfully expanding beyond its traditional armored vehicle franchise?
So what the investment community can expect to see from us to see if we're on target for our plan. As I said, we've invested a lot of capital this year getting back into the infrared market. That's due to the munitions and the expansion of munitions and missile defense. The supply chain, the United States supply chain is full. It's overwhelmed. So we decided to invest in those capabilities to get back into that IR market to help support those systems. So if you see some awards coming up from us that are through customers coming to us and asking us to coat and develop coatings for IR systems, that's something that you could certainly look at and say, all right, they're on track with those investments and the opportunities they're trying to take advantage of. The high energy laser weapons that are coming out, essentially a weapon system that like a high energy laser system, you have to build periscopes to get that energy through those systems to accomplish the mission. And that's our strength, is developing those periscopes and redirecting energy through vision systems. And so hopefully you'll see some good awards in that arena as well with the development that we're working on. And then finally, development contracts and solutions for counter UAS. We believe our coatings and our optical assembly knowledge is really going to help us in that arena as well. So be on the lookout for Optex, playing in those arenas, and I think you'll see that we're on target for our plans.
You've indicated that R&D investment is increasing, even though it creates some short-term pressure on margins. How should investors think about that trade-off between investing today and creating larger opportunities for tomorrow?
Well, that's a good question. So we have a very strong market and a very strong, business product base that's been around for years. And there's nothing wrong with continuing to be that company that supports those systems and driving 30% margins and 20% EBITDAs. That's a very positive business. However, the technology is changing. The unmanned vehicles, unmanned drones, unmanned aviation systems. There's going to be less requirements to protect have coatings to protect those vision systems or periscopes so the soldier can have 360 awareness when they're inside those vehicles. So we're trying to keep up with our technology and our innovation to make sure that our company has a long-term viability for the different technologies that are going out there in the field. So I look at it as we're going to have to pump some money back into the front of the business, but the opportunities and the growth opportunities with the expansion of the defense spending and the technology that's changing in that arena, that's very exciting for an investor looking at optics.
And in 10 seconds or less, sorry, if we're having this conversation a year from now, what accomplishments would provide evidence that the company's strategy is working? If you can just answer that real quick.
If we continue to grow, have double-digit growth in our top-line revenue and continue to turn positive margins, I think we're on track.
Thank you. I really appreciate you squeezing that one in, Chad. Thought it was an important one to get in. Thank you, everyone, for your questions. Again, this is Optex Systems Holdings. Reach us for more information on Optex at 1-800-RedChip or write us at opxs@redchip.com. Thank you very much, Chad.
Thank you.
All right. Our RedChip Vertical Economy Virtual Investor Conference continues, 1:30 p.m. U.S. Eastern. Our next company is Syntec Optics Holdings, ticker OPTX on the NASDAQ. Presenting today will be CEO Al Kapoor. Al, are you there?
Yeah, I'm here. Can you hear me?
I hear you loud and clear. Would you like to put your presentation up on the screen while I get some preliminaries out of the way?
Sure.
Okay. Yeah, share your screen with your there you go. Thank you very much. Safe harbor statement. This segment may contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. All statements pertaining to future financial and/or operating results, along with other statements about the future expectations, beliefs, goals, plans, or prospects expressed by management, constitute forward-looking statements. Any statements that are not historical facts should also be considered forward-looking statements, and of course, forward-looking statements involve risks and uncertainties. We invite your questions, audience. Please click the Q&A button at the bottom of your Zoom window and then type your question into the text box. Al, go right ahead.
Okay. So, good afternoon, and I will share my presentation. So, I've talked before at this conference, is my second time, and a point I've made before is that light is now everywhere and was often overlooked. I've talked about my journey in the past when I started out towards the end of the last millennium, came out of Harvard Business School, said, hey, light will be everywhere. People would say it's in fiber optics. Where else can it be? And I've told that story before. And now, there was Amazon, Apple, all the big companies that we know about are in some shape or form using optics. And why that is because everybody's looking for more automation, more intelligence in their products. And optics and photonics provides that. When you have more detection, more sensing, more imaging, that does bring more automation and more intelligence. And that trend, I believe, will continue. So while that has been going on, we've been building this company. I've been building this company for over 20 years or so, and I was only 28 years old when I started with that one simple statement and vision. And we added laser guides to missiles, blood and diagnostics. Company came and said that blood diagnostics should be in every hospital, every clinic. That happened. Laser guides made munitions dropping safer. That was a big thing at one time. Night vision, providing that to all our soldiers became critical at one point in time, so we participated in that. And then today, AR, VR, space, those have become some big areas. So the question I always get asked is, what is next for the company? What would happen in the world? And this is a really fitting conference to be able to talk about that. So if we change our view from Earth up vertically, I think we go the other way around and we look vertically down. In where I think the world's going and how Syntec is already participating in is we're going to turn sun's light into laser light by satellites. It's happening. Companies are doing it, and Syntec is participating in that future. You take that light and you can power data centers of the future. It's been a big issue. How do you power these data centers? Land approvals, where do you put them? Does the society approve of where you put them? So there is a future of actually powering them from satellites. And then you power the data center, and there's a lot of optical connectivity in the AI data center. We have discussed in a lot of our announcements our participation there, so we get to participate there as well as the world develops. And then you're taking data, moving around the globe in an orbital highway, and we've got 20,000 laser optics up in low Earth orbit. And we've worked really hard and developed really accurate technologies, advanced manufacturing technologies to be able to participate and contribute to that process. Where do we go and keep going from there? Artemis 3 got announced 2 weeks ago. Some of you may have picked it up on Face the Nation with the head of NASA, their vision. This isn't slowing down. The vision's clear. It's happening. So we are geared and are participating right now in actuators and other things to enable these rockets. Now, there's another issue that comes up with these rockets is all the debris. That's become a number one issue in low Earth orbit, and we are beginning to participate and contribute to this orbital safety, and we're positioned to do that. Of course, these landings will happen on the moon, and it's within reach. There are more and more discussions about moon having its own constellations and other things. So we're hoping to participate in those as well, and are positioned to with our technologies that we offer. And then there's a whole different side to this vertical economy. It's the connected battlefield, and you've perhaps seen a lot of our announcements in that field. We continue to accelerate our participation in that, and so that will connect the drones, the unmanned warfighters, and the unmanned planes, and other soldiers, other warfighters, and information will come from all different places, all to the helmet of the soldier. And then the information is going to get properly rendered, and then they will take action. So that is a super critical part of where the future is going, and we are participating in that. So that's our view of where the world is going, and we are ready to participate in it, image, detect, sense, create more automation, more intelligence in these systems. Our strategy, we've talked about it quite a bit in the market. As you see, it's a large addressable market. 15% of the products are now light enabled. There are a diverse set of products that we participate in. We have a lot of shots at goal, starting from just a base of biomedical work that we do to all the way to new things that I'm talking about in the future, where it was going. So we're kind of in that eye of the storm. We believe that the AI softwares are all going to get sorted out. What companies are going to provide that? It's going to get funded by society, by either consumers writing a couple $100 checks like we do for cable or something, to businesses writing bigger checks. But when that gets funded right, the money, of course, goes in to build these data centers, build the connectivity in them for AI, and scale them. And then defense tech is going to be more funded with the global conflict and other things. And of course, the space that I talked about, space tech, continues to go. And then defense tech and space tech also kind of start working together. And there are going to be constellations, or they're already announced and funded, that we are hoping to participate in for reconnaissance. So, good opportunity for us to continue to provide a diverse set of products, leverage what we've done in the past for 20 years. We have existing customers, we have existing markets, existing capabilities, and we're excited to contribute. And everything that we do is mission critical. There are industry leading integrators that we work with, usually number one people in their space. And then we are able to execute because we do a good job at employee retention, and 1 in 5 being here over a decade. Our facility, what is unique about the company is, like 20 years ago, when I was putting together all of these optical technologies, they seemed disparate, and people would say, "Hey, why do you have this with this one?" And I couldn't fully explain it, but now the explanation's there. When we do have leading integrators show up at our door and walk through our facility, they feel really good about how the vertical integration and different types of capabilities exist in one place, and they're able to leverage that. And it is strategic because it allows for quick reactivity, good quick development of new product lines, and getting them into production. And then the town we're in has a lot of talent for these type of advanced manufacturing that we're able to train up quickly and react to scaling. There are many light-enabled technologies. If you look up McKinsey talking about what the future is, we covered a lot of the vertical ones, the space and everything else, and then you can go to quantum computing and some other things that are coming, are further out, and we do participate there and make contributions, and surgical robots and other things that are already around in the hospitals. So what we do is we do bring nanoscale. So one of the things that we have a lot of the skill set and expertise developed over the 2 decades, and where the world goes is all of these applications that I'm talking about require to be more accurate and continue to be more and more accurate. And that's something that we've been able to do over time. So the skill now we apply at the next level from all the learnings of the past, and meet that next big frontier of asks to enable things of space and space constellation, where you may need precision of 1/3000th the size of your hair. So we've kept up with that and gotten ahead and are ahead of the curve in many cases. And in AR, VR, the asks are things that, when we're sensing and doing cameras, you're at the limit of physics. And so we are able to deliver product with those kind of precisions. So what that means in terms of numbers is, for instance, in the in the battlefield AR VR space for AI-driven goggles, we had 0 footprint there this year, potentially about 3, moving up towards 8. Next year, when we get into more production, a lot of our programs, usually product life cycles are 8 to 10 years. We expect here to be in programs and making contribution for the next decade. That's how we are planning all the launches this year, and that sets us up really well for next year. Same thing when we do nanoscale in space. We've been effective and being able to develop an operation that's scalable. That is one of the key parts that we're looking at for growth. And we've been able to demonstrate that we can go from 3 to 6, and potentially next year double that again. And then night vision, we've been kind of in that 4 or 5 range, and there are opportunities that we're looking at that can really break through to maybe 4 to 5 times that next year. So good time for us, good promising time. We've also talked a little bit about add-on acquisitions. We did a capital raise not too long ago. We have that sitting on the balance sheet. And without even making a huge effort right now in that direction, we have things that we're looking at from $5, $30, $60 million companies that we could be accretive, they could add value in certain ways. A lot of things would have to line up for us to take those kind of steps, but those options exist. So I'm going to leave it there. I love the Q&A part of this virtual conference the most. So potentially I take questions.
Thank you very much for that presentation. If you have a question, please write us by clicking the Q&A button, and there will be a text box that appears, and then you can submit your question right through the text box. We've already got several questions for you already. What common capabilities enable you to serve such a broad range of applications across several very different markets?
Yes, great question. So that's our facility. So these were things that we put together and expertise a couple of decades ago. We started the foundation of this that today is much more widely applied. So for instance, if you're doing space optics to hold those type of nano dimensions that I'm talking about, we began to do nano machining in 2000 is when we established our department and unit to do that. And so now the asks are, a whole magnitude different, but still the expertise has been developed over the years. And then the challenge there also is before you can even make the optics, you need a preform or a blank, and we have a very high level of capability in able to make those blanks as well. And that vertical integration kind of helps us be able to hit these very, very difficult asks that we have to enable such accurate products. Different things require different technologies. So like I said, 20 years ago, people were saying, hey, why do you have one department and the other together? And now those two kind of link up. On the other hand, nano scale machining is also used for making our tools. And if we have accurate tools, we make better components. We can make more polymer or plastic-based components that are lighter and often useful. And then, of course, glass-based components through replicative molding technology. And then we put them together. We have abilities to assemble the optical assemblies, and then these optical assemblies in cases where you're talking about cameras and other things have to get combined with electronics that require active alignment because these are all optics. So we have all of that capability to go into higher scale. And then usually all optics requires atom by atom layer of coatings. And we put that technology in place about 10 years ago. So those type of technologies just offer a bigger base in which we are able to serve a lot of different end markets.
The missile laser guidance product line has seen your order value increase by roughly 40%. And what is driving that growth, and how should investors think about the potential duration of the replenishment cycle?
Yes. So we continue to grow our order book there. The current set of orders that are replenishing inventory are go out to like next year, and there might be a thing or two that may go beyond that. And then those orders continue to get replenished as the inventories continue to go down. But it's a product that we've made. The challenge of making that product is it is made with the material that's very hard to use in the manufacturing process we actually use. And so we were approached, when that product was launched, and then those inventories, because of the recent conflicts in the Middle East area, continue to dwindle, or people just want to build a bigger pile of inventory for their guidance of their missiles. So these are for the lighter munitions, and so our technology provides the reduction in weight.
The military AR and mixed reality opportunity appears to be moving from early development toward broader platform adoption. How significant could that program become if the architecture expands across multiple military branches and applications?
Yeah. Great question. My understanding is that the government has made a longer term commitment to it, and a broader commitment to all forces for AI to be used, and that will allow such a product that is really implementing the artificial intelligence ability across different forces. So the first expansion is across different forces. Then the second expansion is across allied nations who potentially could also have the opportunity to have this product.
Are you beginning to see a transition from project-based demand toward recurring production demand in the space business?
Yes, all our space business is recurring demand. There is no project-based development, and the areas we work in are very, very well funded, industry leaders. So everything is on a pace where it's going straight into a product line. Our first product that we have shown ability to scale is in a position to scale even further from not too long from now. And then other product lines that we are taking on, we may be in the early stages. These products are very difficult to make, but once you make them, then they are all slated for as a recurring product for every year orders. Yes.
The life sciences business recently added nearly $4 million in orders across several applications. What makes biomedical optics attractive from a revenue visibility and product lifecycle perspective? Excuse me.
Yeah, so we like that end market that we have because you're in it and it's a recurring revenue, as the previous question was. And we're in most hospitals and clinics with our product with market leaders, and they are difficult products to make because of just by the nature of optics and the accuracy they require, and they are recurring, and they provide a solid base because people will continue to need medical attention. Doesn't matter what year, where the economy might be or not be. In this particular case, the announcement that you're talking about, COVID, there were various reactions to COVID. Surgeries were down, so there were changes to people who were in different types of businesses. But for us, because of the respiration being a big issue in COVID, we had to accelerate our production. And so we like that kind of. So while defense tech and space tech are key drivers to the business, it's good to have a base with biomedical that's recurring.
Looking across defense, space, biomedical, and AI-related applications, which market currently has the strongest potential to become the company's largest growth driver?
I would say space would be because of its readiness, and our starting in space tech was a very opportune timing 2 years ago when we started developing the first product line. and now those type of businesses are fairly more established, and so they will start to see more acceleration in revenue, and then defense tech would follow soon behind that as a second big growth vector.
Over the next 12 months, what milestones would best demonstrate that Syntec is converting its expanding order activity into sustained revenue growth and improved profitability?
Yes. So I think we had announced for the last quarter what we anticipated this quarter. So a lot of the biggest challenge in what we do, I think there's a lot of business, is can you scale and can you develop industrial engineering techniques that will allow you to improve your efficiency, reduce your scrap, get more product out of the door. And that's where my personal focus has been for the past 5, 6 months, where you really have to roll up the sleeves. And I've built models and everything where there's more data science. We're bringing information in the right place. What that means is that there is a product flow, right? And the information flow happens because you have ERP systems and other things that provide information for people to make decisions to keep that product flowing. But as the material flows through the facility, the information has to be available at the right time, at the right place. So much more optimal decisions are made that create this efficiency. So those are in full effect. And in the past 2 months, we've seen their effect, and what we aspire to in the beginning of the month, our productions come out to be what were planned. And that begins to show me that these models and frameworks are working and people are getting information at the right place at the right time. So the results of this the Q2 and from there on, and then a lot of the next additional programs that we're working on that continue to expand, and when they go into higher volume recurring cycles next year, all those results will begin to show up.
Recent orders span missile guidance, military AR displays, satellite communications, and life sciences systems. Are customers increasingly coming to Syntec because of a specific product or because of the breadth of manufacturing capabilities available under one roof?
So it's both. When a customer walks through, they begin to realize that they can do more product lines. On one product, they can have more things done at Syntec under one roof because of the vertical integration. And then they also get ideas that other product lines that they can have, where they can have Syntec contribute by adding more optics technology to their other product lines that they may have. So those opportunities expand with a customer. However, the type of customer who comes in, if it's in space or in defense tech or space tech or then biomedical, they are often different. So, but however, our highest growth areas are space tech and the defense tech.
The missile laser guidance product line has seen order value increase by about 40%. What is driving that growth, and how should investors think about the potential duration of the replenishment cycle?
Yeah. So, so that is directly connected to the additional orders. The growth is connected to the conflict currently we are in as a country, and be able to supply product to allied nations. Even though this order, we had an announcement last year, was in place before the conflict, but the increase in orders is a result of the conflict that's happening. So that replenishment was already agreed upon by Congress and others even prior to this conflict, and probably timely and and now the increases are because of the inventories that would be needed for ally nations to defend themselves.
How should investors think about the balance between faster growing defense and space programs and the more established biomedical business?
So biomedical business, like I said, our business, either way in all categories so far has been one that is 7 to 8 year life cycles. So, and recurring revenues as discussed by other investors in this call. And the biomedical is just a stable business. We haven't made any announcements on the type of growth vectors that we have in space tech and defense tech because of what I'm showing you on the screen. And but they're a good balance to have, and the knowledge base is established, the lines have been developed, and the bugs have been taken out of the production processes, so they are a good place to worry less, and then a lot of the resources and energies to do new things and at the frontier of engineering and deep tech get applied to these newer areas.
Al, thank you very much for that presentation. For more information on Syntec Optics Holdings, reach us at 1-800-REDCHIP or write us at optx@redchip.com. It is now 2 p.m. U.S. Eastern, and our next company in today's RedChip Vertical Economy Investor Conference is New Horizon Aircraft, ticker HOVR on the NASDAQ. Presenting today will be CEO Brandon Robinson and CFO Brian Merker. Gentlemen, are you there?
I'm here. Thank you.
Okay. Well, while you share your screen, I suppose you're going to be using your presentation today. I will get some preliminaries out of the way. As always, we want your questions. Click the Q&A button at the bottom of your Zoom window and then type your question into the text box. Let me do the safe harbor statement. This segment may contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. All statements pertaining to future financial and/or operating results, along with other statements about the future expectations, beliefs, goals, plans, or prospects expressed by management, constitute forward-looking statements. Any statements that are not historical facts should also be considered forward-looking statements. Of course, forward-looking statements involve risks and uncertainties. Brandon and Brian, please go right ahead.
Okay, thanks very much. Let me just bring it up and we'll go from there. Let me know when you can see it.
Okay. I can see it.
Okay, excellent. Thanks very much. Really appreciate it. Really appreciate the opportunity, folks. Thank you. So for those of you, fading into sort of the early afternoon doldrums with the lack of caffeine, etc., this is what we're building right here. So we're building an aircraft that can take off and land vertically, just like a helicopter. But unlike a helicopter, it can go about twice as fast, is about 75% cheaper to operate per unit mile, is safer and quieter. And so if you think there's a room for a safer, cheaper, faster helicopter in this world, then I don't really have to go any further. I can just kind of drop the mic right now. That's the aircraft on your screen right now that we're building. We'll have a full-scale aircraft rolling out of the hangar in the next 6 months or so, which is a pretty exciting spot and a bit of an inflection point for Horizon Aircraft. So happy to talk about that a little bit more throughout the rest of this presentation. A couple of skill testing question slides on forward-looking statements and future financial information. But we can get right into it. So what is a Horizon Aircraft and what are we doing? Essentially, I was a fighter pilot in the Royal Canadian Air Force for about 20 years. I flew F-18s. And throughout my career, I went from, being a young wingman making tons of mistakes all the way through to at the end, planning and leading NATO coalition strike missions and training, where we would plan these, 70 to 80 aircraft missions where we'd go airborne and practice extracting personnel from beyond enemy lines that were either downed aircraft pilots or special forces infiltration, exfiltration operations, or resupplying forward operating bases. And near the end of my career, my father was operating an aerospace business, and we had the opportunity to really have a deep dive into this advanced air mobility world, where these new aircraft architectures were suddenly becoming possible through a combination of, battery technology, advanced electrification technology, and we had an opportunity to build or take a look at building, and then eventually build a machine that would be very, very useful on the defense side and on the civilian side. Again, a helicopter type of technology that could land and take off vertically, using some advanced technologies that we'll talk about in a minute here. But then have all of the efficiencies of a traditional aircraft. So again, traveling about twice as fast in a much more efficient fashion than a typical helicopter. And something that I would have loved to have had in the forces as well on the defense side. So again, just a company built around a really interesting technology that my father and I came up with. We have a bunch of patented technology, and Horizon Aircraft was born around this really, really cool prototype that we're now, in fact, building. And so what is it? There it is right there on the screen. That aircraft can take off and land just like a helicopter. So again, for those uninitiated to the advanced air mobility sector, it's a very, very advanced type of machine that folks like Joby, Joby, Archer, ACHR, Beta, BETA on the New York Stock Exchange, they're all building these really, really interesting machines. Their machines are all electric. They'll do some amazing work, and they're already starting to do some amazing work under some new regulatory frameworks that are very permissive in the US. But when we looked into this sector, we saw that there was an opportunity to develop something that was hybrid electric, so not all electric, so it still has a gas turbine engine on board, but very complementary. So instead of going within cities, maybe 50 to 100 miles, there was an opportunity to develop a machine that could go between cities, so 300 to 500 miles, hybrid electric architecture. It can recharge itself once it's airborne when it lands in the middle of nowhere, so it does not require any charging infrastructure whatsoever. The aircraft can recharge itself as long as there's fuel on board. And again, about twice as fast as a typical helicopter, same range, and more importantly, and critically for operators, it can operate at all weather conditions. So a lot of helicopters, for example, cannot operate in clouds or in any sort of icing conditions or cold weather. They really do not like this. This aircraft will be able to utilize the same commercial air infrastructure that's available and used by all the commercial aircraft. So we're pretty excited about how the concept came together and some proprietary technology that makes it actually happen. So how does it work? Well, there are 5 distributed electrical vertical lift fans in each wing and 1 in each canard, so the small wings at the front. Those 5 little fans on each side and 2 in the canards can electrically powered lift the aircraft off the ground vertically. So think of fan spinning up, aircraft gets airborne. When the aircraft wants to move forward, there is a pusher prop at the back that accelerates the aircraft forward. And then at a prescribed and safe airspeed, the wings and the canards transform. Okay, and this is our proprietary technology. And so for 98% of the mission, the aircraft that you see on the screen right now is what it looks like when it's flying around, right? So it looks like a traditional aircraft. It's not some sort of multi-copter drone thing that has a bunch of articulating motors. It flies around just like a normal aircraft. And in so doing, again, with a turbine-powered hybrid electric aircraft power system at the back, it's, again, flying just like a normal commercial aircraft. So all of the capabilities of a helicopter but all of the efficiencies of a traditional aircraft. And that is our patented and proprietary technology that's been proven through our half-scale flight test program. And this is the aircraft that we are building right now for full-scale rollout here in the next 6 months. So I mentioned the performance, which is impressive. Again, about twice the speed of a traditional helicopter. The versatility is obviously quite significant. Again, instead of intra-city travel where you're going, from skyscraper to skyscraper or, from one place in New York to another place, this goes between cities at a range of 300 to 500 miles with significant payload, carrying up to 1,500 pounds of useful load. And then on the right, of course, I mentioned safety. And I want to hammer that home again. For about half of the helicopter fleet in the entire world that simply goes from one point to another point, these helicopters do not like to travel or cannot travel inside clouds or using normal instrument flight rules, sort of commercial aviation routes. And so they try to avoid bad weather at all costs. And it's really annoying when a bunch of folks show up and they need to get from point A to point B, or maybe you're building a remote mine or something, or maybe you're trying to save lives by transporting folks, from the side of the road to a hospital. It is really difficult when you cannot operate when the weather is bad. And so we are building one of the world's safest VTOL aircraft that aims to operate in all conditions: bad weather, cold weather, in clouds, which we're pretty excited about, and of course was going to be very, very useful around the world. Also, like I said, when I was in the Air Force and I was planning and leading these missions in training, I would have loved to have had this type of capability available, right? So typically, when we go and rescue, pilots from beyond enemy lines, or we would drop off or pick up special forces troops, we're always limited by the slowest aircraft that has that vertical takeoff and landing capability. This aircraft, again, almost twice as fast as a traditional helicopter. I would have loved to have this thing in the fleet. We loved the V-22s when they came into the mix. The V-22 Osprey, beautiful aircraft, $85 million a copy, costs about $80,000 an hour to run. I would have rather had 10 of these things per every one Osprey. No offense to the designers of that beautiful machine, because it does great work around the world. This would have been very complementary to that service as well. So anything we use helicopters for, again, on the defense side, the X7 is what we call it, is going to be fantastic. On the medevac side, imagine getting someone to the hospital in half the time at 75% less cost per unit distance than a typical helicopter. That is game changing on an emergency medical services basis, right? And it's proven out in economics as well. So Blade out of New York does about half of their revenue in just simple organ transport from one place to another, one hospital to another. Imagine getting the organs to a hospital or any sort of cancer, radioactive isotope cancer research drug, which is very time critical, from one place to another in half the time, or getting one of your loved ones that's been, critically injured on the side of a road somewhere to the hospital in half the time. I mean, that's a pretty powerful early use case that this aircraft will be excellent at. On a luxury business travel perspective, of course, imagine paying a little extra for your ticket. You land at some major airport hub. Instead of going through this arduous plan of deplaning and then waiting in lines and going to get your rental car and then driving 3 hours to your destination, you hop on a little bus, you go to one of these things, and we drop you off exactly where you want to go. Trust me, I travel way more than I want to do. I'm leaving again in a couple days to go overseas. I would love to have a machine like this to take me right where I needed to go, and I would pay a little extra to do it. And that's a pretty exciting future use case for this type of machine as well. On the disaster relief side, okay, it's hybrid electric. So it does, again, it has its own gas turbine engine on board and a generator that can generate power for itself. So the modern eVTOLs, they have to go from charging station to charging station, and that's fine. They're going to do a lot of amazing work over shorter distances. This aircraft does not need any charging infrastructure whatsoever. It's good to go on day one. So, for example, storm rolls through southern Louisiana, Florida, wherever, knocks out a bunch of power. Instead of a bunch of really, really expensive helicopters at 4 times the cost, you can deploy these twice as quick to every remote location, and they can get on the ground and start saving lives right away. So again, it can land anywhere that there's fuel. It can recharge itself after it lands, and it can go start looking for folks that need help right away. Even more cool, I mean, it does have 120 kilowatts of generating power on board, or it will. So it could easily power sort of a remote medical station or remote telecommunication stations as well as part of some sort of communications node. So yeah, just a tougher, sort of more practical version, again, longer distance type of aircraft that can do a lot of really good work in the disaster relief zone. From an economics perspective, I get a lot of pushback on this initially, and then a lot of head nodding later once I explain it all. Essentially, we are, again, 50 to 70%, we're projecting 50 to 75% cheaper to operate per unit mile than a typical helicopter. Well, why is that? The helicopters are expensive for a number of reasons. One, they're really good at taking off and landing vertically, but they're very expensive to operate over any sort of significant distance because they're inefficient at flying in forward speeds, right? So they're completely designed around taking off and landing, and they're not designed around forward flight. Our aircraft, because it's a lot simpler, is about 30% cheaper to operate per unit hour. And in that hour, it travels about twice as far. So those two things stack up together, and you have about, again, 50 to 75% cheaper per unit mile than a comparable helicopter to do useful work over any distance. So whether you're setting up a mine in northern Canada or in the US, whether you're, again, transporting critical cargo or goods to a remote community, maybe you're, again, picking up someone, bringing them to the hospital. It's just a faster, cheaper, and again, safer version of a helicopter. And we're building it right now, which is awesome. From a capital perspective, we are in a very strong position. So we burn between 3 and 4 million a quarter currently, and we currently have about 78 million in the bank, which is pretty fantastic. So 24 plus months of liquidity. We have an active ATM facility in play that we use only when it makes sense from a minimization of shareholder dilution perspective. And right now it's about execution, which everyone's about to see. How did we get here? Well, I've been over the past of the company a little bit, but we've successfully completed an entire test campaign of a very large scale prototype in August of 2022. We went public in January 2024. And right now we have a full-scale aircraft under construction, which if everyone's looking at comps in the marketplace, there's a lot of upside to where HOVR is currently sitting relative to companies who have accomplished what we've accomplished up to this point. Everyone asked me about aircraft certification. So we are a kind of a VTOL 2.0 company. So a lot of early players like Joby and Archer and Beta have done some amazing work in this space. They've been trailblazers from a certain perspective. They forced the FAA and in Europe, the EASA, the European Regulatory Agency, to kind of trailblaze and establish the rules for certification. We started a little bit later than they did. We get to take advantage of some more fully developed technology, but more importantly, we get to take advantage of a fully developed regulatory framework, and we designed our aircraft to that fully formed network, or sorry, regulatory framework, which is, I think, a pretty significant advantage. We have Dr. John Maris on our board. He's the founder of Certification Center Canada, so a group that specializes in certification. So from the ground up, brand new designs of aircraft. They take brand new aircraft and they're experts in certifying them. They're experts in certifying components on aircraft, and they're helping to form the basis of our certification plan. And they give us a lot of visibility on what that's going to cost and exactly how long that's going to take. And in Canada, north of the border, we get to take advantage of being kind of a bigger fish in a smaller pond, if that makes sense. And Transport Canada is, to explain it plainly, a very flexible organization that has a lot of experience in vertical lift, so helicopter sort of certifications, and is really leaning forward into this new advanced air mobility space. So we're very fortunate to have a number of advantages as a Canadian company certifying an aircraft, again, north of the border. And of course, I always get the question, well, if you have a certification in Canada, how does that translate to its ability to be used commercially in the US? And Transport Canada and the FAA have bilateral agreements. So a Transport Canada certification, shortly after we get that, using the bilateral agreements, the FAA under Part 2117 Bravo will be able to quickly certify the aircraft in the US. So we're very fortunate to have that, those agreements in place. And also in the US, I mean, the administration is very forward thinking right now when it comes to advanced air mobility, and it seems to be quite well supported. A ton of partnerships. I mean, this slide could be several slides long. But needless to say, I mean, we're partnering with the best companies around the world, and we have tons of support. Pratt & Whitney Canada, arguably one of the best turbine manufacturers in the world, and the PT6 engine that is going to be the beating heart of the aircraft is one of the safest, most robust, most proven engines on the planet. Beta Technologies, Kyle Clark leads an unbelievable company out of Vermont. They've flown more than 100,000 miles on their ALIA aircraft, and they've developed a number of different technologies that are going to be useful across the globe. And we've partnered with them on flight controls, which is absolutely fantastic. And you continue to look for great things out of them as well. Mitsubishi Heavy Industries in Canada. The Canadian ecosystem from an aerospace perspective is extremely robust. We have the ability to design, build, test, certify aircraft from Clichy Designs. Mitsubishi Heavy Industries is part of that, alongside a bunch of manufacturing and financial partners north of the border. Motion Applied, an ex-Formula One high voltage engineering team. It's a really cool place that we're in right now with partnerships. Won't go too much more into the team. Most of the folks know my background, flew F-18s and mechanical engineering degree. My father has been building and flying and cursing at airplanes since he was about 14 years old. So the last 6 decades. When I was a kid, we'd always have an airplane in the hangar being built or tested, or we'd be flying it around. My first flight was when I was 3 months old. I first flew an aircraft when I was 3 years old. My grandfather was a World War II bomber pilot that would stick me on the seat, and I'd fly this airplane around from point A to point B. It would take like 4 times as long because I wasn't really good at flying when I was 3 years old, and got a little bit better through the Air Force. But like I said, sort of just built into our DNA. Tom Brassington, CTO, long time special projects guy, a lot of experience in the eVTOL space, and just absolutely fantastic at running the show. Brian Merker, from a CFO perspective, he's probably listening to me right now, so I probably can't say anything bad about him, but he's been absolutely fantastic on the strategy and finance side. We are ironclad on all our filings. and we run a really tight ship when it comes to the financial side. And Jason takes care of all of our forward-looking commercial type of stuff. So our advantages, right? We have a very unique team that is steeped in aerospace engineering and operational savvy, that built a safe aircraft that is laser focused at performance from an end user perspective. And I think that's key. And all of this doesn't work unless you have an airplane that can operate safely and provide end users with an economically superior product that they can do good work with in the medium term. So that's it. Probably got about 6 minutes left for questions, but really appreciate everyone's time. Thanks so much. It's exciting times here at Horizon Aircraft.
Thank you very much, Brandon. And as you said, it is now time for your questions. Q&A button is at the bottom of your Zoom window. Click it and type your question into the text box. Brandon, we've already received several questions for you. One of your recurring themes is practicality. The aircraft doesn't require dedicated charging infrastructure and can also operate from conventional runways. How important are those advantages from an operator's perspective?
Well, I mean, if you're an operator, I mean, you instantly love that machine, right? So not a lot of people realize, gas, still has, so traditional aviation fuel still has 30 to 50 times as much energy per unit mass, right? So not only are you leveraging a very efficient energy source to travel from point A to point B, but when you get to places and when you want to go to a place, you don't have to worry about any sort of charging infrastructure whatsoever. You can go to any runway, any heliport, middle of a field somewhere if you want. You don't have to find the world's largest extension cord and plug it in. It is very operationally useful from that perspective. Eventually, when batteries, cross a certain threshold, we can easily just take out the internal combustion engine and put in more batteries if we want to in an electric motor. But for now, again, as a complementary service, to add on to these all-electric type of services, the architecture is really flexible, and I think really useful from that perspective.
Do you think the industry's biggest opportunity is actually replacing a portion of the existing helicopter fleet rather than creating entirely new urban air mobility networks?
Yeah, so we're going to do both. And I'm certain of it, right? So there's a number of helicopters. Again, half of the helicopters in the world go from point A to point B. Of the 70,000 helicopters, 35,000 of them simply travel from one place to another on a daily basis. Again, either transporting critical goods or people or supplies, building things. Of that 35,000 helicopter fleet globally, there's going to be a very significant portion that this aircraft could replace tomorrow, which we think is pretty powerful. Again, at 75% less cost per unit mile, going twice as fast, and arguably in a much safer and more efficient fashion. That's a very compelling argument that a certain number of helicopters, not all of them, will be replaced globally. Now, on the second pillar, in terms of creating new operational new economics and, simply a better way to travel from point A to point B and a more efficient way to travel around the globe. I think that's also really interesting as well. NASA did a study. I think there's 5,000 underutilized regional airports in the United States. Instead of traveling 2.5 hours to a giant hub airport where you got to sit in line for 2 hours plus and get strip searched and and then you wait and get delayed, and then you're packed onto this airplane with 400 other people. You travel 3 hours, and then you have to undo that whole process on the other side. Maybe we start going back to the 1970s, where air travel was just so much more amazing. Where now with machines like this, we can start to utilize those regional hubs in a more efficient manner. I dream again, as a guy that travels way too much, I dream of that day, and I would pay extra for that. I recently, instead of going to Toronto Pearson International Airport, which is an absolute disaster, no offense to anyone that runs Pearson, it's just, I mean, it's overloaded like all the major hubs. I went, 20 minutes south to a tiny little regional airport, the Toronto Island Airport, Billy Bishop, and it was the most magical experience. I showed up, whatever, half an hour ahead of time. Somebody wanted me down with a little, with metal detector. That's totally cool. They handed me a drink, and I was on the airplane in the next 10 minutes. I traveled exactly where I needed to go. And it was a brilliant experience. And I never want to go back to that. Anyway, I would pay twice or three times as much for the same ticket, to have that same experience. Anyway, so I think to that second pillar, there is a more efficient way to move people and stuff around the planet, and these types of airplanes are going to do it.
Brandon, that was a really vivid description you provided. Thank you very much for that. And I see where you're coming from. I think all of us really can. That's exciting. That's it. Our time is up for New Horizons, but we appreciate you coming on today, Brandon. Thank you for an excellent presentation.
Oh, thanks very much. Appreciate the time and appreciate everyone's attention. Thank you.
Yeah, absolutely. For more information on New Horizon aircraft, call us at 1-800-REDCHIP or write us at hovr@redchip.com. It is now 2:30 p.m. U.S. Eastern. We've been going on now since 9:30 a.m. This is the Vertical Economy RedChip Virtual Investor Conference, and we have yet another great company for you. This one is Bridger Aerospace Group, ticker BAER on the NASDAQ. Presenting today is the president and CEO, Sam Davis. Hi, Sam.
Hey, thank you for having us. Hopefully you can hear me okay.
Yes, I can hear you. Please put your presentation on the screen while I get some preliminaries out of the way. First of all, let's do the safe harbor statement. This segment may contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. All statements pertaining to future financial and/or operating results, along with other statements about the future expectations, beliefs, goals, plans, or prospects expressed by management constitute forward-looking statements. Any statements that are not historical fact should also be considered forward-looking statements. And of course, forward-looking statements involve risks and uncertainties. As always, participants, we welcome your questions. Get to us by clicking the Q&A button at the bottom of your screen and then type your question into the text box. Sam, if you're ready, you can jump right into it.
Absolutely. Perfect. Thank you. Go to my first slide here. Thank you for joining us today. I'm Sam Davis, Chief Executive Officer at Bridger Aerospace. And wildland firefighting is a dangerous mission, but one that's continuing to grow in importance year-round and worldwide. Bridger, since our founding in 2014, we've never changed our mission, and it's never been more important. We're here to save lives, property, and the environment, and it guides everything in what we do. We're an aerial firefighting company headquartered out of Bozeman, Montana, where I'm at today. We provide suppression and surveillance, not only with the safest, most effective aircraft in service, but also the most high-performing, mission-centric team in the industry. And that's not my personal opinion. I think we have the high reputation to back that up. We couple our services with in-house integrated capabilities with a certified repair station and an engineering division that's able to constantly introduce new technology in use of our high-tempo operations as we deploy across the nation. We're able to deliver real-time intelligence to combat wildfires and large amounts of water very quickly to suppress them. Today, we announced a contract with our next generation platform, a King Air, with multiple sensors, coupled with the use of our software as a part of our aviation contract, as we provide live stream video, thermal imagery, and perimeter mapping in one common operating platform, both desktop and mobile, that allows our customers to interact easily on any incident. We'll talk about it at the end of this, but our highlight of our financials will show continued revenue growth and margin improvement year over year, as we focus on our scalability, we optimize our operations, and we deploy our growth strategy. We believe our market cap really has a lot of opportunity when we evaluate our enterprise value, both based on our past performance and our outlook for this year and beyond. I'll go to the next slide. Our history is a pretty short one, but has a lot of exciting milestones for us. We were founded in 2014 by a small group of veterans who started the company with service mindset and their intent to bring military operations and technology into wildfire. Today is actually a historic day for us because exactly 11 years ago, we flew our very first air attack mission for fire surveillance with an old twin commander aircraft. And just today, we announced, like I mentioned, our multi-sensor King Air, coupled with software to the Department of the Interior, which is another historic event for us. Our very first missions were in surveillance, and early on, we experimented with prototype sensors on legacy aircraft, but the market at the time was not yet ready, able to adopt that. We shifted our focus in 2018 to look for what became our flagship, which is the Super Scooper, the yellow and red aircraft on the screen. And then 2 years later, we received our first pair of scoopers based on an industry report that said the market was very underserved with only 4 scoopers in the US on contract. We restarted the type certificate and worked to get 2 from the OEM a year to receive 6 scoopers here in the US by the year 2022. And then just last year, we were able to purchase an additional 2 retired Spanish military aircraft over in Spain that we helped to return to service. So now we have a fleet of 8. Early on, our funding included notable firms such as Blackstone, JP Morgan, Barings, and mostly this was around the purchase of 6 scoopers and the build out of the infrastructure, but also we were able to put on to contract a lot of these surveillance planes and equip with technology as we grew the fleet. In 23, we acquired a software company that we put into use today with our contract award that provided wildland firefighters on the ground with real-time situational awareness and coupled that with Bridger's aerial intel. In 24, we acquired a defense-based aerospace engineering company that allowed us to have integrated services that we brought both into our firefighting fleet as well as allowed for them to continue to pursue non-fire missions that are very mission-centric to what we already do. And they've continued to help us grow both sides of the business quite well and a lot of potential there for the future. I joined the team in 2019 as employee number 43, and I've worked through a lot of different roles as we've grown. Stepped into the role as interim CEO in 2024 when our founder ran for and was elected to U.S. Senate, and then stepped into the permanent position in early 25. In 2025, we were able to complete a refinance for most of our debt led by Bain, and this allowed us to expand our fleet with the 2 Spanish scoopers, 2 King Airs, and brought 2 PC-12s onto our balance sheet. We also did a sale leaseback of our hangar to free up more of the capital and delever. And most exciting for me, we also were able to facilitate a deferred draw facility that allows us to grow our fleet. And this year we focused on continuing rolled out of new planes, adding aircraft, increasing contract capacity. We brought on a C-suite to position for growth, which I'll cover in a minute, and continue to build on our task orders, our long-term contracts, and the guaranteed work, which I'll also cover later. Next slide. A quick overview of our fleet. We show a growing base of the most effective platforms available. We have the largest privately owned fleet of Super Scoopers in the world, and we're one of 3 owner-operators globally, with being one of 2 with the modern turbine versions. All other scoopers are owned by sovereign entities worldwide. The scoopers are in high demand based on their rapid and remote deployment capabilities and their highly effective suppression abilities. In year after year, we've seen higher utilization and increasing commitment for these aircraft. Our air attack fleet has been the consistent roots of the company, the eye in the sky that assists government officials as they coordinate firefighting assets. But it's acted as a feeder program as we've moved into what we call our multi-mission aircraft, where we put sensors on planes, and they're changing the industry. In the early days, you can see the picture in the middle. That's what an incident commander or an ATGS would look out the window and see. Now with sensors, we can peer through smoke and read a license plate from 9 miles away. We can detect lightning strikes the size of a basketball laying underneath pine needles in the forest before it bursts into flames. We can act on the danger before a human eye can detect anything, and it really fits our mission because we champion being the best intelligence available, being able to detect fires faster with our surveillance planes and act on them faster with our suppression planes in that really critical 48-hour window. Next slide. Of significant importance for us is the continued build out of what I believe is the world-class management team, carefully selected for their expertise in aviation, technology, capital markets, and compliance. We all joined Bridger to get behind the mission, but we're also focused on what we can bring to the table because we see the convergence of all this opportunity in front of us. Our focus this year and beyond is building resiliency, scalability, and sustainability. And the backgrounds of the team that we now have really speaks for itself. I'll start with Anne. She's our former audit committee chair that joined in 23 and saw Bridger's need for a CFO as our previous CFO moved on. She has extensive background in audit and finance and had a lot in private equity and venture capital at Quadrant Capital. She's really helping us position for growth with her expertise and building a bulletproof back office. Bill Andrews joined shortly after Ann. He came from Lockheed Martin as VP of Programs, as a former C-130 commander in the Air Force, and he's helped us already focus on consistent, safe, scalable operations as we grow our number of aircraft and the diversity of our programs. Then the last add to the team was Justin, who joined after Bill to fill our GC role, and he's brought an extensive background from Bristow Group, continues to lay our public company foundation, and has brought a lot of aviation expertise for us as we scale. And then last but not least, we have Rob, who's been on the team for quite a while, and he's now flourished in his role as we promoted him to commercial growth. He has extensive backgrounds for decades in the aviation industry, even coming from de Havilland, our OEM, and is really key on helping us look for those new opportunities as we grow. Next slide. So just to cover some of the defining things that set us apart, both macro level and then specific to Bridger, we have structural demand tailwinds that have really converged all at once for us to have a long-term growth picture we saw early on, but we've now seen come to fruition. We're a leading provider of very essential aerial firefighting solutions in the US, and we have competitive moats around our scoopers, which are difficult to obtain, as well as with our technology, which we have integrated into our services. We have a resilient contract profile with 100% renewal rate, and we've chipped away from our early days of being only called when needed contracts to now exclusive use revenue. Like I mentioned, we have scarce and hard to replicate super scooper fleet that we're the best at obtaining, returning to service, and operating in the field. We have a strong financial profile that's shown considerable growth and resiliency despite any sort of seasonality that remains in wildfire. We've really shown the ability to predict and take advantage of the opportunities out there. We've continued to diversify, especially as we've gone into technology, and that has opened up the door for a lot of similar mission sets for us. And then, as I just mentioned, we have a very robust seasoned leadership team with a proven track record and positioning us for growth. Next slide. The aerial firefighting industry has evolved very rapidly from the early days. We saw early on the growing threat of wildfire and the need for robust, safe, and innovative solutions in aerial firefighting. But often we had to make investments at risk and on a small scale to push the industry in the right direction. Today, we've seen that paid off in a meaningful way because now we see the effects of climate change continuing to drive up temperatures, creating longer lasting and in more intense drought conditions, and exacerbated fuel loads, which causes mega fires, and that continues the cycle. I believe there's over 100 million acres of untreated forest fuels that continue to grow faster than we can treat, and so we have to interact on them. Forest fires are a natural part of the ecosystem, but with the pace that this is growing as a worldwide threat from coast to coast, and the effect of folks moving into wildfire-prone areas is only making the problem worse. And as many on the phone or in the call can probably appreciate, passive management's no longer an option. We see wildfires grabbing headlines in LA, the Texas Panhandle, Paris. There's smoke in Boston, as I understand it, and in New York year after year. And we need to act on wildfire when it matters, which is quickly. We believe that the number of fires will continue to grow, but we see our job as a municipal fire station in the sky. It's what matters. And funding is now there to manage our forest properly. Long-term commitments are materializing. An understanding of having sophisticated, well-capitalized aviation programs is growing in importance. Bridger's always had an eye on this, and we've always had the most advanced solutions, and we continue to lead. We would not have been here had we not positioned for it in our early days. Next slide. A quick touch again, a little bit more on the structural demands we see. The intensity of fire season continues to grow, although, of course, there's going to be a peak of activity in the summer months. We no longer can only be ready for fire season. We have to have a considerable portion of our fleet ready year-round. And now there's customer funding and commitment to make sure that that happens. Some of the largest disasters are happening in the winter months when folks are unexpected or folks are unprepared and things are unexpected. So unfortunately, with those events, this is leading to the right changes for the country to have pre-positioned staffed aircraft readily deployable and positioned across the country when it matters. I think just this morning I read an article where already this year is the second warmest year in 132-year record. And although we've seen a relatively slow buildup in activity, we see these continued trends continue to combine and exacerbate our need to respond. This coupled with some of the news on Super El Nino weather, it seems that these patterns are building upon themselves. Next slide. We've worked very hard to ensure that the health of our revenue is strengthened over time with both, obviously, our reputation, our customer performance on contracts. We have a 100% success rate on our contract renewals, and this has led to a very strong mix of federal and state contracts and a solid competition for our existing fleet. That's important because it not only drives up utilization for the fleet that we have, it also has continued to open the door for on-contract growth as we add more aircraft. We put very concerted effort into the resiliency of our revenue. In the early days, we had planes almost entirely on call-when-needed contracts. I called it the field of dreams mentality, where we would build it when it was call when needed. So this meant we'd wait for the start of fire activity for a dispatch, and we're unsure when we'd be sent home. But now we have the backdrop of national fires grabbing headlines and really guaranteeing that work is in our hands for pre-positioned aircraft ready to deploy. And it's been driven by major agency changes, including agency consolidation, standards of cover, and so on, minimum response times. That's led into appropriations even in winter months that has helped us with that guaranteed revenue. Of the planes on contract today, we have 8 of our 9 surveillance planes on guaranteed work and 4 of our 6 scoopers. And by way of reference, in the early days, all of the scoopers were call when needed. And this year we now have 4 on a 160-day task order. Next slide. Within fire, we have 2 basic aviation services, the surveillance and suppression side of the business. Suppression is our scoopers, highly effective and scarce assets in high demand, the only purpose-built firefighting aircraft in the world, and we have the largest privately owned fleet in the world. They can mobilize nearly anywhere and scoop and drop water within 20 nautical miles of any fire. With about a mile of open water and about 6 inches deep of water, they can skim the surface of a lake and fill with 1,200-gallon tanks. Their ability to turn and return to the fire without stopping to refuel means they can drop water in a 4-hour period and can drop hundreds of thousands of gallons in a day. The scooper was engineered for firefighting. It was designed to be high performing and highly available. It doesn't have D checks like commercial aircraft. So we're able to stage our aircraft and make sure that maintenance is done in field, and we have that uptime. We can maximize utilization, which is really important as we continue to operate year round. The dynamics on the contract allow for increasing pass-through margin the more the aircraft work, since more work doesn't mean proportionally the same variable costs, which has been incredible for us as we continue to focus on increasing utilization. We have Bridger's core. We have that the economics of our fleet, the scoopers are the flagship with scarcity. The barriers to enter remain strong there, and we own the largest fleet, so we have a real corner on the market, in our opinion. The supply chain for the new 515 is constrained. It's called the 515. We believe it'll be later in the 2020s and 2030s before these first 20 orders are delivered to provinces and countries. So we have increasing demand for a scarce fleet out there. We benefit from this because there's about 95% plus compatibility with our current fleet with the 515, but we're looking for opportunities like the planes that we acquired in Spain to continue to grow our scooper fleet. The margins are very impressive there. The payback period is less than 5 years. Maintenance CapEx is, like I said, in the field and mostly associated with labor, so we're able to really take advantage of highly contributing assets. Next slide. One of the things we're most excited about, which I mentioned, is our integrated tie-in technology with our software platform, Ignis. This has a threefold proposition for us. It increases our demand with our aircraft utilization. People are specifically ordering us up for this software platform. It provides stickiness with our brand, and it's continuing to unlock a world of opportunity in wildfire. We're setting the standard for this. The industry's looking to adopt technology and looking to private industry to offer consolidated solutions, which has not quite existed to this point. We've seen our flight hours increase considerably because of this. We've received aviation orders, like I mentioned, that are specifically requested it. And we're seeing continued use of this even through the winter months, which is different than what we've seen in the past. Coupled with our real-time imagery of our aircraft, we have tools within this platform, both mobile and desktop, to invite volunteer firefighters to an incident, have without logins, have points, lines, polygons, evacuation routes, Blue Force tracking to allow us to make sure our firefighters in the field are safe, and even now predictive modeling to show rate of fire spread and what might happen next. Next slide. Just a quick highlight of this. The landscape in front of us is one in increasing demand at the federal and state level for all aerial firefighting. This is, something that we see even amongst our competitor landscape. None of us have, we believe, enough aircraft to answer the call for the demand that we see out there. But one other thing to highlight is that we consider all of the other operators out there fellow operators because we all have a different mission. We're all tools in the toolbox. So we operate alongside tankers, helicopters, drones in the same theater or fire stack or flight restricted area over the fire. There's a need for what we all do together over the country and year round. Some of our direct competitors only have a portion of their fleet, like the 4 scoopers that compete directly with our 6 in the US, although we believe with 48% unfilled task orders for the 10 combined in the US, there's more than enough work to go around. And then in terms of sensor aircraft, again, we're leading the edge there with what we're introducing on a regular basis in technology. And then last but not least, if we go to the next slide on financial performance, we've been very consistent and concerted in our effort to increase our fleet, increase our revenue, and manage our costs so that we have improving margins. This has been evident since inception and then most recently in the last 3 years. We've really also seen a very large advantage in economies of scale as we continue to grow our fleet and focus on expanding the programs that we have. I'm sorry, I lost my spot here. We've included we've been able to ensure that with our focus on scoopers and the portion of revenue that those add to our base, that we can continue to grow that, but we do see a very large potential in the sensor world as we can grow those aircraft, and the margins that they contribute is very attractive as well. And then as we continue to look at the opportunity in our enterprise value, we have already 3 analysts who have us in a consistent buy rating. We believe in that, and we believe there's more to unlock there, especially as we continue to add assets with our deferred draw facility and delever as they become immediately accretive to what's in front of us. And the opportunity, again, is one that we believe we can meet, but potentially there's a lot more upside there that we haven't even yet realized. So with that, I'll open it up for Q&A before I run out of time. I tried to rush through, but appreciate you hanging with me.
Really appreciate it. We do have several questions already. First one, wildfire activity appears to be becoming more severe and more frequent. How has the market evolved over the past several years, and why do you believe we're still in the early innings of a long-term structural growth opportunity?
Yep, great question. Yeah, early innings is a very good way to characterize it. We see, again, the convergence of tailwinds of what Mother Nature seems to be doing consistently, unfortunately grabbing headlines that are making change happen. But those things are now being memorialized in even just a mindset at the federal and state level of we need to act aggressively to manage wildfire. We've seen a lot of that materialize already in our change, like I mentioned, from call when needed contracts to guaranteed work year over year. And I will say that the reason I believe that's in early innings is because that's still against the backdrop of a lot of introduced appropriation fundings, consolidation of agencies, and standards of cover that are still being defined, meaning those changes are already taking place. I think once they're solidified and defined even more, it becomes a more resilient demand signal for us as we continue to see, again, fires increase year over year.
What is the company's long-term plan with its preferred equity and capital structure?
Yeah, also a great question. So I mentioned at the end of 2025, we executed on 3 strategic initiatives. Our sale leaseback of our campus. We paid down our hangars for approximately $49 million and used that to help refinance and our prior very restrictive municipal bonds. We put into place $331 million of financing package led by Bain, which included a $210 million term loan to refinance our debt that existed, as well as a $100 million deferred draw facility that allows us to grow. And we immediately put that into effect by acquiring 2 Spanish Scoopers, 2 King Airs, and bringing onto balance sheet our 2 PC-12s. We're continuing to focus on the growth of the business based on our trend, as well as even our outlook for 2026, so that we can be positioned for optimizing and taking advantage of the opportunity in front of us. And that includes adding aircraft and increasing our contributions there. And then, of course, focusing on our market visibility through our analyst coverage, telling the story that we believe is out there, that we're currently undervalued on the public markets based on some of the multiples that we see in our outlooks moving forward.
Bridger often talks about moving from simply fighting fires to managing the entire wildfire life cycle. Can you explain that evolution and where you believe the company ultimately fits within the broader wildfire ecosystem?
Yeah, also a great question. We see the entire wildfire management or even forest management as our social responsibility. So we believe we're well positioned with what we have in early detection and initial response and initial attack, we call it, with our scoopers. But outside of that, now with the industry realizing that the critical 48-hour window is when to respond, we see the opportunity to do what we do even more enhanced with our sensor capabilities, our software platform, and some of what we can do to help prevent, detect, suppress, and even respond to the threat of wildfire. It's all contained within one data ecosystem. We believe we have a special leg up in what we've built thus far. as well as sensor planes that can cover that entire life cycle and use data and intelligence to manage it appropriately. And then suppression assets are a very critical part of how quickly you respond and how quickly you interact on that fire threat. Bridger's looking at that in terms of the entire lens of growth, not just how many planes we can add to our existing contracts.
Technology has become a much larger part of the story, particularly with your sensor-enabled aircraft and the launch of Ignis. How should investors think about technology changing both your competitive positioning and the economics of the business over the next several years?
Yep. Okay. So I mentioned it earlier, but the way I look at the software component and technology component of our contracts is threefold. Near term, it's increasing the utilization of our current aircraft that we couple this with. Second, it is enhancing the stickiness of what Bridger can bring to the table. If we have data and intelligence, but we can't deliver it real time to the customer, it's not quite functional real time and within that 48-hour window. And then third and final, it unlocks a lot of ability to have data in one ecosystem that can be interacted on. Our mission is to protect and serve the general public, but also we focus on ground firefighters. Military-grade technologies existed out there for decades to let us know where ground firefighters are and how we can support them from the air. We're now delivering that in one platform where ground firefighters can join an incident and we can see where they are and they can see where aviation assets are. So we are very proud on what we're introducing there and how disruptive that is into the industry, because it's never been something that could be funded and there was never any focus or ability to accept it. So that's making a huge difference already.
Thank you, Sam, for an excellent presentation. For more information on Bridger Aerospace Group, reach us at 1-800-RedChip or write us at baer@redchip.com. It's 3 p.m. U.S. Eastern. We have yet another company to present for you today on RedChip's Vertical Economy Investor Conference. This one is Doroni Aerospace. Presenting today will be the CEO, Doron Merdinger. Doron, are you on yet?
Yes, I am. Let me share.
Yeah, please share your screen while I get some preliminaries out of the way. As always, folks, we solicit your questions. If you want to ask a question, please click the Q&A button at the bottom of your Zoom window and type your question into the text box. Before we begin, please allow me to read the Safe Harbor Statement. This segment may contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. All statements pertaining to future financial and/or operating results, along with other statements about the future expectations, beliefs, goals, plans, or prospects expressed by management, constitute forward-looking statements. Any statements that are not historical facts should also be considered forward-looking statements, and of course, forward-looking statements involve risks and uncertainties. Doron, if you are ready, please go right ahead.
Yes, I am. Can you see my screen?
Yes, I can.
Okay, thank you. Thank you, Craig. Thank you, everybody. So please review our disclaimer. I think, Craig, you mentioned it. Yeah, so for centuries, personal transportation has remained trapped in two dimensions. Meanwhile, three-dimensional transportation, aviation, has remained expensive, complex, and inaccessible to most people. People spend countless hours in traffic every year, while the skies above remain largely unused for personal transportation. We believe that this is one of the biggest opportunities of our generation. At Doroni, our mission is simple but transformative: to redefine personal mobility by changing how people experience movement, distance, time, and freedom. We believe mobility should become more open, immersive, emotional, and liberated from the limitations of traditional infrastructure. Our solution for personal travel is a personal eVTOL, which is essentially different than the air taxi we have all been hearing of. The H1X was designed from the ground up to take personal flight practical and approachable. Fly from home, no runway needed. It can take off and land vertically, carry 2 passengers plus cargo, and charge directly from home. easy to operate. Its intuitive controls and advanced assist systems make flying as easy as driving. We estimate about 25 hours of training needed. Personal freedom. So you are the pilot, fly where and when you want. There's no need to wait for air taxi or commercial flights. And it's built for daily life. Compact size, fits in a garage, charged like an EV, and integrates into everyday routine. So here are some of the specs. We are talking about a two-seater with a max speed of 120 miles per hour and a range of 100 miles. The H1X features 10 electric motors, 8 vertical motors integrated into four ducts, and 2 horizontal motors, each placed in an independent duct. In terms of safety, we're designing it in a way that the H1X will be able to land if there's a malfunction or one of the propellers or motors in each duct will not work properly. The other motors will increase their power automatically to compensate and stabilize the H1X. We also planned a ballistic parachute that will deploy if there's a force majeure, if all other redundancies fail. So what sets the H1X apart is its use of patented stationary ducted fans embedded in the wings. The ducted fans have 4 main advantages: enhancing safety for passengers and ground crew, and reducing the possibility of a bird strike or flying close to objects such as in an urban environment. Also minimizing noise pollution, which is crucial for urban and residential use. Our unique design dramatically reduces drag and enhances aerodynamic performance, resulting in up to 40% greater energy efficiency than an aircraft using exposed propellers. Lastly, it also looks better and ultimately design sells. The Ronnie is a lift and fly aircraft. It takes off like a drone with its vertical ducted fans, but it flies forward as an aircraft using its 2 rear thrusters using 6 wings. There's no tilting of the motors or other moving parts to reduce the point of failure. Our patented tandem wing configuration enhances lift and efficiency during forward flight, which significantly reduces the reliance on lift thrust from the ducted fans. By utilizing fixed wings and eliminating complex tilt mechanisms, we reduce maintenance costs and increase overall safety and stability. Safety is one of the core pillars of the H1X. The aircraft incorporates multiple layers of redundancy throughout the system. Our ducted fans architecture improves safety around people while also reducing noise. The aircraft includes a 360-degree situational awareness sensors, redundant system, and a ballistic parachute system designed for emergency scenarios. We believe the future of aviation must not only be exciting, it must also feel safe and actually be safe. One of the most exciting parts of the H1X experience is Sol AI, our intelligent cockpit platform. Sol AI is designed to act as a digital co-pilot, helping simplify the flying experience while improving situational awareness and safety. Over time, we believe intelligent flight systems will become one of the key enablers for mainstream personal aviation. Let's talk about the size of this opportunity. Morgan Stanley projects the global urban air mobility market will grow from $55 billion in 2030 to over $1 trillion by 2040. That's roughly 34% annual growth. And that's not our number. That's the base case for one of the most conservative names on Wall Street. Now look at how that trillion breaks down. Passenger mobility, that Morgan Stanley calls autos and shared mobility, is nearly half of it, about 46%, roughly $460 billion. And every competitor in that slice is chasing the same thing: an air taxi, a shared fleet, and an Uber of the sky. So Joby and Archer, they all need commercial certification, trained pilots, or full autonomy, and vertiport infrastructure that does not exist yet. The Ronnie is targeting the layer everyone else ignores, personal ownership. Just as the car market has both taxis and private-owned vehicle, the eVTOL market will also have both, basically. And history, personal ownership is the biggest prize. We get to market faster because we don't need commercial certification, we don't need vertiports, and we don't need autonomy. Our customers parks it in basically in their own garage. And this market does not stop at $1 trillion. Morgan Stanley named model puts our segment at $3.7 trillion globally by 2050. We're not fighting for a niche. We are taking the uncontested path into the largest passenger segment of a market measured in trillions. The broader eVTOL market is reaching a major inflection point. Companies like Joby are conducting highly visible public flights. The FAA is actively advancing programs and frameworks around next generation aviation. Florida, where we are is becoming one of the leading states supporting advanced air mobility infrastructure. And importantly for the Ronnie, the FAA Mosaic rules were announced in 2025, and the second batch is expected this year, which may help create a significantly more accessible pathway for personal aircraft operations in the near future. We believe the market conditions today are stronger than they've ever been before. So air taxi gets a lot of attention right now, and I want to explain why that's actually good news for us. It's not a competition. Regulatory path is cleared. Companies like Joby Archer are doing the heavy lifting here on the FAA certification frameworks, and we benefit from that groundwork rather than building it ourselves from scratch. It's infrastructure ready as air taxi networks build out of basically vertiports and changing hubs. That becomes infrastructure our H1X owners benefit from as well. And trust and normalization. Every high visible air taxi flight makes the public more comfortable with eVTOL technology in general, which lowers the barrier for us and when we bring the H1X to the market. Lastly, supply chain savings. As airlines place large orders for air taxi fleets, battery and motor costs come down for the whole sector, and we benefit from that scale without having to place those orders ourselves. And this is really the core of it, our blue ocean advantage. While everybody else is competing for the rideshare air taxi market, we're focused on personal ownership, a category almost nobody else is targeting. Air taxis build the road, and we basically are building the vehicle people actually get to own. It's worth looking at who else in building this in the space and where they fall short. There's EHang EH216. It's based in China. It has no ground mobility. The rotors are exposed, and it flies fully autonomously. So there is no personal ownership model. The cabin is also quite cramped. Aleph model A is based in California, and it takes the opposite approach. It is designed as a car first. That means limited flight performance, and the designs has to trade off between driving and flying. Then we have Air One out of Israel, also has ground mobility. It's exposed tilting blades raise the same safety concerns we see elsewhere in this space. Our ducted fan design and dedicated propulsion system directly address the gaps in all three of these approaches, which is exactly why we believe we have a real structural advantage here. This is our progress from day one and where we are headed. We founded the Ronnie with a bold vision, a personal flying car for the masses, and spent our early years building our core engineering team and our first two prototypes, proving proving out that the fundamental flight and safety concept are there. That works was recognized with a Space Florida Aerospace Innovation Award. From there, we moved into testing and validation. We built and flew first full-scale H1 demonstrator, more than 70 test flights, including manned flights, and secured our FAA Special Airworthiness Certificate along the way. By 24 and 25, we had unveiled the H1X design, launched the Sol AI concept, and built a realistic flight simulator for investors and pilot training. We continued raising money through crowdfunding in that window and grew both our pre-order book and our IP portfolio. Now, through 26 to 28, we are focused on the final testing and production preparation. That means assembling and flying full functional H1X prototype, finalizing our manufacturing partnerships and supply chain, and working towards the FAA Light Sport aircraft certification. Our goal is 2,000 plus orders and an expanded team and facilities to support it. In March this year, we hosted our Soul of the Sky unveiling event, where we publicly revealed the full-scale H1X aircraft. Guests experienced the aircraft up close and interacted with our Sol AI. They also went through the simulator. This event represented a major milestone for the Roni and marked an important transition from vision into tangible reality. So why now is the right time for the Roni? Because multiple forces are converging simultaneously. Technology is becoming viable. The technologies needed to make personal flight possible are no longer theoretical. Electric propulsion, AI, batteries, sensors, lightweight materials, and advanced flight systems are already part of our daily lives and have proven themselves across multiple industries. What's happening now is the convergence of all these into one unified platform. And that's exactly why we believe the timing is so important. Also, public awareness is increasing. Infrastructure development is accelerating, and regulators are beginning to create clearer frameworks for this new category of aviation. This is not a sudden revolution. It's a long-awaited evolution of transportation. This is where the traction we have talked about turns into a financial model. As of Q3 2026, we have around 600 pre-orders, with over 240 of those backed by actual deposits with minimal marketing spent. That represents about $240 million in potential future revenue. On funding side, we have raised over $35 million across 8 crowdfunding campaigns from more than 12,000 investors. That's a strong signal of grassroots demand alongside the pre-orders pipeline. The H1X is priced to start at $400,000 at mass production, and we are targeting first commercial deliveries in 2028. I will just note, as with any forward-looking numbers, these are projections based on our current assumptions, no guarantees, and I would point to you our offering Reg A material for the full risk factors. So this is a team of seasoned engineers, people who have spent their careers in aerospace, electrical systems, and software, and who bring real depth to every part of this aircraft. Rami Arbeli as our COO, Yoram Bibring as CFO, Tzviki Kinsler as Chief Engineer, and others. What ties this group together isn't just the resumes. It's that every one of us is genuinely passionate about this problem, about actually building personal flight, not just talking about it. That combination, real experience plus real conviction, is what turns a dream like this into something you can certify, manufacture, and put in someone's driveway. So thank you for this opportunity. If you like to join us, you can invest in our Reg A offering directly from our website, www.doroni.io, and looking forward for questions.
Thank you very much for that. Doroni appears to be pursuing a very different version that typical eVTOL developers focused on, commercial air taxis. Why did you choose to focus on personal ownership instead? Sorry if that doesn't make total sense.
No, it makes sense.
Okay.
So yeah, really right from the start, we understood that the biggest market is personal ownership. I think most of the companies started like that, but what happened is I think they saw potential of growth in their the air taxi. So that's why many of them changed. We maintained our course that so far it's proved to be the correct one. We see that the biggest market in the world is personal. Even ride sharing today that you would see Uber and other companies are essentially driving personal car. So at the end of the day, people prefer to have personal, and this is the biggest market. Also, the certification, when you are certifying a personal vehicle, the complexities in terms of the FAA and aerospace industry in general, it's less convoluted because it requires that's less risk, like if you compare it to an air taxi. So both the aircraft certifies with less complexity, and also the pilots. We certify as a sports pilot license, which today it's already in existence. About for two passenger, it's about 20 hours, 25 minimum hours of flight time. So it's attainable, and we expect this in our vehicle because it reduces complexities and points of failure. So we expect this should be around that what needed.
One of the biggest barriers to personal aviation has always been complexity. How much of your engineering effort has been focused on making the H1X intuitive enough for people who have never flown before?
Yeah, it's a great question. So I can only get some inspiration from companies like Apple and Tesla. The hardest thing is to simplify something complex, and I think we were able to catch it and trim it down. We from day one understood that we are basically democratizing flights. We're going to bring more new pilots, sports pilots that haven't been flying before, and they're even because of the complexities. So to make something that complex simple. We spend a lot of time engineering that philosophy. And I think today, because of systems like autopilots, when you see any kid flying with a drone, and unfortunately, the Ukraine-Russian war, the drones are winning the war, right? So it's because you reduce complexity. These are sustainable, more efficient systems. And we didn't want to have moving parts like you would see in an Osprey on other air taxis. We wanted to, in our case, it's called lift and cruise or lift and fly, where you take off like a drone and then you fly forward like an aircraft using rear thrusters. And then you have the Sol AI and other systems, simple joystick and then the tablet, to basically help you control the aircraft. The aircraft will not let you do errors that regular helicopters or a helicopter or an aircraft can do. So it's basically it creates some sort of safety smart systems around you in order to disable those options.
The FAA's evolving Mosaic framework appears to be an important catalyst for the industry. How does that regulatory evolution potentially expand the addressable market for personal eVTOL aircraft?
Yeah, so first of all, you have to understand that the US is really a little bit behind of China. China has been leading that space of eVTOL, and we were playing catch up. Fortunately enough, the FAA understood that, and basically expanded the laws for LSA light sport aircraft. So it's a two-seater. Today you would fly a two-seater combustion engine aircraft, which you take off on a runway and land on a runway. And now they expanded it to incorporate power lifters. We are a power lifter company, so it's limited only to two-seater. And groups like us were sitting under ASTM groups to basically advise the FAA what the capabilities are of what can you expect capabilities are. So the FAA is really working together with companies like us and more. And they released the first batch of rules, long-awaited rules, last year. And the second batch, hopefully the last one should be this July, and to the end of the year, it should be done. And it makes life easier because ultimately we expect this to be a safer machine than most aircrafts out there for personal use. Again, because of the technologies, you don't have combustion engine and degradations of systems, heat like that. I mean, there are other heat sources, but no liquids that incorporate with electrics. I mean, really, aviation today is a wonder how, for years, this 100-year-old technology is still in existence, and it's time for a change, just like electric vehicles changed today.
One interesting aspect of the H-1X is that it uses dedicated vertical and horizontal propulsion rather than relying on tilting propellers. What advantages does that architecture provide in terms of stability, efficiency, and safety?
Right, great question. So I have a model. I hope you guys can see it here. So if you fly like a regular drone, the drone basically increased the RPM in those propellers, and basically, if you want to fly forward, it will increase the RPM on the rear thrusters, and they have this tilt. So the faster it goes, the more tilt. So this is not efficient in terms of battery consumption, also in terms of the ergonomics for the pilots. In our case, you take off like a drone, and then you have the rear thrusters to engage. We avoided changing or tilting mechanism for the motors like you would see in the Osprey, the V22, which requires a lot of maintenance, and definitely like the air taxi that you saw. And so you take off like a drone, and then you essentially fly forward using those thrusters, less moving parts, less points of failure, more safety, and less complexity for the pilot as well.
You've already secured more than 600 pre-orders with relatively limited marketing. What have you learned from those early customers about how they envision using the aircraft?
Again, a great question. For us, let's say that because this product, this vision, needs a public acceptance, and also it's a shift. It's like introducing the first iPhone that created so many things at the same place at the same time. So when we start crowdfunding, people were engaging us. So not only investing, but they were giving us suggestions on what to do, what not to do. And by that, we're able to tailor and improve our offering. So some of them were hard questions, some of them were easier, but in fact, it improved the vehicle there. We have a surgeon here in Florida, lives in an airport community. He wants to fly to work across the highway. So just land on the hospital. We have farmers wants to check their crops in California. We have even requests for maintenance energy systems that you cannot approach with them, like a wind turbine in the middle of the ocean. You cannot approach with a helicopter because of the fume that the sparks from the station can basically explode. So there's multiple things. Mostly the orders, what's so wonderful about it, from personal people who maybe have different cars already thinking about it, helicopters, owners that see this one because this is a quieter, and we believe it's going to be safer as well, and we're working on that. And so it's a whole new world that we are approaching here.
Looking beyond the initial consumer market, you've also referenced potential applications in emergency response, public safety, and defense. How naturally do those opportunities fit into the platform you've already developed?
Right. So we already take into consideration that this being converted, for example, to add a stretcher inside for 7 feet, so you can lift a person, a tracker who who went and got injured, so you can go there and sit and lift it off. You can also rescue people or soldiers wounded inside an enemy territory. This is a low flyer. You can set it you'll be able to set it by remote control as well. And the noise footprint is pretty low. Ultimately, if you send one on remote control and you lose it, you lose the $400,000. You don't lose a $15 million helicopter. And we saw here in the Broward County, $15 million helicopter crashed, unfortunately. I think it was Airbus, and at that price you can buy 40 of Doroni. You can rescue people before and after a hurricane, send a swarm of them. Police department already, Miami Beach Police Department came here as well. So that's interesting.
And final question for you. Looking several years ahead, do you believe investors will view Doroni primarily as an aerospace company or as the company that pioneered a new category of personal transportation? You've got about 30 seconds. Thank you.
I think it's the second one. I think it's hard for us. We are an aerospace company, but it's hard for us to call it an aircraft. It's really somewhere in between a car and an aircraft.
Well, that was a very succinct answer. Thank you very much, Doron.
Thank you so much.
And that is going to be all today for Doroni Aerospace. And if you'd like to learn more, reach us at 1-800-RedChip or email us at doroniaerospace@redchip.com. Thank you very much, Doron.
Thank you so much. Thank you. Thank you, Craig. Bye-bye.
Our next and final company on today's RedChip Vertical Economy Investor Conference is Noble Africa. Presenting today will be Nick Mitchell, the COO. Nick, are you there?
Yes, I am. Can you hear me?
Loud and clear. While you're putting your company, well, you've already got your company presentation there. Let me just get some preliminaries out of the way before you get started. I'll do the safe harbor statement for everyone. This segment may contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. All statements pertaining to future financial and/or operating results, along with other statements about the future expectations, beliefs, goals, plans, or prospects expressed by management, constitute forward-looking statements. Any statements that are not historical fact should also be considered forward-looking statements, and of course, forward-looking statements involve risks and uncertainties. Now, Nick, are you ready to go?
I am. Thank you very much.
Please go right ahead.
Fantastic. So thank you very much for the opportunity. Looking forward to taking you through our company presentation. As you described it, the company that we're looking to address today is Noble Africa. What you see on the screen refers to Renogen. As part of the process that we're following, we'll be renaming the company and rebranding the company. But this is our current presentation that focuses on the opportunity and the Virginia gas project as we see it today. All right, so just here's a couple of disclaimers and forward-looking statements. We'll obviously provide that, and the viewers are welcome to go through that in their own time. And our lawyers have kept us busy as well with a few risk factors that need to be noted. Before we kick off, just touching on leadership. So Paul Mann, who's essentially the founder of ASP Isotopes, our parent company, has joined the team following the acquisition of Renogen by ASP Isotopes. He's taken over as CEO. I join him as the COO, and I'm one of the original founders of Renogen. Having acquired the Virginia gas project in private capacity along with a few other partners back in 2013. My background before that is focused on energy and infrastructure project development across the African continent. and mainly in Francophone Africa. I happen to chair the Onshore Petroleum Association as well for all the onshore petroleum right holders in South Africa. And I'm a member of the Upstream Training Trust, which is a trust set up by the Petroleum Agency, which is our regulating authority. And we essentially develop and deliver bursary and education opportunities to further education in the petroleum sector for the benefit of South African resources. Looking at the corporate overview of what we are and who we are as a business, we're essentially have South Africa's first and only onshore petroleum production right in the country right now. Our rights span about 187,000 hectares, or close on about 480,000 acres. We have an operational phase one project producing both LNG and liquid helium. And we have a expansion project which we're looking to take through its pre-development phase for the rest of this year, which will expand our offering into quite a scaled phase two production facility. At nameplate capacity, would target about 685 tons of LNG per day and about 4.2 tons of helium per day. The asset has been declared strategic to two governments. The first being the United States government. We received essentially funding from the United States Development Finance Corporation, or DFC, to back our phase one project. And we have received further support by the United States government to support our expansion plans. And I'll talk a little bit about that later in the slide deck. And then in December of 2023, we were declared strategic to the South African government for driving some of the, call it strategic pillars that are shaping our economy over the next decade. And, it's not often that you get to work on a project that is strategic to one government, but to have it declared strategic by two does represent the uniqueness of the project and the opportunity that we're talking about. From a reserve perspective, our reserves are sitting at approximately 3% helium concentration across our exploration and production drilling to date. And, when we compare this to other scaled projects within the helium space, we're typically looking at average concentrations of around 0.04%. So when we look at it as a factor, it's quite something and quite special. And what that allows us to do is operate typically on the, call it lower side of the cost curve. And, when you're looking at any resource or extractive industry, that's exactly where you want to be positioned, on the lower quartile of that cost curve. And that means you can support yourself during the cycles, both on the up and the downturn in those cycles as they move through. If we look at our business and what we're looking to do, essentially we're moving into a scenario now where we will be separately listing the entity. If we look at why it makes sense for the business right now, we've got a massive helium crisis. It's the fifth one taking place in the last 2 decades. And essentially that means that there's a significant opportunity now as a result of the global interruption that's impacted the supply chains. Suppliers or customers are now looking to diversify their risk from geopolitically exposed sources of helium that have typically supplied the world. And as a result of these geopolitical tensions that we're facing right now, we've seen many interruptions to that supply chain. The challenge with helium is it's very critical in your production operation, whether it's in your manufacturing facility. If you're producing microchips, you can't do without it. And as a result, supply interruptions like that are quite catastrophic. Helium prices now are moving upwards and beyond $500 per MCF, and have been growing at a significant rate, and are continuously demonstrating that for the foreseeable future. So we believe that the timing is right to take advantage, and we look forward to having a pure play helium listed business on the NASDAQ exchange in due course. So let's just take a look at the helium market and what the opportunity really does present. So helium, for those that don't know, it's got a few unique properties. It's chemically inert, but also electrically inert. It's non-toxic. It has a very low density and essentially does not bind with any other molecules. Has a very low boiling point at minus 268.9 degrees. And essentially at that sort of temperature, it's the only substance on the periodic table that is liquid at that temperature. At that temperature as well, it begins to show very unique characteristics, becomes superfluid, and essentially gravity has very little impact on the product at that stage. The element has been declared critical to most governments, and is often very vital in very specific applications, specifically technology, space, and medical. So if we look at the bar chart on the slide here, we move from the left to the right. We look at MRIs being in the medical field. The large-scale Tesla coils and magnets achieve their superconductivity when that titanium alloy is cooled down, and needs to be cooled down to about minus 255 degrees. And liquid helium is obviously the only material or element that can be cooled down below that temperature. We then see the lifting market, and essentially this would be for balloons or the blimps that are taking place. We then move across into laboratory sciences, and then this is where it gets really interesting in the semiconductor space. So microchips and memory chips can't be produced without helium. And given that first point that I mentioned, where it's chemically and electrically inert, it's used in two applications within the production. So firstly, to create the sterile environment for these semiconductors to be manufactured. And then the second is the supercooling of the lasers that are doing the etching on the specific chips or wafers that are taking place within that fabrication operation. We then move into fiber optics, and the helium is used again as a supercoolant in order to cool down the glass before it begins to be spindled into the reels, before it's packed and packaged for market use. And then rocketry, the other interesting one. And the rocketry is essentially representing the space exploration market here. So if we look at the requirements for helium in space exploration, it's often used as the fuel propellant. And if we look at Falcon 9, part of the SpaceX program, every time that rocket launches, we're using approximately 11.7 tons of helium. This is out of a global demand of 84 tons per day. During the month of May, we had some record launches, and it was almost a launch every day. So we can only imagine the quantity of helium that will be required as these programs become more commercial in due course. If we look at the forecasted growth of helium over the next few years, it's forecasted to grow at between 5 and 6%. But this, could be underrepresented, because what it isn't necessarily showing is the prevalence of helium requirements in AI-driven data centers. And the growth of these AI-driven data centers isn't necessarily forecasted within these statistics. We anticipate that to take those updates to come through in the next 6 to 12 months. And I believe that what we'll find is that the more critical applications are going to start to play a bigger role within the demand forecast, and we'll start to see applications like welding, lifting, or the balloon markets starting to curtail their usage simply because they won't be able to compete at the price points that will be driven by this market in due course. All right. So if we look at the value of the helium market right now, we look at size. It's determined at about 6.5 BCF per year. It's got a rough market value of approximately 3 billion, and that's based on the upstream side of the business. If we look at the end user market and we look at that value, it's probably 3 to 4 times larger. And supply concentration is really driven between the US and Qatar, with Russia as well being quite a large supplier. And we've got a lot of changes that are taking place now as a result of the geopolitical tensions that I've mentioned previously, and we'll start to get into that shortly. If we look at a supply and demand balance, you'll see here it's fairly tightly balanced in terms of what's taking place in the market. But if we consider the markets that don't necessarily have a source, the biggest exposure here is probably to the Asian markets, and this is what we need to be aware of. The US is fairly well balanced, but over the next decade, it's anticipated that the US producing helium fields will go on a decline as a result of the fact that they've been producing for several decades already, and we'll start to see those forecasts come through in the numbers as those fields reach the end of life. Talking about the helium supply crises that we've seen in the past, you'll see here over the last 2 decades, we've had already 4 significant crises, and we've now entered the 5th. And there's no doubt that it is a 5th. It's not only as a result of the Middle East crisis, but we've seen several attacks on the Russian facilities. And then the Russian authorities have also indicated that they've imposed export controls to Russian helium, and that will limit the amount of helium that's been typically moving into the market through China and then re-exported to other locations over the last 24 months. So these call it key factors are going to place a significant impediment on helium supply for a prolonged period. If we look at what's taken place in Iran, we did see the strikes hit Qatar. It's hit the Ras Laffan LNG complex. One of the trains has been impacted quite severely there. And then we've seen a further indication from media that there was an explosion at a separate facility that does feed one of the Ras Laffan helium trains as well. So we do anticipate prolonged outages while the insurance investigations take place, assessments, claims, etc., etc. And then it's once the damage has been assessed, it's looking at where are the long lead items potentially placed. If it's anything like aluminium or brazed aluminium heat fin exchanges, we're looking at 18 to 24 months. If it's large compressors, we're looking at probably somewhere between 12 and 15 months. And that's just for the equipment to be manufactured, needs to be then obviously shipped and installed and then commissioned. So in a cryogenic petrochemical facility like this, impacts like this can be quite catastrophic, and they do tend to take a long time to remedy. And we do anticipate, as a result, given the tightly matched supply and demand balance within the helium segment, that these constraints will impact the market for a while. The impact on pricing has already started to filter through, and we have already started to see contracts being executed at above $600 per MCF. So we anticipate that holding out for at least the foreseeable future. And as key markets or as key end users begin to look at diversifying their supply risk, we anticipate that move and that trajectory on pricing to also follow as these end users start to get to grips with what's taking place here. So what makes our project unique, and why is it different to most other helium projects worldwide? So to understand this, we've got to take a look at what's caused and where our source of helium is coming from. So it's not often that a company has a reason to look back 2 billion years ago, but fortunately, the source of our helium, we have to do that. It's as a result of a very large asteroidal strike, one of the largest to have ever hit the planet. It created a World Heritage Site called the Vredefort Asteroid or Dome Complex. The asteroid was the largest to have ever hit the Earth, as I indicated. And if we look at the map here on the right-hand side of the image, that pink epicenter is essentially where the impact zone and site was. The light-colored sandy area that permeates out from the pink epicenter is essentially the asteroid crater that was created, approximately 170 kilometers in diameter. And if we look at the center of that or the core of that asteroid, it was made up of uranium and thorium. So over time, that undergoes radioactive decay, and helium is the byproduct of that decay. So essentially, the bright red image on the bottom left of that map is where our production right is located, and that you'll see is actually at the rim of the crater. So if we think of the crater as a fruit bowl, and the rim of that crater being the shallowest point in order to reach call it the body of the asteroid, it means that our drilling is essentially quite shallow. So we can drill anywhere between 350 meters and call it 1.5 kilometers deep. We intersect typical faults, fractures, sills and dikes, and we create the preferential pathway for helium to find its way to surface. The helium undergoes as it migrates to surface, it goes through a geological play called the Witwatersrand Basin. This is typically well known in South Africa for the gold producing lithological horizon for gold. And as a result, we also happen to find our methane being generated in this area. So what happens is the helium then commingles with the methane. We drill down into that Witwatersrand structure. We tap into the faults and fissures, and we create that preferential pathway for the gas to migrate to surface. What we've recently discovered and announced in the first quarter of this year is that we've discovered quite a significant sandstone body that is charged. And essentially what we mean by that is that the helium commingled with the methane over time has essentially migrated into the sandstone. And we can think of the sandstone as essentially a sponge, where the gas has been absorbed into that sandstone. And what happens now is over time that charges up, it becomes pressurized. And as we drill into the sandstone, which is quite shallow, as you can see, between 300 meters deep and probably around 450 at the deepest, we can tap into that body and we release high volume and pressurized volumes of gas charged with obviously the helium and methane. This is where it becomes interesting. And, if we look at the image that's here on the screen, we've got the black outline is obviously the entire production right. That spans 187,000 hectares of call it mineral tenure that we have the ability to fully explore and exploit. The bright yellow polygon in the center represents approximately 15% of our field. And why this is important is that's where our proven reserve is based. Right now, sitting at about 400 billion cubic feet at a 2P level. And that means that we've got 85% of the acreage environment still left to fully explore. So if we consider that we've got much earlier stage neighbors to the north of us, northeast of us, and east of us, they've all drilled to a lesser degree, but they have intersected methane and helium-rich gas. And that leads us to believe that, while we've been focused on the center of our acreage, we're now very confident that between the center and the outlying perimeter, we'll have, a continuing success of natural gas discoveries and reservoir expansion opportunities as we continue that exploration in due course. Why this is important is if we consider our proven reserves that are sitting here in this table, the United States government, through the Federal Reserve, had set up a strategic helium reserve called the Bureau of Land Management, sitting under the Bureau of Land Management, based in Amarillo. That reserve at its height was set up at essentially sized at about 6 BCF. What we're seeing here in our 1P reserve is that our helium reserves are already larger than that of the BLM's strategic reserve. And if we look at our 2P number, quite significantly, outpacing the size of that strategic reserve. The strategic reserve has been the supplier of helium as a last resort to the market for several decades. And we believe that the Virginia Gas Project can essentially play that role for the helium market and stabilize supply during times of crises. And that's the aim and the intention of how we plan to develop the field over time. So if we look at our project right now, and what you see on the screen here is actually an image of our facility. This is our phase 1 project. And, if we consider what the business model is and what the strategy is, we're an integrated natural gas player. We drill, we beneficiate, we extract the gas. So we've got wellheads. We've then got a gas gathering pipeline and extraction system. We deliver that pipe or that gas through the pipeline to our processing facility. At the processing facility, we'll produce both LNG and liquid helium. Our liquid helium is produced at a level of purity of about 5 nines purity. And in phase 1, we deliver approximately 70 MCF per day and approximately 2,500 gigajoules per day. If you think in MMBTUs, approximately 1 gigajoule is a MMBTU. So we then move into our phase 2 expansion. It's a much larger project. It will scale up 13 times in terms of production output. So we'll be producing approximately 900 MCF per day and approximately 34,400 gigajoules per day or MMBTUs per day. If you think in tons, it's 685 tons of LNG per day or 4.2 tons of helium per day. And just to put that into context, it would be almost 1 ISO per operating day on the plant. So we aim to produce about 330 ISOs per annum. That represents approximately 5% of the global demand. From the LNG side of our business, we've got a significant energy crisis in South Africa. So we have an electricity crisis and a natural gas crisis. So we aim to supply our natural gas or LNG to the domestic market. It will go into the form of gas to power. It will go into the industrial market as a fuel source to fabrication or manufacture processes. It will then also go into the transport industry, where it will be used as either a substitute to diesel or as a dedicated fuel in dedicated natural gas trucks. And then again, we have the helium, which will be sold both to industrial gas users as well as to the direct end users. Again, this just touches on the outline of the facility, but it does talk about funding. So in our phase 1 project, we were financed by the United States government for about $40 million. As well as the IDC, which is the South African Industrial Development Corporation, with a RAND facility in that scenario. And then the United States government has come back and said that they'll support a further expansion of phase 2 with $500 million facility, and Standard Bank will match them with a $250 million facility. The phase 1 project will essentially be completed later this year, and we aim to develop the phase 2 project over a 42-month timeline. So we anticipate going live with production from phase 2 in 2030, 2031. If we consider the domestic market for natural gas and where the opportunity is, right now, the South African natural gas market is supplied by a pipeline of natural gas into Johannesburg. It's approximately 185 petajoules per annum of energy. Our phase 2 only produces 12 petajoules per annum. So you can see that we're significantly oversubscribed from that perspective. But if we look at the government's ambitions to drive gas to power, the forecast by 2032 is that we require as a country 870 petajoules per annum. So there's no silver bullet in solving that energy challenge. What it does mean for the country is that we've got to look at multiple sources. So you need domestic onshore natural gas to come online. You need domestic offshore natural gas to come online, and you need imported LNG to arrive in the country. Unfortunately for the country, some of these decisions have been left too late, and the most likely scenario is that Renergen's phase 2 project comes online before the other opportunities get to turn on. But we can be part of the solution. We won't solve it. And as I indicated, no silver bullet. Craig, how am I doing for time?
Well, Nick, we love the presentation. We are past the 4 o'clock U.S. Eastern hour. Maybe we should take one question and then wrap it up from there. We do have a webinar with Noble Africa coming up on Tuesday of next week. So we invite everyone who is on today's webinar to please go to redchip.com/events. redchip.com/events to sign up for a Noble Africa webinar, and that will only be for Noble Africa next week. So maybe we should wrap up here with one question, Nick, and it's the one we've been hearing a lot here at RedChip. Tell us again, why helium, and what is the supply security issue that has become so prominent? Just one more time, reiterate that for us, please.
Yeah, perfect. So, if we look at the United States, for instance, we've got the CHIPS Act. The CHIPS Act is about diversifying the manufacture of microchips or semiconductors outside of Taiwan into a scenario where it can be produced either in Europe or in the United States. The CHIPS Act specifically looking at the United States. Helium is a critical commodity in the manufacture of these chips. And if we think about the fact that you can't manufacture these chips without the prevalence of helium being available, the loss to the semiconductor manufacturers simply, in one day's production outstrips the price of what this helium molecule is priced at. It's a case that you simply cannot produce them without helium being available in a sustainable and reliable fashion. Again, if you look at Department of Defense, NASA forms part of that department, and helium is critical for any of the space exploration initiatives that are being driven. Obviously, there's companies like SpaceX and Blue Origin that form part of those programs, and helium is critical in everything that these companies are looking to drive. So it's about customers needing to know that they will not be impacted in a critical commodity in a very tight supply chain. That is the pressing issue right now. Helium is largely produced in areas like Algeria, Qatar, Russia, and all of these scenarios are right now involved in challenging circumstances. And as a result, there's a significant amount of pressure on the executives of these customers that rely on helium within their manufacturing value chain to diversify risk and ensure that they protect their interests for their shareholders and can continue to operate in times of challenge. And I think that's exactly why end users are now approaching sources that produce helium directly and looking to cut out and move beyond the typical supply chain model that has been providing this molecule to the market over the last few decades.
Thank you very much for that answer, Nick. That again is Noble Africa, and RedChip will be holding a standalone webinar for Noble Africa only. That's next Tuesday at 4:15 p.m. U.S. Eastern. Go to redchip.com/events to sign up for that and for all RedChip webinars. That does it for today's Vertical Economy Virtual Investor Conference. Thank you to all our presenters, and most of all, thank you to all of our many participants. Good night.